Okay, good morning everyone.
Good morning, sir.
So we completed with the last yesterday few topics, and today we are going to discuss some more topics, and I wanted to start with time of supply and place of supply today. So let's quickly complete that and then proceed to value of supply. So first, invoice and time of supply. These are two separate areas actually, but that is in your ICS study material. These are two separate chapters, but these two are actually interconnected. So these two should be studied together, because the time of supply for a transaction depends upon the due date of invoice. Due to that reason, first of all, what is the purpose of time of supply? We need to know. The time of supply is to determine three things. So what are they? To determine the due date of payment of GST. So when I need to pay tax depends upon the time of supply. You can see that in page number 31. Okay, so time of supply has got three objectives. Objective number one, to determine due date. To determine due date of payment of GST. Due date of payment of GST, we need time of supply. And the next one is to determine the exchange rate, because whenever the transaction is denominated in foreign currency, that needs to be converted into Indian rupees. To convert into Indian rupees, so we need to know one exchange rate. Exchange rate prevailing on which date? So for that, again, time of supply should be taken. On the time of supply, whatever is the exchange rate, that will be taken. So therefore, what are the objectives of time of supply? To determine the due date of GST, and to determine the exchange rate, and to determine the rate of GST. Because on the date of invoice there will be one rate, on the date of receiving money there could be one rate. Like the different dates, different rates could be there. So we need to take as to which rate should be taken. So for that, time of supply is relevant. So time of supply has these three objectives. Next, so time of supply for a transaction depends upon the due date of invoice. Time of supply is required to determine the due date of GST. For example, if a transaction time of supply falls in the month of March, we need to pay GST for the transaction by 20th of April. If it falls in May, we need to pay by 20th of June, like that. Okay, so and this time of supply for a transaction depends upon the due date of invoice. That due date of invoice is given under section 31, and the time of supply in case of goods is given under section 12, and services is given under section 13. And there is a change in rate. Whenever there is a change in rate, how to determine the time of supply is given under section 14. So therefore, four sections we are going to cover in this segment. So section 31, due date of invoice, I am starting with first. So here, due date of invoice, total 6 provisions are there. That is, in case of goods we have 3 provisions, in case of services we have 3 provisions. So 147 for goods, 31 subsection 1, subsection 4, subsection 7 is for goods, subsection 2, subsection 5 and subsection 6 is in case of services. Now in case of subsection 4 and 7, that is goods, we are discussing 147. So 4 talks about continuous supply of goods, and 7 talks about sale on approval or on return basis. If it is neither continuous supply of goods nor sale on approval or on return basis, then it will be coming under normal cases. So what is this continuous supply of goods? There will be successive supply of goods for which the payments are settled on a periodical basis. A restaurant will be making purchase from a provision store next to that restaurant on a daily basis, whereas the payments will be settled on a weekly basis or fortnightly basis or a monthly basis. That is known as continuous supply of goods. Whereas in case of sale on approval or on return basis, first the goods will be delivered to the person, and if that person accept, the sale is concluded. If the person is not accepting, the sale is not concluded. So that is known as sale on approval or on return basis. So in case of continuous supply of goods, we need to take date on which account statement is issued, as the case may be, the payments are received. For example, I entered into contract with you to supply the goods, and the payments will be settled on a quarterly basis. So first month, second month, third month, ad hoc I will be receiving some money. For the 3 months, whatever is the differential amount, that I will be settling on a quarterly basis. So now say for example 2 lakhs you need to pay me every month. So 2 lakhs, 2 lakhs, 2 lakhs I am receiving in April, May, June month. And for April, May, June, whatever the 2 lakhs, 2 lakhs and 2 lakhs receive, the due date of invoice will be the date on which the 2 lakhs is received, as and when the payments are received. Whereas quarterly I will see what is the total amount. Let's say the total amount is 6,56,000. 6,56,000 is the total amount for the quarter. Already 2 lakhs, 2 lakhs, 2 lakhs I received. That is 6 lakhs I received. With the differential amount 56,000. How will I communicate that 56,000 to you? I will give you an account statement. I will be telling this much is the transaction, this much is the value, total 6,56,000 minus already you paid me 6 lakhs. So therefore 56,000 you need to give it to me. So that 56,000 I will give an account statement. That account statement date. So whatever payment that is receivable based on account statement, the account statement date should be taken. Suppose if the payment is receivable irrespective of the account statement, then the payment received date should be taken. Suppose for example the third month 2 lakhs along with the 56,000 is given in the account statement. 2,56,000 is given in the account statement. Then in that case, so we need to take for the 2,56,000 the account statement date only, because whatever amount that is receivable based on account statement date should be taken as the due date of invoice. Whereas when the payment is receivable irrespective of giving account statement, it means ad hoc some amount will be receivable like advance. So for that, as and when the payments are received, so at that time we need to give the invoice. Is it clear or not? So that is the due date of invoice in case of continuous supply of goods. Then sale on approval or on return basis. Sale on approval or on return basis is like, first I will give you the possession of the goods, and if you like it you can keep it, otherwise you can return those goods. Okay, so therefore here when you will return those goods I don't know, when you will accept I don't know. Therefore there is a 6 months time that is added here. So within 6 months if the buyer is not accepting, it is deemed that the sale has taken place on expiry of 6 months. So therefore 6 months from the date of removal or date of acceptance by the buyer, that is the date of supply. Okay, date of supply here means date of acceptance by the buyer, or 6 months from the date of removal, whichever is earlier will be taken as the due date of invoice in case of continuous supply of goods. Suppose for example 6 months is over, I raised an invoice to you deeming it as supply. You did not agree, you did not accept, but even then this point says that 6 months from the date of removal the goods are deemed to have been sold and I need to raise the invoice to you. I raise the invoice to you. Thereafter you are returning me the goods. So what should I do? I already raised the invoice now. Now I need to cancel this transaction. For that I will be giving you one note. What is that note? Credit note. Credit note I will be giving to cancel this invoice. Is it clear or not? So that is after 6 months when you are returning the goods. Upon expiry of 6 months I would have given invoice. So whenever you are returning me the goods, I will be giving you a credit note to that extent. Then so that is with respect to sale on approval or on return basis. So first whenever you see goods, so you check whether it is continuous supply of goods or sale on approval or on return basis. If it is continuous supply, so a payment date or account statement date as the case may be, not whichever is earlier, payment date or account statement date as the case may be. And in case of sale on approval or on return basis, 6 months from the date of removal or date of acceptance by the buyer, that is date of supply, whichever is earlier. Whereas in other cases it will be, normal cases it will be supply involving movement of goods or supply does not involve movement of goods. If supply involve movement of goods, then at the time of removal. Supply involving movement of goods means under the contract of supply, the supplier is having an obligation to move the goods from one location to another location. Whenever you place an order from Flipkart or Amazon, the sale is concluded only when you receive the product at your place. So which means that under the contract of supply, goods are traveling from one place to another place, that is supply involving movement of goods. Suppose if supply does not involve movement of goods at the time of delivery, okay, so at the time of delivery will be taken as the due date of invoice. For example, you go to a supermarket, make purchase of the goods and you carry it to your home. Now in this case supply does not involve movement of goods. At the time of delivery they will give invoice, correct? So whenever they hand over the goods to you, they will hand over the bag to you. At the time they will give you the invoice. So their supply does not involve movement of goods, but we are taking the goods to our home, that is not under supply. Supply is over, so thereafter movement of goods is irrelevant. Under the contract of supply, goods should be moving from one place to another place. Then at the time of removal the invoice to be given. So in that Flipkart example or Amazon example, whenever you place the order, the goods are starting from one location to your location. At the time when they are clearing from that location, they need to give the invoice. Okay, so that is in case of normal. Supply involving movement of goods at the time of removal. Supply does not involve movement of goods at the time of delivery. Okay, then in case of services we have three: subsection 2, subsection 5 and subsection 6. Subsection 2 is normal cases, subsection 5 is continuous supply of services, and subsection 6 is cessation of services. First, we will see special cases, specific cases. Continuous supply of services. What is continuous supply of service? A service which takes more than 3 months to complete and involves a periodic payment obligations is known as continuous supply of service. Suppose if the service is taking more than 3 months to complete, but the payment is made in lump sum, single shot, then that will not be called as continuous supply of service. First condition is that it should take more than 3 months to complete, and there should be periodic payment obligation, means installment should be there. Best example is construction contract. In construction contract, I will enter into contract with you to construct an immobile property wherein the time for construction will be more than 3 months, and how I will receive the money, contract price I will be receiving based on some percentage completion method. So that is known as example of continuous supply of service. So in case of continuous supply of service, so two conditions are there. It takes more than 3 months to complete and involves periodic payment obligations. Now in case of continuous supply of service, how to determine the due date of invoice? First, do you know the installment due date? Do you know the installment due date in the contract? For example, construction contract, I am telling like, so on 15th April you have to pay this much, on 30th May you have to pay this much, on 26th of June you have to pay this much. Like that, if I am specifying that date on which you have to pay that money is the due date of invoice for that money. Okay, so because I am telling you this is the date by which you need to pay the installment, so the due date of invoice is the due date of installment. Suppose if due date is not ascertainable from the contract, then whether the payment is linked to completion of an event or not, you need to check. What is this payment linked to completion of an event? So for example, upon 30% completion you have to pay 1,50,000. Upon 50% completion you have to pay 4 lakhs. Upon 90% completion you have to pay this much. Like that, percentage completion could be one example. Okay, so now in this case, whenever the 30% is complete, that is the due date of invoice. So if payment is linked to completion of an event, whenever that event is completed, that is the due date of invoice. Okay, so whenever the 30% is complete, for that 1,50,000 I need to raise invoice. Whenever 60% is complete, for that 4,50,000 I need to raise invoice. Okay, so that is in case of continuous supply of services, where the payment is linked to completion of an event. Suppose due date is also not there and payment is not linked to completion of event, but installment is payable, then whenever you receive the installment, at that time you raise the invoice. Okay, so that is this due date of installment ascertainable from the contract, such due date of installment. Due date of installment not ascertainable from the contract, as and when the payment is received. Suppose if payment is linked to completion of an event, as and when the event is completed, that should be taken. Okay, then in case of cessation of service, a cessation of service means abruptly stopping the service. I entered into contract with you to provide the service, but I could not provide you the service, so therefore I stopped the service. Now I will retain some amount, so some portion of the amount. For example, I entered into contract with you to take CA final IDT classes. Okay, regular batch. I started the classes and I had got very less number of students, so therefore I am telling I am cancelling this batch and I am refunding after deducting 10%. So now that 10% whatever I am deducting, I have not done like that and all, but I am just telling you. So that 10% whatever I have deducted, so for that I need to give invoice. When I should give invoice for the 10%? Immediately upon cessation. Immediately upon cessation I need to give you the invoice for that 10%. I cannot wait till a later point of time leisurely and not, I should not give for the 10%. Suppose if I am not retaining any amount, full amount I am refunding, then I should not give you any invoice, because I am not retaining any amount. Now you understood or not? Yes. So then sir, I will pay GST only on the 10% portion. Yes, I will pay GST only on the 10% portion. That's why for the 10% portion only I need to give invoice. So immediately upon cessation, with respect to proportion of the amount retained, with respect to proportion of amount retained. Okay, so whatever money that is retained, to that extent only invoice to be given immediately upon cessation. Suppose if it is not a continuous supply of service, if it is not a cessation of service, then normal provisions will be applicable. In normal cases, what you need to check is that, is it banking and insurance sector? If it is banking and insurance sector, invoice to be given within 45 days from the date of completion. If it is other cases other than banking or insurance, invoice to be given within 30 days from the date of completion. Understood or not? So that is with respect to this banking sector, 45 days from the date of completion, other sector 30 days from the date of completion. Okay, So therefore we have studied 6 provisions related to due date of invoice, but one section is missing here, that is subsection 3. That subsection 3 do not contain any provisions relating to due date of invoice, that is the general provisions relating to the invoice. So that we will see later. So these 6 points only you need to remember. For goods 3 points and for services 3 points. This one page information so that the due date of invoice will be in your mind. Okay. Then the next one that we are moving on to is time of supply in case of goods and services. So section 12 deals with time of supply in case of goods, section 13 deals with time of supply in case of services. Now in case of goods and services, the time of supply provisions are constructed in such a manner that it will be similar. So subsection 1 deals with both subsections, 12 subsection 1 as well as 13 subsection 1 deals with the applicability of this section. So what is the purpose of this time of supply? To determine the liability to pay tax, when I should pay tax. For that reason only this subsection 1 is this section is given, that is the time of supply is to determine as to when I need to pay the tax. Okay, so that is that liability to pay tax is determined on the basis of time of supply. Then next 13 subsection 2, 12 subsection 2. AC not working. Remote you have? Can you turn on? No, that is projector.
I don't know.
Please. It's suffocating. I feel like I'm in Chennai. Say this 12 subsection 2, 13 subsection 2, time of supply in case of FCM. What is FCM? Forward charge mechanism. RCM is reverse charge mechanism. So whenever there is forward charge mechanism, you can see that. Just go through that. So in case of FCM, we will take actual date of invoice or due date of invoice, whichever is earlier. But if a person is opting for composition scheme, actual date of invoice or due date of invoice or date of payment, whichever is earlier, which means that whether GST payable on advances in case of a person other than those opting for composition scheme, GST is not payable on advances in case of a normal person. A person opting for composition scheme is required to pay GST on advances. How can we say that? So for example, if a person is not opting for composition scheme, what are the two dates that is given? Due date of invoice or actual date of invoice, whichever is earlier. What if the payment is received? The payment is irrelevant there, which means that for example I am a trader and you are giving me some advance, and whenever I raise the invoice to you, or what is the time limit by which I need to raise invoice to you, whichever is earlier, but this payment itself is not at all a date now there. So date of payment is not at all given here, date of payment is not at all given here, which means GST not payable on advances. Okay, in case of goods covered under FCM, but this is not applicable in case of a person who is opting for composition scheme. A person who is opting for composition scheme is required to pay GST on advance, because in case of a person opting for composition scheme, it is the due date of invoice or actual date of invoice or date of payment, whichever is earlier. So date of payment is also one of the date there. Okay, that is because of notification number 66/2017. There is one notification that is given in this regard called as notification number 66/2017. That notification number 66/2017 says that a trader who is engaged in supply of goods is not required to pay GST on advances. Okay, so that is this point. Then next, suppose if it is goods covered under RCM, you can see that in 12 subsection 3. First section 12 deals with the provisions related to goods, section 13 deals with provisions related to services. So in case of goods covered under FCM, we have seen in case of goods covered under RCM. In case of goods covered under RCM, liability to pay GST is on recipient. So recipient is liable to pay. So when recipient is liable to pay GST, now the date on which recipient has received the goods, the date on which recipient has made payment to supplier, or 31st day from the date of invoice, whichever is earlier should be taken. Okay. So first the date on which goods are received by the recipient, or date on which payment is made to supplier, or 31st day from the date of invoice. What is the logic behind this 31st day from the date of invoice? Suppose if the recipient is receiving the goods, but he may delay receiving the invoice, delay receiving the goods in his records, so therefore he can defer that date, and the date of payment also he can defer to escape from the liability or to defer the liability. But invoice is given by the supplier, so therefore 31st day from the date of invoice, that cannot be changed by the recipient. So due to that reason only they are keeping the 31st day from the date of invoice. But they don't understand one fact that even supplier, if colludes with the recipient, supplier gives the invoice late, then what you can do in that case. Okay, so this is how the provision is created, that is the date on which recipient has received the goods, date on which recipient is making the payment to the supplier, or 31st day from the date of invoice, whichever is earlier. Okay, in this case whether GST payable on advances, yes, because date of payment is one of the date. Wherever date of payment is one of the date, then GST payable on advances. Okay, then so we completed goods FCM, goods RCM. Now we are moving on to services FCM and services RCM. So in case of goods FCM, very simple here, due date of invoice or actual date of invoice, whichever is earlier. Suppose if there is a person opting for composition scheme, due date of invoice or actual date of invoice or date of payment, whichever is earlier. In case of goods covered under RCM, the date on which goods are received by the recipient, the date on which recipient is making payment to supplier, or 31st day from the date of invoice should be taken. Whereas in case of services FCM, so check whether invoice is issued within the due date or not. For example, normal cases, if you see what is the due date of invoice, the due date of invoice is 30 days from the date of completion. If the invoice is given within 30 days from the date of completion, then invoice date or payment date, whichever is earlier. What if invoice is not given within 30 days from the date of completion? We'll take the date of completion or date of payment, whichever is earlier, as the time of supply. Okay, so here we need to see that date of completion as one of the date, which means that, so if invoice is not issued within 30 days, an earlier date will become the time of supply, because date of completion already over, and invoice to be given within how many days? 30 days. If invoice is not given within 30 days, then completion date or whenever you receive the payment, whichever is earlier. So here payment is there, date of payment is there as one of the date, yes. So as date of payment is there as one of the date, which means that GST payable on advances. Okay, then next we have services covered under RCM. Services covered under RCM similar to goods covered under RCM. So here we have three dates: date on which goods are received. Here the date is not there, but the date on which payment is made to supplier, 31st day from the date of invoice. So here it is date on which payment is made to supplier, 61st day from the date of invoice, whichever is earlier is there. Okay, I could not take here. It's working or not? 10-15 minutes it will take to turn on. No, he came here. Wait a minute. Okay, say this. Date on which payment is made to supplier, or 61st day from the date of invoice. Here we need to take it as 31st day from the date of invoice. Here we need to take it as 61st day from the date of invoice. Whichever is earlier should be taken. Okay, so this is in case of goods FCM, goods RCM, services FCM and services RCM. Then subsection 4, subsection 5 and subsection 6 are common. So which means that, so whether it is goods or services, there is no change in the provisions. Actually there is a change in provisions only in case of goods under FCM, RCM, only the two places. But if you see subsection 4, subsection 5, subsection 6, it is same. So in case of vouchers, what are vouchers? Vouchers are instruments that are recognized as consideration. For example, I am selling some goods to you. Say for example, what is that, brand factory, no? Brand factory is famous here. So brand factory, you have purchased some garments. When you purchase some garments in brand factory, say you got a voucher for 500 rupees. So now that 500 rupees voucher, you will be redeeming it for the next time. So say next time you are purchasing garments of 1500, and in that 500 rupees voucher you gave 1000 rupees you paid in cash. Now in this case, whether GST payable on 1500 or only on 1000, because 1500 rupees is the garment sold. In that 1000 rupees is received in cash and 500 rupees is received as voucher. So whether GST payable on 1500 or on 1000. So GST payable on 1500, because voucher will become consideration here. Voucher is treated like a consideration. Okay. So due to that reason. So therefore vouchers will be treated like vouchers are treated as consideration. Now vouchers are divided into two: identifiable vouchers or non-identifiable vouchers. Identifiable vouchers means, so we know against which product or service it is redeemable. That is known as identifiable voucher. Example, Domino's one medium pizza you will get if you redeem that voucher. What type of voucher it is? Identifiable voucher. Non-identifiable voucher means you can redeem that voucher against supply of any goods or services. So the previous example I gave you, 500 rupees worth of voucher, say lifestyle 500 rupees worth of voucher, or shopper stop 500 rupees worth of voucher, you can redeem it against any product now. So that will be coming under, you know, non-identifiable vouchers. So identifiable vouchers means against a particular product or service. The product or service will be mentioned on the voucher, that is identifiable. And the product or service will not be mentioned, but money will be mentioned, that is known as non-identifiable voucher. In case of identifiable voucher, what will be taken as the time of supply? At the time of issuance of voucher. So today I am giving you one Domino's one medium pizza voucher to you, which means today itself is the time of supply, and I need to pay GST. What if you are not redeeming? You are not redeeming and purchasing the pizza, then in that case unnecessarily I paid GST, that I will get as a refund. Okay. Suppose if it is non-identifiable voucher, what will be taken as the time of supply? At the time of redemption of the voucher. So therefore I am giving you a non-identifiable voucher worth rupees 500. You can redeem it against purchase of any product or service in my shop. Now in this case, so whenever you are coming and redeeming, that is the time of supply. What if you are not redeeming? The question of GST payment does not arise, because the GST is payable at the time of redemption of the voucher. So therefore in case of vouchers, what are the 2 points you need to remember? Identifiable voucher at the time of issuance of voucher, non-identifiable voucher at the time of redemption. Then subsection 5 will be applicable when time of supply could not be determined as per any of the above subsections. Okay, that is, in case of evasion, mostly it will be applicable. We need to check whether periodically any return is required to be filed. So when a periodical return is required to be filed, definitely he is a registered person. So I am a registered person, I am required to file returns, and I did not pay tax with respect to few transactions. Department identified what will be taken as the time of supply for this transaction. The time of supply will be the due date of filing such return. So for example, they have identified for the month of March I have not paid. So for the month of March, what will be taken as the time of supply? The due date of filing return for March. What is the due date of filing return for March? That is 20th April will be taken as time of supply. Is it for determining the due date of payment of GST? No. It is for the purpose of recovering the tax. At what rate they need to recover, they need to know the rate of tax. So mainly for that purpose only they determine, because here voluntarily if I am paying, only due date and all will come into the picture. When they are recovering the money, so then in that case what should be taken as the rate, that is rate of GST. For that purpose it is. Okay, so that due date of filing return for that month should be taken. Where periodical return is not required to be filed, then whenever I pay tax, so whenever I pay tax on that date, whatever is the applicable rate of GST for the transaction, that should be taken. For example, 2 years before I have not paid GST with respect to a transaction. At that time the rate of GST was 12%, and today they are recovering from me. Today I am making the payment. Today for the same transaction the rate of GST is 18%. Now at what rate I need to pay GST? 18%, because the time of supply is at the date of payment of GST. Then in case of addition to value by way of interest late fee for delay in payment of consideration. So interest late fee for delay in payment of consideration means that, so first I gave you an invoice, you need to make the payment. Suppose if you are not making the payment on time, I will be charging you an interest or late fee or penalty that will be treated as inclusion in the value. For that I need to give you a debit note, because for this invoice cannot be given because invoice is already issued. At the time of giving invoice, I don't know whether you will pay on time or not. So as you are not paying that money on time, I will be giving you a debit note and recovering that money. But you know what? Only in this place the GST is payable on receipt basis. So everywhere the GST is payable on accrual basis, whether we receive or receivable, whichever is earlier, correct? Invoice date or payment date, whichever is earlier, that's how it is given. But only in this case it is given as date on which it is received. Okay, suppose if you are finding difficulty in this time of supply, at least remember 2 points, that is you write invoice date or payment date whichever is earlier, and in case of interest late fee you write down the date on which payment is received. Okay, this is like, you know, completely a donkey approach, which is like you are not remembering anything but you are going for the exam. So then at least this much you need to know, but don't follow all those things. So you please try to remember this and go hardly 1 page. Okay, so due date of invoice half a page and time of supply half a page, over. Okay, so this is A5 size, this is not A4. So just to that page if you tear along with the admit card, if you take also, definitely you can answer. Okay, but remove the footer and header. Okay, so then next step, so that is with respect to time of supply provisions under section 12 and section 13. Now look into the additional points related to this. What will be considered as the date of payment? Date of payment in case of supplier, the date on which supplier has received the money, that is entered in the books or credited in his bank account, whichever is earlier. Date of entry in the books of supplier or date of credit in the bank account of the supplier, whichever is earlier. From recipient point of view, can you tell me the same way what should be taken as the date of payment? Date of entry in the books of recipient or date of debit in the bank account of the recipient, whichever is earlier. Okay, then in case of goods covered under FCM, so on advances GST payable or not payable? Not payable. GST not payable on advances. However, GST is payable upon invoice as the time of supply is due date of invoice or actual date of invoice, whichever is earlier. But in case of services under FCM, whether GST payable on advances? Yes. So we need to pay GST on advances because 2 points we have: invoice date or payment date, whichever is earlier; completion date or payment date, whichever is earlier. So payment is also one of the dates. So therefore, we need to pay GST on advances. Because of that reason, in case of services, if there is any excess amount received beyond the invoice value, for example, I am invoicing you for 1 lakh, I am invoicing you for 1,12,483, like that I have invoiced. Now what you did, you don't like to make the payments like this, fractions and all. Okay, you are different. So 1,13,000 you paid. Okay, you like only round numbers. So now in this case, what is the extra amount that I got beyond the invoice value? Invoice value is 1,12,483, but how much I have received? 1,13,000 I have received. What is the excess amount that I have got? The excess amount that I have got is 1,13,000 minus 1,12,483. How much is the excess amount? 572. So 570. 517. So 517, on this 517 I have 2 options. Actually this 517 is received this month, but this will be reflected in which invoice? Next invoice. Okay, so therefore payment received or invoice, whichever is earlier. So this month itself I have to pay tax on this 517. Alternatively, I don't have to pay tax now. I will pay tax whenever the invoice is issued itself. So I don't have to pay now. So general provisions of time of supply not applicable. That is invoice date or payment date not applicable. I will tax on the basis of invoice itself. So that administratively I have a burden now to make the payment on this 517, correct or not. On this 517 extra received, how much GST I need to ascertain, and that also I need to pay. To avoid that only they have given an option to the supplier. What is that option to the supplier? Either pay based on payment received, invoice date or payment date, whichever is earlier, or forget about this and pay only at the time of invoice. So this 517 will be reflected in next month invoice. At that time itself you pay the GST with respect to this 517 rupees. So this option is available to the supplier with respect to each invoice the supplier can choose. And one more point, the excess amount should not be more than 1,000 rupees. The excess amount per invoice should be up to 1,000 rupees. The excess amount per invoice should be up to 1000 rupees. Okay, so here what is the excess amount per invoice? 517, up to 1000 applicable. What if the excess amount is beyond 1000? Then this option and all is not applicable, you pay normally. That is the date on which payment is received or invoice, whichever is earlier. So that is with respect to this. Okay, point number 3. So previously date of payment was also part of goods. Right now it is removed for FCM. So you can please explain the rationale. Rationale is simple. They don't want the traders to pay GST on whatever advances they have received, because whatever advances that are received by the traders, that is any person who is engaged in supply of goods, that advance is actually for procurement of the material. On that advance, if you pay GST, so then what will be the amount available for the trader will come down. So for procurement of the raw material, that will hamper their business. So due to that reason, for traders and manufacturers, they are telling that no need to pay GST on advances. Okay, so that is the simple reason. And look into the third point, up to 1000 rupees received in excess of the invoice in case of service covered under FCM. Time of supply can be the date of invoice or determined as per 13 subsection 2. Supplier has the option to choose. Okay, then in case of supply of services between associated enterprises. So when you take associated enterprise discussed under section 92A of Income Tax Act 1961. So that is the 26% point is there now. So one person holding 26% in the other, etc. So in section 92A of the Income Tax Act, there are associated enterprises. Now let's try to understand this point. What is it all about? Now there is a supplier who is located outside India. There is a supplier who is located outside India, and there is a recipient who is located in India. There is a recipient who is located in India. Okay, so when the supplier is located outside India and recipient is located in India, so this is, say for example, services, then it will be coming under import of services, correct or not? In case of import of service, GST payable by recipient under RCM. Okay, so this will be taxable under RCM, where liability to pay GST is on recipient. Then what will be taken as the time of supply? The time of supply will be, as per section 12 or section 13, section 13 subsection 12 subsection 3, subsection 3, remember, subsection 1 purpose of that section, subsection 2 FCM, subsection 3 RCM, subsection 4 vouchers, subsection 5 not determinable under above sections. Then subsection 6 interest, late fee or penalty for delay in receipt of consideration. In case of goods it is 12, in case of service it is 13. Okay, so try to remember along with the section numbers and subsections, nothing wrong in that, so that what will happen, so we will be getting marks, that's it. Beyond that nothing will happen. So it's good only now if we get the marks. So therefore section 13 subsection 3, what will be taken as section 13 subsection 3? The date on which payment is received by the, that is the date on which payment is made by the recipient, or 61st day from the date of invoice. So A, date of payment to supplier, date of payment to supplier, date of payment to supplier, or B, so 61st day from date of invoice, 61st day from date of invoice, whichever is earlier will be taken as the time of supply. Now here what happens, there is an supplier who is an associated enterprise. Supplier associated enterprise is located outside India, and recipient associated enterprise is located in India. So now there is import of services, same import of services. So this is also covered under RCM here. This is also covered under RCM. All import of services covered under RCM. Even import of service from an associated enterprise also covered under RCM. So in that case, actually which provision we need to apply? Section 13 subsection 3. But usually associated enterprise outside India will not be giving any invoice or any document. Usually they will make the book entries. Due to that reason, what they are telling, you take A point as A, no change, that is date of payment to supplier. A point as A, date of payment to supplier, don't change that. And B point, what you do, you take it as date of entry in books of recipient, date of entry in books of recipient, whichever is earlier. You understood or not? So A date don't change, date on which payment is made to supplier. Instead of that 61st day, you will be taking date of entry in the books of the recipient. That should be taken. Okay, so that is what here. So in case of supply of service between associate enterprise where supplier is outside India and recipient is in India, time of supply shall be the date of entry in the books of recipient or the date of payment to supplier, whichever is earlier. Then next point, when goods are taken outside India, is it treated as supply? No. When goods are taken outside India for exhibition, it is not treated as supply, because in order to become supply, there should be consideration. So 7(1)(a) will not come. So without consideration, point number 1, disposal of business asset. So in case of section 7 subsection 1, inclusions in the meaning of supply, we have 7(1)(a), 7(1)(b), 7(1)(aa), 7(1)(c, like that 4 points are there. In that 7(1)(c) will come into picture when there is no consideration. 4 activities are treated as supply even though without consideration. So in that 4 activities, number 1, permanent transfer or disposal of business asset on which ITC is availed. So that will not come here. Why it will not come here? The goods are just taken outside India for the purpose of exhibition and it will be brought back. So it is not permanent transfer or disposal. Okay. Second point, so related party transactions including transaction between distinct persons, that will also not come. Then import of services from a related person, not applicable. Principal agent transaction also not applicable. So DRIP, you remember DRIP. D for disposal of business asset on which ITC is availed. R for related party transactions. I for import of service from a related person. P for principal agent transactions. Okay. So these are the 4 activities which are treated as supply even though without consideration. So in that none of these cases it will be fitting in, because the goods are taken outside India for exhibition, so therefore it is not a supply. But will it become export of goods? Yes, it will become export of goods, because what is treated as export of goods? Taking goods from India to a place outside India is treated as export of goods. But will it become zero rated supply? No. As the activity is not a supply, when you take the goods outside India for exhibition, it will not become a zero rated supply. It may become export, but it will not become zero rated supply. Then when it will become supply, if you are not bringing back the goods within 6 months, then it will become supply by applying section 31 subsection 7. Section 31 subsection 7 says that whenever the goods are sent on approval, sale on approval or on return basis, within 6 months from the date of removal or date of acceptance by the buyer, whichever is earlier. So that point is applied even in case of goods taken outside India for exhibition. When goods taken outside India for exhibition, if not brought back within 6 months, or if it is not sold within 6 months, on expiry of 6 months, it is deemed that the supply has taken place. Okay, and the invoice can be raised in this regard. Actually 31 subsection 7 is applicable for sale on approval or on return basis, is applied in case of goods taken outside India for exhibition as per CBIC circular. That is the point number 5. Okay, so these are some additional points related to time of supply. Now we completed section 31, due date of invoice, and then section 12, time of supply in case of goods covered under FCM. Section 13, time of supply in case of that is time of supply in case of goods 12, time of supply in case of service 13. In that subsection 1, applicability, subsection 2, FCM, subsection 3, RCM, subsection 4, vouchers, subsection 5, non-applicability of the above subsections, subsection 6, interest, late fee or penalty for delay in receipt of consideration. Now we are moving on to section 14. Section 14 is applicable whenever there is a change in rate, and actually many people are of the opinion that section 14 is applicable for both goods and services. No, section 14 is not applicable for both goods and services. It is applicable only for services, because the notification 66/2017 uses the word that, so even for the cases involving section 14, the time of supply will be due date of invoice or actual date of invoice, whichever is earlier, which means that even though section 14 heading, when you see in the bare act, it says that time of supply in case of change in rate with respect to goods and services, but because of notification 66/2017, it is applicable only in case of services. So this point is given in the study material also, but first they explained everything for both goods and services. Finally one small paragraph they gave that, so it is applicable only for services. So that's why be careful. In case of goods, don't apply section 14. First of all, when section 14 will be applicable? Whenever there is a change in rate. whenever there is a change in rate between three dates: date of supply, that is date of completion of service, or date of invoice, or date of payment. Between these three dates, if there is a change in rate, then section 14 will be applicable. What you need to remember is simple. So first, supply we will freeze three dates: supply, date of supply, that is date of completion, or date of invoice, or date of payment. So supply we will freeze. Supply before change in rate. If supply is before change in rate, then invoice date or payment date, whichever is earlier, will be taken. If supply is after change in rate, supply is before change in rate. Supply is before change in rate means service is completed before change in rate. Now don't see anything. Normally invoice date or payment date, whichever is earlier, will be taken. That is section 14A. Section 14B will come into the picture when the supply is after change in rate. When supply is after change in rate, what we need to see is that whether both invoice and payment falls before change in rate or not. If both invoice and payment falls before change in rate, whichever is earlier, otherwise whichever is later. Please see that. Please see that chart. If both invoice and payment comes before change in rate, whichever is earlier. If one comes before, one comes after, whichever is later will be taken. Okay. And very important point here is that what should be considered as the date of payment. The date of payment is not the date of entry in the books or date of credit in the bank account, whichever is earlier. It is the date of credit in the bank account, because what we can do, we can manipulate. Suppose invoice is before, payment is after, whichever is later, correct? In that place, whichever is later is taken, correct? Date of invoice or date of payment, whichever is later. In case of 14B, supply after change in rate, invoice is before change in rate, and payment is after change in rate, whichever is later. So whichever is later means invoice is before, payment is after, so whichever is later. So the payment date will be taken as the time of supply. Suppose invoice date 12% rate of GST, payment date 18% rate of GST, we end up paying 18% as the GST. So now what we will do, we will pass one fake entry that the money is received before change in rate itself. We will pass an entry. So then entry date or credit date, whichever is earlier, will be entry date. So if both invoice and payment comes before, then whichever is earlier, then we will pay GST at the old rate. So due to that reason only they are telling date of credit in the bank account only will be taken as the date of payment. However, if the payment is received within 4 working days, they gave a grace days, 4 working days from the change in rate, then entry date or credit date, whichever is earlier, we will take. So you can pass an entry accordingly. Okay. So for example, what is that I was trying to convey is that, so with effect from 1/4/2022, there is a change in rate. So before that rate date, there is a old rate. That old rate of 12% is applicable. Now there is a new rate. What is the new rate that is applicable? The new rate is 18%, and the supply is after change in rate. Date of completion is after change in rate. Suppose if invoice is here and payment is here, what will be taken as the time of supply? So this is first branch or second branch? Completion before change in rate or after change in rate? Completion is after change in rate. When completion is after change in rate, we need to see whether both invoice and payment falls before change in rate. No, both invoice and payment is not falling before change in rate. One is before change in rate and the other is after change in rate. So whichever is later should be taken. What is whichever is later? Date of payment will be whichever is later. And what will be the rate that is applicable? The rate that is applicable is 18%. 18% is the rate that is applicable. Now what I will do, I will make a entry, book entry. Payment not received, but I will make a book entry that the payment is received. Suppose if the date of invoice and date of payment is before change in rate, then what will be taken? Second branch. Second branch, again first. What is that? If both invoice and payment falls before change in rate, if both invoice and payment falls before change in rate, the invoice date or payment date, whichever is earlier. So date of invoice or date of payment, whichever is earlier. So definitely what will be the rate that is applicable? 12%. So we can manipulate this way now. So by passing an entry. So that's why what they are telling, you can still do this. Well, provided the credit is within 4 working days from the change in rate. Okay, 4 working days from the change in rate, you can definitely do this. You can pass an entry, and they are giving this loophole. They are giving away. Okay, fine, do this. It's okay, allowed, but ensure that the payment is credited within 4 working days. If the payment is not credited within 4 working days, entry date is irrelevant. Only when it is credited into bank account will only be taken as the date on which payment is received. Okay, so that is with respect to this note here. So date of payment for section 14 is the date of entry in the books or date of credit in the bank account, whichever is earlier if the payment is created within 4 working days from the change in rate. Otherwise, date of credit in the bank account only will be taken. Okay. So section 14 also we have completed. So what we have seen so far is section 31, due date of invoice, section 12, section 13, time of supply in case of goods, time of supply in case of services, section 14, change in rate of tax. Now various documents involved in GST. So all these are provisions related to section 31 subsection 3, section 32, 33 and 34, all these are there. Okay, first tax invoice. So we are now going to discuss what are the various documents involved. First, a tax invoice. Tax invoice, who will be giving it to whom? Generally, supplier will be giving it to recipient. But some cases, recipient will give the tax invoice to the supplier. In which case, when the supplier is unregistered and the transaction is covered under RCM, so recipient will be giving the tax invoice to the supplier. Okay. Suppose if the supplier is registered, supplier will issue. If the supplier is unregistered, recipient will issue. But provided it is in case of RCM. Okay, what is the time limit? Already we discussed the time limit. So when tax invoice will be issued in case of taxable supplies? Still the AC is not working. Some tissue paper. I'm sweating like anything here. But no noise will come. Thanks. So see this, tax invoice will be given in case of taxable supply of goods or taxable supply of services. The tax invoice will be given. Whenever there is exempted supply of goods or services, then in that case, what is the document name? Bill of supply. So in case of taxable supply, it is tax invoice. In case of exempted supply, it is bill of supply. And this bill of supply will be given by whom to whom? Supplier to recipient. Even in case of a person who is opting for composition scheme, they cannot recover the GST from the recipient, so they will also be giving a bill of supply. Okay, and the time limit is same as specified for tax invoice. Okay, so for taxable supplies it will be tax invoice. Already we discussed yesterday itself. Movement of goods, taxable supply, it will be tax invoice. Exempted, it will be bill of supply, like that. Okay, then in case of low value supplies, what is considered as a low value supply? Value of supply less than 200, not equal to 200, less than 200, less than 200 is known as low value supply. In case of low value supplies, so tax invoice is not required. For example, you go to one supermarket and you will be purchasing one Lay's chips packet and one water bottle. So now what will be the value of this? Less than 200 rupees. So supplier need not give tax invoice. However, it should be B2B or B2C transaction. B2C, it should not be B2B. If it is B2B, definitely 1 rupee transaction also invoice to be given, because recipient will take credit now. In case of B2C only, this is allowed. Okay, so the transaction is B2C. Recipient do not require tax invoice, and a consolidated tax invoice is prepared at the end of the day mentioning all these transactions. Then for low value supplies, no need to give tax invoice to the recipient. Is it clear? However, this point is not applicable in case of multiplex theatre. Of course, not in Bengaluru, because in Bengaluru multiplex theatre and all starting itself will be 500, 600. So I am talking about some area, some town, multiplex theatre is there, wherein if the ticket price is less than 200 rupees, even then they need to give the tax invoice. Okay, so here 200 rupees, definitely no, I don't think so, because I remember 5 years back itself it was 300 rupees, 400 rupees. So now it would have even reached 500, 600 rupees and all. So therefore, in case of multiplex theatre, an invoice to be issued even if the value of supply is less than 200. So this is not applicable for multiplex theatres, but for all other goods and services, so this point is applicable. Tax invoice separately not required. Then what is the need of consolidated tax invoice? We need to enter all those transactions into records, otherwise that will become black money. So there will be a mismatch between the inventory as per physical verification as per records. So physical verification, the inventory would have been gone, but as per records still the inventory will be showing. You understood? So due to that reason we need to generate a consolidated invoice at the end of the day. Then debit note and credit note. Who will be giving debit note and credit note to whom? Supplier will be giving debit note and credit note to recipient. I told you already. So when the debit note will be issued, whenever there is an increase in the invoice value, debit note. Whenever there is a decrease in invoice value, then it will be credit note. And this debit note and credit note is given under section 34. Section 34 of CGST Act deals with the provisions related to debit note and credit note. So look into the debit note. The taxable value charged is less. So taxable value charged is less means what? So that is the tax invoice is having a value less than the actual taxable value. Suppose if tax charged is less means whatever tax that we mentioned in the invoice is less than the actual tax, which means that whatever is there in the invoice compared to that we are collecting excess amount. For that excess amount we need to give a debit note. What is the time limit for issuance of debit note? No time limit. There is no time limit for issuance of debit note. Why? Because debit note leads to increase in tax revenue. No time limit. Credit note leads to decrease in revenue because liability will come down. That's why they gave a time limit here. Okay. So credit note. When credit note is issued, whenever the value will come down. So whenever the actual value is less than the invoice value, whenever the actual tax collected is less than the tax as per invoice, or sales returns. I told you already, whenever we made a supply and supply returned, so then also we will be giving a credit note. And even if there is any deficiency in the quality of the goods or services, where goods or services supplied are deficient, in these cases credit note will be given by supplier to recipient. However, credit note cannot be issued in case of bad debts. So whenever we are writing off the bad debts, so in that case we cannot give a credit note, means whatever GST that we have paid is paid. So that we will not get. So okay sir, what is the consequence of giving a credit note? Whenever I give credit note, listen, whenever I give credit note, that credit note I will report in GSTR1. Whenever I report in GSTR1, that month my liability will come down. Whenever I report debit note, my liability will increase. Whenever I report credit note, my liability will come down. This is in the case of supplier. So as credit note leads to decrease in the liability, so they are telling that only it is possible in 4 cases. Number 1, tax actually charged is less than tax as per invoice, money actually charged is less than value as per invoice, sales returns, and deficiency in the quality, but not in case of bad debts. Okay. And what is the time limit for issuance of credit note? So if you remember, we have discussed the time limit for availment of ITC, section 16 subsection 4, that is 20th October of the succeeding financial year or date of filing annual return, whichever is earlier. Here instead of 20th October you replace it with 30th September. So 30th September of the succeeding financial year or date of filing annual return, whichever is earlier. You understood the connection? So 30th before end of September of the next financial year means 30th September of the next financial year or date of filing annual return, whichever is earlier. Now with respect to each invoice, should we give a separate debit note and credit note, or multiple invoices can we give a single debit note and credit note? Previously it was not allowed to give single credit note, debit note for multiple invoices. For each invoice separate debit note needs to be given, but now we can accumulate all those invoices together and a single debit note or single credit note can be given. And because of that reason only, in the portal now we don't have to give the invoice reference, cross reference in the portal when we create a debit note. So debit note, credit note when we create in the portal, no need to give the invoice cross reference. Okay. Now can for the same invoice multiple debit notes also be given? Yes. Multiple credit notes also be given. For the same invoice, multiple debit notes, multiple credit notes. For multiple invoices, single debit note and credit note is not possible. That's what I have given in the footnote. One or more credit or debit notes can be issued for multiple invoices. Okay, whenever debit note is issued, what will happen to the recipient? I am supplier, my liability will increase. What will happen to the recipient? Recipient's ITC balance will increase. Whenever credit note is issued, what will happen to the supplier? Supplier's GST liability will come down. My future GST liability will come down. What will happen to your ITC? Your ITC will be reversed. Your ITC will be reversed because my liability comes down. You cannot enjoy that ITC, so your ITC will be reversed. So whenever credit note is issued by the supplier to the recipient's ITC balance will be reversed. And sir, what if the recipient is not doing it? Recipient will definitely do this because now the credit notes are reflected in GSTR 2B under ineligible credit. So due to that reason, automatically the recipient will reverse that credit. So there is no question of what if the recipient is not reversing it. Okay. Then next, revised tax invoice. revised tax invoice will come into picture whenever we are liable to get registered with effect from a date, and from that date we will be continuing making the outward supplies, but we need to pay GST on that outward supplies. For example, see this. So I commence the business, and with effect from one date, say 8/7/2021, I am liable to get registered. Okay, so on this date my aggregate turnover exceeds threshold limit. My aggregate turnover exceeds threshold limit. So from this date I am liable to get registered, and I continue my business thereafter. And I will make application for registration. I got the registration certificate. Say I got the registration certificate on 5/8/2021. I got the registration certificate obtained. Okay. Now I can give tax invoice only from 5/8/2021, because from 5/8/2021 only I will know what is my GSTIN. Until that point of time I don't know what is my GSTIN. So only when I obtain the registration certificate I can give the tax invoice as per section 32. So section 32 says that only a registered person can give tax invoice, unregistered person cannot give tax invoice. So therefore, when am I getting the GSTIN? I am getting the GSTIN on 5/8/2021. So due to that reason, but during this period, whatever outward supplies that I make, or am I required to pay GST on these outward supplies? Yes. So GST payable. But can I recover the GST from my recipient as and when the outward supplies are made? No, I cannot recover, because I should not issue the tax invoice. For that reason, what they are telling is that, so you give a revised tax invoice. When you need to give revised tax invoice after 5/8/2021 with respect to the supplies between 8/7/2021 and 5/8/2021, whatever supplies you made, for that supplies you give a revised tax invoice after 5/8/2021 within 1 month from 5/8/2021 and recover the GST from the recipient. But practically it is possible only in case of B2B supplies, not possible in case of B2C supplies, because the recipient will definitely not pay. Okay, so in case of B2B they will pay because they can take ITC, but B2C they will not generally pay. So but revised tax invoice can be issued. What is the time limit for issuance of revised tax invoice? Within 1 month from the date when we get the registration certificate. But revised tax invoice can be issued only if the application for registration is made within 30 days from the date when I am liable to get registered. If the application for registration not made within 30 days from the date when I am liable to get registered, revised tax invoice cannot be issued. Then even in that case we need to pay tax. Yes, we need to pay tax out of our pocket, and we cannot recover it from the recipient. So if it is revised tax invoice, we can recover it from the recipient. If it is revised tax invoice cannot be issued, then we have to pay tax out of our pocket. That is a disadvantage. So indirectly there is a compulsion on us to make the application for registration within 30 days from the date when I am liable to get registered. Okay, so that is about this revised tax invoice here. So within 1 month from the date of certificate of registration, and revised tax invoice cannot be issued if application for registration not made within 30 days from the date on which liability arises. So reason being, they use a word in the provision that revised tax invoice can be issued for the period starting from the effective date of registration till the date of issuance of certificate of registration. And what will be the effective date of registration? If you make application for registration within 30 days, the date you are liable to get registered is there now. That will be the effective date of registration. If you are not making application for registration within 30 days, the date when you got the certificate of registration. So therefore, if application is not made within 30 days, the effective date of registration and certificate of registration both are same. So then revised tax invoice cannot be issued. From that only I concluded that revised tax invoice cannot be issued when application is not made within 30 days. So in this regard, one more, like this point also can be tested separately. What will be taken as the effective date of registration? If application is made within 30 days, for example in this case, if application is made within 30 days, what will be the effective date of registration? 8/7/2021. So if application is made within 30 days from 8/7/2021, then 8/7/2021 will be taken as the effective date of registration. If application for registration not made within 30 days from 8/7/2021, the date when you got the certificate of registration, that is 5/8/2021, will be taken as the effective date of registration. Okay. Then next one, receipt voucher. Receipt voucher is given by supplier to recipient whenever the advance is received. What is called as advance? Any amount that is received before the invoice date is known as advance. So before raising invoice, if I receive any amount from you, that is known as advance. So what is the proof that you have that I have received advance from you? So I will be giving a receipt voucher to you. So that is the evidence that you have made the advance payment to me. Okay. Suppose if you pay money after invoice, so then receipt voucher may or may not be issued by the supplier. So it is at the discretion of the supplier to give the receipt voucher, but definitely before the date when invoice is issued, if the payment is received, receipt voucher should be given by supplier to recipient. Okay, immediately, not specified, so immediately it should be given. Then payment voucher. So receipt voucher, you understood. Payment voucher is whenever the transaction is covered under RCM. Whenever the transaction is covered under RCM, whenever recipient makes payment to the supplier, so evidencing that the payment is made by recipient to supplier, so recipient has to give a payment voucher to the supplier. Understood or not? So when the rent payment voucher will come into picture only in case of RCM. So whether the supplier is registered or supplier is unregistered, whenever recipient is making payment to supplier, recipient has to give the payment voucher to the supplier whenever the payment is made. Okay, all these are useful for MCQs. All these are useful for MCQs. When you are reading, you feel like sleeping. So therefore, which is definitely important for exam. You understood or not? So that is by default, because CA exam they will be testing these kind of areas only, and we will be thinking that I have prepared, but I could not write the exam properly. It's only because of this reason, because all these are monotonous things. We will feel like, oh, why it is there? But then also we need to read. No other go. Okay. See, certain things are painful. Okay. Even giving birth is also painful. But for that, can the mother say, no, I will not give birth? Then you and me will not be there. Correct or not? So pain is good. You understood or not? For the sake of some success. So therefore, these are all very important, but that's the reason why I'm not beating around the bush. Just I'm telling you what document, what is the purpose, what is the time limit. Okay. Then refund voucher. So when the refund voucher will be given by supplier to recipient. So whenever advance is written, first I collected advance and that advance is returned. Still invoice is not raised, means I am cancelling the supply. When I am cancelling the supply, when advance is returned, so I need to give you a refund voucher. Otherwise, on the basis of receipt voucher, you will ask me to pay the money at a later point of time. So therefore, whenever I return that advance, I need to give you the refund voucher. Okay. So now, look into this diagram, you will understand the effect of receipt voucher, refund voucher, etc. So in page number 36, next page you have first date of invoice. Before the date of invoice, if the payment is received, what is that known as? Advance. So in that case, what is the document issued by whom? Receipt voucher issued by supplier to recipient. Now whether GST payable on the basis of receipt voucher. If it is goods, no need to pay GST. If it is services, GST payable on advances. Suppose if the payment is received after the date of invoice, already invoice is raised, GST is paid. So now in this case, when the payment is received after the date of invoice, whether any receipt voucher to be given, not compulsory, but it is optional. If the supplier want to give receipt voucher, he can give receipt voucher to the recipient. Is it clear or not? But when it is mandatory, whenever the payment is received before the date of invoice. Suppose before the date of invoice, if the amount is refunded, so then what will happen? So whatever is the refund voucher, whatever is the voucher here, what is the voucher there? Refund voucher. Refund voucher will be given by supplier to recipient. So whenever refund voucher is given by supplier to recipient, in case of goods anyhow GST not paid, so no need to get any refund. In case of services already they paid GST on advances, now they will get a refund of GST paid on advance based on refund voucher. Okay, you please see that. So amount refunded, supplier shall issue a refund voucher to recipient. If it is goods, no refund. If it is services, so refund will be claimed. So because in case of services already we paid GST now, so now the supply is not made, so we gave a refund voucher. So therefore whatever GST paid, we will claim as refund. Whatever GST paid, we will claim as refund. Okay. Suppose if the amount is refunded or supply is cancelled after generating the invoice. After generating invoice, when the supply is cancelled or the amount is refunded, what is the debit note or credit note? Credit note. Credit note will be given by the supplier to recipient. Already invoice is raised here. To cancel the invoice, what is the document? Credit note will be given by supplier to recipient. Okay. So what will happen when the credit note is given? The liability gets reduced. Is there any alternative to credit note? Yes. because the credit note has got a time limit, that is 30th September of the succeeding financial year or date of filing annual return, whichever is earlier. By that time, what if the credit note could not be issued? I issue thereafter, you can issue, but that is of no use. That is not credit note under section 34. That will not lead to reduction in liability. So then what is the alternative available? You get the refund of tax paid under excess payment of tax. Under the ground that you have paid excess payment of tax, you can get the refund of tax paid. Okay. That is an alternative to credit note. First of all, you cancel the supply na. You gave invoice pa. So you gave one invoice. When you gave one invoice, when you cancel that invoice, then where from the liability will come into the picture. But on the base of invoice, we would have paid, because GST is payable on a accrual basis. When GST is payable on an accrual basis, but when the invoice is cancelled, then in that case already I paid the GST. So what is the effect of the GST paid? I can get the benefit. What I should do? I should give a credit note. Whenever I give the credit note, that much of the tax already paid on advances, that I will get as a reduction from the liability. Okay. You attended regular batch IDT or somehow directly coming and sitting here? I don't really think so that you attended any regular batch. Okay. Really, I have a doubt. One reaction also not there in your face, yeah. All this you don't know, yeah. So whenever the credit note is issued, my liability will be coming down. So when my liability comes down, that is benefit. Already I paid tax, my liability, future liability will come down. That is one way. And the other way is what? So refund can be claimed under excess payment of tax grounds. So whatever GST that I have paid, I can get it as a refund. You understood or not? So this is about that. Then next, look into delivery challan. Delivery challan is a document that will be given by supplier to recipient whenever there is transportation of goods, not services. For services, delivery challan will not come. Only in case of goods, and that too whenever it is not under supply. For example, when the goods are sent on job work, or when the goods are sent from one place to another place within the state for which we have not obtained separate registration, etc., then delivery challan will be given, and that delivery challan will be given by supplier to recipient, and the goods should be transported under the cover of a delivery challan. Again, otherwise the goods are liable for confiscation. So see that supply of liquid gas where the quantity at the time of removal is not known, because we don't know how much will be filled in the recipient's place. So therefore we will raise a delivery challan, take it to the recipient's place, we will fill the gas, and how much gas we are filling, accordingly we will be raising the bill to them. Then transportation of goods for job work, transportation of goods for reasons other than by way of supply. Okay. So these are the various documents that we have. Then next, HSN code in invoice. So now there is an amendment related to that. So that is, we need to enter how many digits. It was there already in amendment for last exam itself. How many digits we need to enter in the invoice as HSN code. HSN refers to Harmonized System of Nomenclature. This is developed by World Customs Organization. All GATT countries, those countries which have signed the General Agreement on Trade and Tariff, will be following this particular harmonized system of nomenclature coding for the purpose of every product. Okay, so that the product may differ but the code will not differ. Based on that code we can understand what is the product all about. And this HSN code is a 8-digit code. In that 8-digit code, if your aggregate turnover during the previous year does not exceed 5 crores, you need to enter 4 digits, that too only in case of B2B, not required in case of B2C. When the aggregate turnover during the previous year exceeds 5 crores, then you need to enter 6 digits, both B2B as well as B2C. Okay, so that is with respect to this HSN code in invoice. In case of services, what is that we need to enter? SAC, service accounting code. Okay, then the next area, very important area, so an amendment etc. is also there in this, that is e-invoice and dynamic QR code. First of all, what is an e-invoice? E-invoice refers to uploading an invoice into the invoice registration portal. What is invoice registration portal? That is a government portal. So when an invoice is uploaded into the invoice registration portal, so that invoice registration portal will be fixing 3 things to that invoice. So that 3 things are invoice reference number. One reference number will be given, and then QR code will be given, and thereafter we have digital signature. Then that will be known as e-invoice. So any invoice for which three things are obtained is known as e-invoice. What are the three things? Invoice reference number, QR code, digital signature. Then it will be known as e-invoice. And how to obtain this e-invoice? So normally you prepare the invoice. There is a e-invoice process which you can see there. So first you prepare an invoice normally, and that invoice which you prepare normally, so using your billing system, so you will be uploading that invoice into invoice registration portal. So for that, first you need to generate the invoice, then convert it into .json file. So because JavaScript object notation is the machine readable format, so all accounting softwares will run on different languages, but the common language to understand for the portal is .json, JavaScript object notation. So it will be converted into .json extension, and thereafter it will be uploaded into invoice registration portal, and invoice registration portal will be affixing three things, that is invoice reference number and digital signature and QR code. So now from this place, where it will go? It will go to GST system, and it will automatically come in GSTR1 of the supplier and GSTR2B of the recipient. So in GST system, what will happen? So it will come in GSTR1 of the supplier, and GSTR2B of the buyer is updated. Okay, so therefore the recipient can check his ITC details. The recipient can check his ITC details based on that. Okay, and next it will also go to the e-way bill system. So e-way bill system, at the time of generating the e-way bill, if you enter this invoice number, all data will be auto populated, no need to enter the data again and again. So that is the advantage of this. Thereafter it will be returned back to the supplier, and that supplier can share that with the recipient. So this is known as a e-invoice process. So total 8 steps are involved in this. Step number 1, first prepare an invoice as per a particular format. What is the format in which the invoice needs to be prepared? So that is known as INV1. Form GST INV1 is the format. So they have given the format of e-invoice. In that format only a normal invoice to be prepared, and then that normal invoice to be converted into .json file, and thereafter it should be uploaded into invoice registration portal. In invoice registration portal, three things should be obtained for that invoice, that is invoice reference number, digital signature and QR code, and thereafter it will go to GST portal and e-way bill portal. In GST portal it will go to the GSTR1 of the supplier, and it gets updated there, and it will go to GSTR2B of the recipient, and it will get updated there, and thereafter the buyer can check whether he has taken the ITC or not in the 2B, and thereafter it will be returned back to the supplier and for distribution purposes. Okay, so this is known as e-invoice process. For example, what is the main important point? If e-invoice is applicable for me, suppose if I am not generating the invoice this way, okay, so if I am not following the e-invoice, and if I am not obtaining invoice reference number, digital signature and QR code, it is as good as I have not given the invoice, and the recipient cannot take ITC. Okay, so if a supplier is required to give e-invoice and the supplier is not given e-invoice, even then it will come in 2B. Supplier has given normal invoice, so that also will come in 2B, because supplier will enter the data in GSTR1, that will come in 2B, but the recipient cannot take ITC. Okay, you write down that note below this. So that is, if a supplier is required to issue e-invoice, that's a very, very important point here. Okay, that's a very, very important point. If a supplier is required to issue an e-invoice, if a supplier is required to issue e-invoice but not issued e-invoice, and instead issued normal invoice, then recipient cannot avail ITC. So that is the risk involved in case of e-invoice non-issuance. Okay, next, so to whom this e-invoice is applicable and to whom this e-invoice is not applicable. That's what we are going to discuss. So first you understood, I hope that you understood what is e-invoice and to whom e-invoice is applicable. Every person whose aggregate turnover during the previous years, any previous year, starting from 17-18 to 2021, exceeds 50 crores is required to give e-invoice. With effect from 1st April 2022, that limit has been changed to 20 crores. But that is not applicable for your exam. That is for November 22 exam. For your exam, it is 50 crores only. Okay. So when e-invoice will be applicable if aggregate turnover during any of the preceding financial years, from which year to which year, 2017, 18, 18, 19, 19, 20 or 2021. So if any 1 year, if it exceeds 50 crores, then from 21 onwards, that is 1st April 2021 onwards, on all their outward supplies which are B2B supplies, they need to give e-invoice, not for B2C supplies, B2B supplies, okay, and who are not required to give e-invoice. So even if the aggregate turnover exceeds 50 crores during any previous year, e-invoice is not required to be issued by few people. Remember the keyword biggest not required to give e-invoice, okay. So these are big people, so they are not required to give e-invoice. Biggest, okay. B for banking company, I for insurance company, G for GTA services, another G is government department, that is state government or central government department, E for exhibition of film in a multiplex theatre, example PVR cinemas, INOX, etc. So they are not required. And yes, in case of SEZ unit, special economic zone unit, and T for transportation of goods by transportation of passengers by any mode. For transportation of goods only GTA. For transportation of passengers any mode. So they are not required to give e-invoice. It's a very important point for short note, okay. Who are not required to give e-invoice? Biggest, B for banking company, I for insurance company, G for GTA service, another G is government department and local authority, and E for exhibition of film in a multiplex theatre, S for SEZ unit, and T for transportation of passengers by any mode. So these people are not at all required to give e-invoice even if their turnover during any previous year exceeds 15 crores. Okay, then next, what about dynamic QR code? Dynamic QR code means in case of B2C supplies, we should recover the money, that is we should receive the money only by scanning through the QR code. That is known as dynamic QR code, okay. So how the dynamic QR code will be generated? So generally when you see a lot of shops, there will be one QR code that will be put. That is not called as dynamic QR code, that is called as static QR code. I saw this tender coconut person, he is also keeping, and one chart fellow, okay, one small vehicle is having, he is also keeping. Tomorrow, everyone will keep, beggars also will keep QR codes as scan and pay, sir, you understood or not? So like that situation may happen in India. So therefore that QR code is not called as dynamic QR code, that is static QR code. What is a dynamic QR code? Dynamic QR code means for each transaction we need to enter a separate QR code, that is known as dynamic QR code. It should contain certain information, supplier GSTIN, UPI ID of the supplier, supplier's GSTIN, static or dynamic? Static. It will not change. Static means it will not change, is known as static. Dynamic means it will change. Why GSTN of the supplier will change? For every transaction, GSTN of the supplier will change. It will not change. So that's a static field. Number 2, UPI ID of the supplier. That is also a static field. Bank account and IFSC code of the supplier. That is also a static field. So these 3 are static fields. But the last 2 will be dynamic field with respect to each transaction. Invoice number and date, it will be changing, and value and tax, it will be changing. So entering these 5 data, we need to create a QR code. How to create this QR code? There are a lot of payment gateway service providers, banks, financial institutions, and third-party app developers. So they will be providing, and it will be a simple app only. You need to enter these details, click on generate QR code. One QR code will be generated, that is known as a dynamic QR code, and the payment should be collected only by scanning the dynamic QR code. Okay, so that is applicable to whom? This dynamic QR code concept is applicable to whom? Any person whose aggregate turnover during the previous year, any previous year, starting with 1718 to 2021 exceeds 500 crores. So then in that case, that person, for that person, this dynamic QR code concept will be applicable. And here there are certain exceptions. For UPI ID of the supplier, there is an exception. That is, if the payment is not collected by the supplier but collected by e-commerce operator or any other person. For example, I am selling the goods through Amazon. Payment I will not collect, Amazon will collect. In that case, whose UPI ID should be there in the QR code? Amazon's UPI ID should be there. That is this exception for UPI ID of the supplier. Then bank account of the supplier. So whenever UPI ID is connected to your bank account, means it is not a normal UPI ID. So that is a UPI ID generated by the bank that is completely connected to your bank account. Then no need to give the bank account in the QR code because UPI ID itself is sufficient. That is the second exception. Third exception, we need to enter the invoice number and date. Practically it is not possible in case of retail sales to enter the invoice number and date because it is a running number. So due to that reason, what they can do, there will be multiple counters. There will be multiple counters. Each and every counter can follow one unique way of generating. Okay. For example, counter number 1, date is a unique date. Date is a unique date that will not change because so that will not be static, that will be dynamic. So for example, so today's date is 29/3/2022. This will not change. This will, like, in the sense, like, can we get this date again? Can we get this date again? No. So is it a unique number? Yes, it's a unique number. We will not get this date again. 29/3/2022. So it's a unique number. And counter number 1001, counter number 2 100, counter number 3 so 200, like that. So they will be changing that invoices number. So therefore randomly they can generate from the series so that one don't have to check with the other person as to whether invoice number is generated or not. Okay. So therefore, what is the exception? Not required if it is a retail sales and a unique reference number is attached. And invoice amount with the breakup of tax. So here, when we are entering the invoice amount, we need to remember one important point. First of all, we are not required to generate dynamic QR code. We are not required to generate dynamic QR code if the payment is received before the generation of invoice. If the payment is receivable after generation of invoice only, then we need to give a dynamic QR code in invoice. If the payment is received before generation of invoice, see that if payment is received before or at the time of generating invoice, and cross reference of such payment received is made, then in that case we don't have to enter the details of dynamic QR code. No need to generate QR code. But what we need to give, whenever the payment is received before generating invoice, that payment will be received in one mode, debit card or credit card or UPI transfer, etc. That cross reference, if you enter in the invoice, that is sufficient. So no need to enter the dynamic QR code. Now what if part payment is received before the invoice and part payment is received after the invoice? With respect to the part payment, just give the cross reference of the payment received. With respect to the remaining payment, you need to generate a dynamic QR code. See this exception. So if part payment is received before invoice and remaining after invoice, then only the balance due should be mentioned. Okay. That is with respect to this dynamic QR code. And who are not required to generate dynamic QR code? Who are not required to generate invoice? Biggest is there na. In that minus yes plus O. Minus yes. Yes you take out. What is yes? S is a unit that you take out. O you add. O is OIDR supplier. OIDR supplier located outside India. So they are not required to generate QR code. You understood or not? That is dynamic QR code. Big toe. BIGGTOE. B for banking company, I for insurance company, G for GTA service, another G for government department or local authority, and then T same, transportation of passengers by any mode. O for OIDR supplier located outside India. Who is a OIDR supplier located outside India? Online information database access retrieval service provider. Example, Amazon Prime, Netflix, etc. or OIDR supplier located outside India, making supply to non-taxable online recipient in India. So they are not required to give dynamic QR code. First of all, are they required to register? Yes. They are required to get registered in case when you are paying for Amazon Prime and Netflix, you are not paying GST. You are just paying the money for that. Of course, where you are paying for Amazon Prime also, Telegram itself is sufficient for you. So, but generally some people will be paying for Amazon Prime and Netflix, so that 199 rupees or 999 rupees, whatever it is, on that you will not pay GST to government. That Amazon Prime or Netflix which is located outside India has to register in India and pay GST on that, and they are not required to give dynamic QR code in invoice. Okay, that is the point. And E is same, exhibition of film in a multiplex theater. So everything is same, only thing in the place of yes we need to replace O. So they are not required to give dynamic QR code. Simple?
Yes, sir.
Then invoice should be in a prescribed form. What is a prescribed form? INV1. Suppose if my aggregate turnover during the previous year does not exceed 50 crores. So aggregate turnover during any previous year does not exceed 50 crores. But I want to give e-invoice. You give. Who will not stop? See, actually you are not required to comply with the law. If you say that I want to comply with the law, comply. Good only. Okay. So then e-invoice will be auto-populated in GSTR1 and e-way bill. Now whenever e-invoice and dynamic QR code is generated, physical copy of the invoice not required. Physical copy of the invoice is not required because so in e-invoice there will be QR code now. If that is given as access to the officer to verify, that is enough. So no need to carry the physical copy of invoice. Generally invoice should be prepared in 3 copies in case of goods: original, duplicate and triplicate. Original for the buyer, duplicate for the transporter, triplicate is to the supplier, but that is not required in case of e-invoicing. Okay, for services it is only 2 copies, that is original copy and the duplicate copy. Original for the recipient and duplicate for the supplier. That is also not required in case of e-invoicing. Is it clear? That is this. Physical copy of invoice not required in case where e-invoice is applicable. QR code can be produced before the proper officer for verification when required. So with this we completed invoice and time of supply. In this the major area that is very important, if you ask me, that is the change in rate of tax. The change in rate of tax is one important area, and then this e-invoice and QR code, dynamic QR code. So this can be tested for this May 22 exam. So maybe some comment based questions, or discuss the following, like in which of the following cases e-invoice is not required. So like that they will be giving a MCQ. So anyway they can point the questions on this concept, but main important concept is e-invoice and dynamic QR code in this. So break. Why break? I am sweating, then also I am taking. If at all break, I need break. Yes, take a break for 5 minutes. Let's see what is this AC. If not, demolish this AC. Okay, we'll start with the next topic. Place of supply. So look into page number 40. Place of supply is actually, there is no logic in that. So we need to remember it like an abstract science, like a formula only, no other go. But the advantage is that if you could remember that, so in exam you will not be required to think too much. So this is the case, this is the place of supply, you can apply and arrive at the answer. Okay. So place of supply is crucial to determine whether a transaction is intrastate supply or interstate supply. Suppose if the transaction has location of supplier and place of supply in the same state, then it will be known as intrastate supply. If it is in two different states, then it will be known as interstate supply. So if location of supplier and place of supply is in the same state or same union territory, it is known as intra. If location of supplier and place of supply is in two different states, then it will be interstate. So therefore, that place of supply in case of goods is given under section 10 and 11. In case of services, it is given under section 12 and 13. If it is goods that is domestic within the country, then it will be section 10. Goods import and export, then it will be section 11. And in case of services, if both supplier and recipient are located in India, then the place of supply will be determined under section 12. And if either supplier or recipient in India and the other outside India, so then the place of supply will be determined under section 13. All these 11, 10, 12 and 13 are of which act? IGST Act. The place of supply provisions are not in CGST Act. The place of supply provisions are in IGST Act. So therefore what we need to see is that, suppose if it is section 10, then goods section 10 domestic, goods import and export section 11, services both are in India section 12, services either one in India the other outside India section 13. Okay, what if both supplier and recipient of service located outside India? Then the place of supply cannot be determined. Then what is that we need to do? We need to determine, we need to take all transactions as exempted. However, in case of transportation of goods by vessel from outside India to India, so then it will be taxable. Okay, again I am repeating, if both supplier and recipient are located outside India, POS cannot be determined. Why POS cannot be determined? Because section 12 says both are in India, 13 says either one in India, other outside India. What if both are outside India? Then POS cannot be determined, which means no GST. All services are exempted. However, only one service will become taxable. What is that one service that will become taxable? Transportation of goods by vessel from where to where? From outside India to India. In that case alone it will be taxable. So who will pay GST in that case? As supplier is outside India, recipient also outside India, who will pay GST in that case? The importer of goods. Importer of goods who is no way connected to the transaction, so he will be liable to pay GST on that particular service, that is transportation of goods by vessel. So that is this point. If both LOS and LOR are outside India, POS cannot be determined for such service and it is exempted. However, in case of transportation of goods by vessel from outside India to India, it is taxable and GST is payable by importer of such goods. Okay. Now we are looking into place of supply in case of goods section 10 and 11. Section 10 says that first, supply involves movement of goods. 10(1)(a). Supply does not involve movement of goods. 10(1)(c). Already we understood in the time of supply itself what is supply involving movement of goods. Supply does not involve movement of goods. If supply involves movement of goods, means under the contract of supply, goods are transported from one location to another location, either by supplier or recipient or any other person. The transportation can be done, but under the contract of supply, goods should move from one location to another location. Then in that case, we will take ending point of the goods as the place of supply. For example, you are located in Maharashtra, I am located in Karnataka, you place an order from me, I deliver the goods to Maharashtra. Under the contract of supply, goods are transported from one location to another location. So supply involves movement of goods. What will be taken as a place of supply in this case? Maharashtra. Ending point Maharashtra will be taken. What if supply does not involve movement of goods? If supply does not involve movement of goods, location of goods at the time of delivery will be taken as the place of supply. For example, you are from Maharashtra, you are coming to Karnataka, you make purchase of the goods and take the goods along with with you. Now supply involving movement of goods or supply does not involve movement of goods? Supply does not involve movement of goods. What will be taken as the place of supply? Where is the location of goods at the time of delivery? In Karnataka. That will be taken as the place of supply. Okay. Now, for example, there is one ship which is in Mumbai port, and I am located in Tamil Nadu, you are located in Kerala, and the ship is located in Maharashtra. Now I transfer the document of title to the ship to you. So now you became the owner of that ship. Now in this case, supply involving movement of goods or supply does not involve movement of goods? Supply does not involve movement of goods because the ship is in that same location only. So there is no movement of ship. But under the contract of supply, there is no movement of goods. Therefore, what should be taken as the place of supply? Location of goods at the time of delivery. What is the location of goods at the time of delivery? Maharashtra, Mumbai port. So that should be taken as the place of supply. So therefore 10(1)A, supply involves movement of goods, ending point. 10(1)C, supply does not involve movement of goods, so location of goods at the time of delivery. Next, 10(1)B talks about bill to ship to transactions. Bill to ship to transactions means that, so I am asking my supplier to deliver the goods to you, but the bill will be raised to me. Now in this case, between my supplier and me is only the privity of contract. So then what will be taken as the place of supply? It is the billing address taken as place of supply. Now thereafter I will raise invoice to you. You are my shipping address, correct or not? Yes. So I will raise invoice to you. When I raise invoice to you, so then the place of supply will be determined either as per 10(1)A or 10(1)C. Okay. So in bill to ship to transaction, there will be two supplies. Number one, between the original supplier and the billing address. Number two, between billing address and the shipping address. For original supplier to billing address, place of supply is determined under 10(1)B, whereas billing address to shipping address, the place of supply will be determined under section 10(1)A or 10(1)C. Okay, so that is with respect to this. Then 10(1)D, when goods are assembled or installed at site, in that case we will be taking the location of such installation. For example, I am a manufacturer of one generator. So now, or one dealer of generator, I am located in Mumbai, Maharashtra. You are also located in Mumbai, Maharashtra, but you have a branch office in Karnataka. So therefore you ordered me to give the product in Maharashtra. I delivered the generator in Maharashtra. Now you arrange the transportation from Maharashtra to Karnataka. Now you are asking me to do the installation in Karnataka. Whether this is a case of supply involving movement of goods, or supply does not involve movement of goods, or installation at the site. So here actually this is supply does not involve movement of goods. Why supply does not involve movement of goods? I handed over to you where? In Maharashtra itself. Now you are only transporting the goods. Mean the supply is over in Maharashtra itself. So supply does not involve movement of goods. Then what will be taken as place of supply? Maharashtra itself. Location of goods at the time of delivery, Maharashtra, that will be taken as the place of supply as per 10(1)C. But as per 10(1)D, these goods are required to be installed in Karnataka. Then if you take 10(1)D, what will be taken as the place of supply? Location where the goods are installed. Where is it installed? In Karnataka. Then Karnataka will be taken as the place of supply. Because of this, we have two contradicting provisions. 10(1)C also there, 10(1)D also there. Which we need to prefer? We need to prefer specific over general. Therefore, what is the specific provision here? So installation at site is a specific provision. Supply does not involve movement of goods is a general provision. So in this example of mine, so we need to take location of installation only as the place of supply, that is Karnataka. Okay. So 10(1)D is a specific provision, 10(1)A,B,C is general provisions. So whenever there is goods assembled or installed at site, apply 10(1)D only, and you need to take location where the goods are installed as the place of supply. Then 10(1)E, supply of goods on board a conveyance. So whenever the goods are sold during the journey, so during the journey, so in flights and a lot of products will be sold by air hostess. So air hostess will be pulling the trolley. So headsets, power bank, lot of perfumes, wristwatches, whatnot, everything they will be selling. So now in that case, what will be taken as a place of supply? Will they peek into the window and see which place it is and then determine place of supply? No. So it will be taken as the starting point of the goods. Location where the goods are boarded into the conveyance will be taken as the place of supply. For example, if a flight is going from Delhi to Mumbai, Mumbai to Karnataka, Bengaluru. Okay, Delhi to Mumbai, Mumbai to Bengaluru. Now in that case, the goods are loaded in Mumbai. You are traveling from Delhi to Bengaluru. Now what will be taken as the place of supply for the goods which are sold? Mumbai. Mumbai. That is the location where the goods are boarded. So even though the flight is starting from Delhi, but where the goods are boarded, Mumbai. So that will be taken as the place of supply. Okay. So total 5 points. 10.1a, supply involve movement of goods at ending point. Supply does not involve movement of goods. 10.1c, location of goods at the time of delivery. Bill to ship to transaction, billing address. Between the original supplier and the billing address, billing address. Billing address to shipping address again to be determined as per 10.1a or 10.1c. Then next 10.1d, installation or assembly at site, location of such installation or assembly, and 10.1e, supply of goods on board a conveyance. So we need to take starting point of the goods. So that is in case of section 10, domestic transactions. In case of section 11, if it is import, location of importer will be taken as a place of supply. What is the meaning of import? Bringing goods from India outside, like bringing goods into India from outside India is known as import of goods. In case of import of goods, what should be taken as a place of supply? Location of importer should be taken as place of supply. Why we need to determine place of supply? Anyhow, it is interstate supply. Import of goods and export of goods are always interstate supply. IGST payable. Then why the hell we need to determine place of supply in that case? Because depending upon the state where importer is located, out of that IGST 50% will go to that state. That's the reason why we need to determine the place of supply. So what will be taken as place of supply in case of import of goods? Location of importer. In case of export of goods, what will be taken as a place of supply? Location outside India. What is export of goods? Taking goods from India to a place outside India is known as export of goods. What will be the place of supply in that case? Location outside India will be taken as the place of supply. So this is with respect to this. Okay, and here I gave that in case of conflict between 10.1a, b, c over 10.1d or e, so 10.1d or e shall prevail because specific provisions, d and e are specific provisions. D is assembly or installation at site, e is supply of goods on board a conveyance, so that will prevail over the general provisions. Okay. Then next, suppose if it is services, we have two sections, 12 and 13. So what are the factors that we need to check? First, you need to check location of supplier and location of recipient. If both are in India, which section will be applicable for determining place of supply for services? Section 12. If either one in India and the other outside India, which section will be applicable? Section 13. Now what we need to do is that for every service, for every nature of service, we need to see if it is 12, what is the place of supply? If it is 13, what is the place of supply? Rather than learning this separately for 12 and separately for 13, we will be learning it together. Okay, so first, service in relation to immobile property. What are the examples of service in relation to immobile property? Architect services, interior decoration services, construction services, then renting of immobile property services, accommodation services, etc. So in all these cases, what will be taken as the place of supply? Suppose if it is section 12. Section 12 means what both are in India, we will see location of immobile property. And what if the immobile property is outside India? Then we will take location of recipient as the place of supply. Suppose if it is section 13, always location of immobile property will be taken as the place of supply. Let's try to understand this with example. For example, there is an architect who is located in Bengaluru, Karnataka. Let's fix that place. Okay, Bengaluru, Karnataka architect is located. So now in this case, so immobile property is located in Dubai. Recipient is also located in Karnataka. Okay, recipient is located in Karnataka, supplier is located in Karnataka, but the immobile property is located in Dubai. What will be taken as the place of supply? The place of supply will be location of recipient, Karnataka, because we need to take immobile property now. But if immobile property is outside India, so we need to take location of recipient. First we need to apply 12 or 13. We need to check 12. We need to apply. Why 12 we need to apply? Both supplier and recipient are in India, so 12 needs to be applied. But immobile property is outside India, so location of recipient will be taken as a place of supply. What if the immobile property is somewhere in Kerala? Supplier in Karnataka, recipient in Karnataka, but the immobile property is in Kerala. Then what will be the place of supply? Kerala will be taken as the place of supply. Okay. Then suppose if the supplier is in Karnataka, recipient is outside India, Australia. Supplier in Karnataka, recipient in Australia, immobile property in Dubai. What will be taken as the place of supply? 12 or 13? Section 13 should be taken. As per section 13, always location of immobile property will be taken as the place of supply. Where is that immobile property located? The immobile property is located in Dubai. Sir, but it is outside India. Let it be. It is not 12. For 13, always we will take location of immobile property. Is it clear or not? So like this, we need to determine the place of supply. Next, suppose here nature of supply they are asking. So for what we are discussing is the place of supply. First we will complete the place of supply, then we will determine nature of supply depending upon the location of supplier, location of recipient and place of supply. First we are discussing the place of supply point. Okay, so service in relation to immobile property. For service in relation to immobile property, what should be taken as place of supply? First we need to see if it is 12 or 13. If it is 12, immobile property is in India, location of immobile property. If immobile property is outside India, then location of recipient. If it is 13, always location of immobile property. Then next, performance based service, and this location of immobile property including accommodation. For accommodation also the same point will be applicable, and even for accommodation in a houseboat or vessel also same point will be applicable. Houseboat or vessel is not immobile, but for all accommodation also the same point will be applicable. Then in the absence of specific provisions, we will be applying general provisions. Wherever we have specific provisions, that specific provisions will be taken. Wherever we don't have specific provisions, then the general provisions will be applicable. So what is the general provisions? If it is section 12, in case of B2B, location of recipient, that is the address for which they have obtained a registration, location of recipient. If it is B2C, location of recipient in the records of the supplier. Suppose if location of recipient not available in the records of the supplier, then location of supplier will be taken as the place of supply. If it is 13, simple, location of recipient in the records of supplier. In the absence of that information, location of supplier will be taken. Okay, for example, I will tell you, say you are going on a highway and your vehicle got broke down. Okay, so breakdown of the machine, breakdown of the vehicle, you will be searching in a Google for the nearest pit shop. So you are calling one person. So one person is coming and doing the repair, collecting some money, and he is going. Now in this case, first of all, it is section 12 or section 13. Section 12 only. Supplier of service is in India, recipient of service is in India. And then B2B or B2C. It is B2C. You are unregistered. So B2C. So B2C. So whether recipient data is available in the supplier records? No. Because in a highway, will they do come and repair, or will they say which place you are from? You are, what is your place of supply? Will that and all they are determined? No. So therefore there is no location of recipient in the records of the supplier. Therefore location of supplier itself will be taken as the place of supply. You understood or not? In the absence of details of the recipient, location of supplier will be taken as the place of supply. Okay. For example, you are all coming here and by paying 500 rupees you are sitting and attending the class here. Correct? So now I don't know what is your location I really don't know, because actually you have transferred money to me only. Yes, you have transferred money. They gave one bank details, na? So that bank details is our office bank details only. So you transfer that 500 rupees to us only, but I really don't know what is your location. So therefore what will be taken as the place of supply? Location of supplier will be taken as the place of supply. So everything will be intrastate supply only. You understood or not? Then like that. So therefore general provisions, come on, repeat. So multiple times we need to repeat this. Okay, you are also going to repeat along with me. Online students also you repeat, whether your parents will think otherwise or not, also you repeat. You understood or not? So first, general provisions, section 12, what should be taken? B2B, location of recipient. B2C, if location of recipient available in the records of the supplier, location of recipient, otherwise location of supplier. In case of section 13, location of recipient. See, in case of 13 there is no B2B, B2C classification. In case of section 13, B2B, location of recipient. So if that is in case of 12 only, in case of 13 that case is not there. So other case is there. What is that? Location of recipient in the records of supplier. In the absence of location of recipient in the records of supplier, location of supplier will be taken. Then second point, service in relation to immobile property including accommodation service. Section 12. Immobile property is in India. Come on. Location of immobile property. If immobile property is outside India, the location of recipient. In case of section 13, always location of immobile property. So these 2 points we have completed. Then performance based services. Performance based service in relation to individuals. So performance based service in relation to individuals, and the next one is performance based service in relation to goods. Okay, performance based service in relation to individuals means the recipient is an individual. So we need to see what is that service. If it is food and beverages or beauty related services, we need to take performance based, like location where the service is actually performed. For example, there is one CTR, those are hotel, correct or not? When I go there, will he ask, sir, you are from which place? So how are you? All these things he will not ask. He will ask what you need. I need one dosa, like that I will ask. Okay, penne masala dosa. Okay, so I ask that. So he will deliver that. So therefore, why he will not ask me the location? Because what will be taken as the place of supply? Location where the service is actually performed. That's why always restaurant service will be CGST, SGST only, intra-state supply. Because location where service are actually performed. Then you go to a beauty parlor. So will they ask you are from which location? All these things? No, because they are also location where service are actually performed. Is it clear or not? Then second point, training and performance appraisal services. Training and performance appraisal services, we have B2B, B2C classification. In case of B2B, location of recipient will be taken. In case of B2C, location where service are actually performed. So now, what I am doing will come under a training. Yes or no? Yes. Yes. So we will classify that into training. Suppose if it is training and performance appraisal, B2B or B2C? B2C. What will be taken as the place of supply? Location where service are actually performed. Where is it performed? In Bengaluru, Karnataka. That will be taken as the place of supply. You understood or not? So in case of training and performance appraisal, B2B, location of recipient, B2C, location where service are actually performed. Apart from this, any other services, performance based service in relation to individual, we will be taking general provisions. Okay. Now, in case of section 13, you see whether physical presence of the recipient required, whether physical presence of the recipient not required. So for example, I am carrying out a cosmetic surgery on your face. Now in this case, so whether physical presence of the recipient required or not? Definitely required. Otherwise online how will I take? So take the knife, cut your face, like that I cannot tell now. So therefore in this case physical presence of the recipient required. So what will be taken as a place of supply? Location where service are actually performed. If physical presence of the recipient not required, then general provisions. Okay. So now can you tell me performance based service in relation to individual? Come on. In case of 12, 3 points. Food and beauty related. Location where service are actually performed. Then number 2, training and performance appraisal. B2B, location of recipient. B2C, location where service are actually performed. Any other case it is general provisions. Whereas in case of section 13, physical presence of the recipient required, location where service are actually performed. Physical presence of the recipient not required, so general provisions. Okay. And then the next one is performance based service in relation to goods. Examples of performance based service in relation to goods is, repair and maintenance services, technical service or inspection, etc. So all these will come under performance based service in relation to goods. If it is 12, we don't have any specific provisions in 12. So therefore general provisions. In case of performance based service in relation to goods, we don't have any specific provision under 12. So that's the reason why we go for general provisions. In case of section 13, again same, physical presence of the goods required. Physical presence of the goods not required. If physical presence of the goods required, then location where service are actually performed. If physical presence of goods not required, location of goods. For example, I am carrying out some repair services. So when I am carrying out the repair services, I am going to Germany to do the repair service in Germany. So now whether physical presence of the goods required or not? Yes. So what will be taken as a place of supply? Location where service are actually performed, that is Germany. Suppose if I am sitting here and by taking a remote connection, I am doing the repair to that vehicle. Then what will be taken as the place I am taking the connection and I am doing repairs to that particular machinery in Germany. Then what will be taken as the place of supply? Location of goods at the time of providing service. What is the location of goods at the time of providing service? Germany. So Germany will be taken as the place of supply. Therefore, in case of section 13, performance based service in relation to goods, can you tell me the provision? Come on. So services, physical presence of the goods required, location where service are actually performed. Physical presence of the goods not required, location of goods. Location of goods. Okay. Now in this case we have 3 exceptions. Physical presence of the goods required, we have 3 exceptions in this case. Okay. What are those 3 exceptions we are trying to understand? So now they have made it as 4 exceptions. Previously we had 3. That 4th one is simple only. That is, if goods are temporarily imported for carrying out repairs or any other process and exported after repairs, so generally what will be taken as the place of supply. Okay. For example, you see this. So I am located in Maharashtra. Okay. There is a consulting engineer there is a consulting engineer. That consulting engineer is located in Maharashtra. And so from Germany, okay, so XYZ Incorporation, Germany, XYZ Incorporation, Germany is sending a missionary to the consulting engineer in Maharashtra. Okay, so to this particular missionary, so this consulting engineer is carrying out the repairs, and after repairs of this missionary, it is exported back. Okay, it is exported back. So import of machinery, carried out repairs, and it is exported. Now it is performance based service in relation to goods or not? Yes, it is performance based service in relation to goods. What should be taken as the place of supply? In case of performance based service in relation to goods, section 12 or section 13? Section 13, one in India, the other outside India. So what will be taken as the place of supply? So we will be taking location where services are actually performed, because physical presence of the goods required. When physical presence of the goods required, then location where services are actually performed. Where the service is actually performed, Maharashtra, that will be taken as the place of supply, but it will never become export of service. Why it will not become export of service? In order to become export of service, there are 5 conditions that should be satisfied. So export of service, 5 conditions should be satisfied. Number 1, where the supplier should be. Where the supplier should be in export of service, India. Number 2, where the recipient should be. Recipient should be outside India. And what should be the place of supply? The place of supply should be outside India. And how the consideration should be? The consideration should be in convertible foreign exchange. Okay, the consideration should be in foreign exchange, or wherever it is permitted, it can be in Indian rupees, that is to Nepal and Bhutan. Okay, Nepal and Bhutan. If the service is to Nepal and Bhutan, it can be in Indian rupees. Number 5, supplier and recipient are not two establishments of the same person. Okay, supplier and recipient are not two establishments, of same person. Okay, if these 5 conditions are satisfied, then it will be known as export of service. Okay, in this case, if you take place of supply as the location where service is actually performed, what will be taken as the place of supply? Maharashtra. Location of supplier, Maharashtra, first condition fulfilled. Location of recipient, Germany, second condition fulfilled. But the place of supply should be outside India, but the place of supply is in India. So therefore it will not become export of service. But mainly here they wanted it to become export of service. So for this they are giving an exception, which are telling that the place of supply is not location where service are actually performed, but the place of supply will be location of recipient. What is the location of recipient? Germany. So it will qualify for export of service. Supplier in India, recipient outside India, place of supply outside India, consideration is in foreign exchange, supplier and recipient are not two establishments of the same person. So in this case it will become export of service. Mainly to make it export of service only, they are telling that the place of supply will be location of recipient. Okay, actually the point is location where service are actually performed, but this is exception number 1. When exception number 1 will be applicable? When goods are temporarily imported for carrying out repairs or any other process and exported after repairs or any other process, then the place of supply will be location of recipient. What if it is not exported after the process or after the repairs? Then we will take location where service are actually performed only. The exception 1 is applicable when goods are temporarily imported for carrying out repairs or any other process and exported after repairs or process, then only it will be location of recipient, place of supply. Otherwise it will be location where services are actually performed. Please try to understand the basic provision is place of supply will be location where services are actually performed. We have 4 exceptions. In these 4 exception cases, location of recipient will be taken. If that exception is not applicable, then location where services are actually performed only will be taken. In that one exception is this. Can you please repeat that one exception again? Please. If services provided in relation to goods, performance based service in relation to goods. And what is the exception number 1? Goods are temporarily imported for carrying out repairs or any other process and exported after repairs or process, we will take location of recipient as the place of supply. Then another exception is there. If goods are imported for carrying out any chemical examination or test, with respect to pharmaceutical industry. So there are some drugs or medicines which are imported into India for carrying out the test. Next, in that case, we will take location of recipient as the place of supply, but not location where service are actually performed. Why can't in the case of second exception? So we can merge in the first exception. In the first exception, the goods are to be taken outside India after repairs or process. But in the second exception, the drugs after testing will get destroyed. So the drugs will not be sent back. Even though you are not sending it back, but it will be treated as in a location of recipient as the place of supply. And here one more condition is there. The other conditions of export of service should be fulfilled, which means that supplier should be India, recipient should be outside India, and consideration should be in foreign exchange, and supplier and recipient are not the establishments of the same person. Then location of recipient will be place of supply. Okay. Then third exception, repair and maintenance in relation to aircraft or its parts used in the business. Say for example, one Lufthansa Airlines is coming into India. So they are having an aircraft which is into business, correct or not? So now with respect to that Lufthansa Airlines, you provided the repair services. So actually it is performance based service in relation to goods, and we need to take location where service are actually performed, but it comes under the third exceptions where we will take location of recipient. Lufthansa Airlines outside India, so that will be taken as the place of supply. Now this airlines point is extended for vessels. Okay, that airlines whatever is there, aircraft point is now extended for vessels. That is the amendment. Maintenance, repair and overall service in relation to ships and other vessels or its parts used in the course of furtherance of business. Okay, so now four exceptional cases, we will not take location where service are actually performed, but we will take location of recipient. So what are those four exceptional cases? Number one, goods temporarily imported for carrying out repairs or any other process and exported after repairs. Number two, in case of drugs imported for carrying out testing. And number three, repairs overall service in relation to aircrafts or its parts used in business, and repairs or overall service in relation to vessels or its parts used in business. Okay, in these four cases, location of recipient will be taken as the place of supply, otherwise location where service are actually performed. Actually these four exceptions are only in case when physical presence of the goods is required. When physical presence of the goods is not required, always location of goods will be taken as the place of supply. Okay. Now up to this I want you to repeat. Come on, general provisions. So general provision section 12, B2B location of recipient, B2C location of recipient in the records of the supplier. If not available, then location of supplier. Section 13, location of recipient in the records of supplier. Otherwise location of supplier will be taken. Then in case of service in relation to immobile property including accommodation services. Section 12, if immobile property is in India, location of immobile property. If immobile property is outside India, location of recipient. Section 13, it is always location of immobile property. Then performance based service in relation to individual. So food and beverages, beauty treatment, location where service actually performed. Training and performance appraisal, B2B location of recipient, B2C location where service actually performed. Any other case, general provisions. In case of section 13, physical presence of the individual required, location where service actually performed. Physical presence of the recipient not required, general provisions. Performance based service in relation to goods. In case of section 12, we don't have specific provisions, so general provisions. In case of section 13, physical presence of the goods required, so then location where service are actually performed. In four exceptional cases, it will be location of recipient goods temporarily imported for carrying out repairs or any other process and exported after repairs or process without being put to use in India. And number two, pharmaceutical industry testing carried out if all other conditions of export of service is fulfilled. Repair, maintenance and overall service in relation to aircraft or its parts used in business. Repair, overall or maintenance service in relation to vessel or its parts used in the business. And in case when the location of the goods, like the performance based service in relation to goods, the physical presence of the goods is not required, we will take location of goods. Clear? Yes, this way you should be able to reside in your mind. You understood or not? Till the time you go for exam. Multiple times you need to revise this and go for exam. Very, very important, because in Jan 21, for 9 marks they have asked different situations, what is the place of supply, like that. Okay. So therefore, place of supply is an important area at final level, definitely. Okay, we'll start here. See that event related services, page number 41. So we completed up to performance based service in relation to goods. The next area for our discussion is event related services. So there are two aspects in this: admission to an event, organizing an event. For admission to an event, location where the event is held. For organizing an event, we need to see whether it is B2B or B2C. B2B, location of recipient. B2C, location where the event is held. Suppose if the event is held outside India, then we will take location of recipient as the place of supply. This is in case of section 12. In case of section 13, let it be admission to an event or organizing an event. Location where the event is held will be taken as the place of supply. For example, so there is a person, one event manager, who is conducting a marriage function. The marriage function is conducted in Dubai. Supplier is event manager Karnataka. Recipient also Karnataka. But where the function is held in Dubai, what will be taken as the place of supply in this case? Section 12 or section 13? Section 12. B2B or B2C? Definitely B2C, because the recipient is unregistered. Then what will be taken as the place of supply? Location of recipient. Why location of recipient? Because the marriage function is held in outside India. So location of recipient will be taken. Is it clear or not? Then another case, say there is one producer of a movie. That producer of a movie wanted to conduct a pre-release event somewhere in China. Okay, so then in that case, so event manager is, that is event organizer, is in India, and recipient producer of the movie is also in India, but welcome back friends. Sorry for the inconvenience. Hey, it's okay, come on. You don't have to be. And today we will be extending the session. So whatever the 2 hours, 3 hours that we lost, we will extend it. So be prepared rather than extending it tomorrow. To be frank with you, actually today I thought I will complete the class by 5:45 and catch up to one movie, Kashmir Files. I planned really like that. I planned and I booked the ticket. I asked them to book the ticket also in that Orion Mall. There is one, not Orion Mall, this is Mantri Mall. Mantri Mall. And then after this, no, I will not go to movie. I will take the class because this is first. I thought I will complete and I will go, but this, so I asked them to cancel the ticket or someone to go with the ticket. Sir? After class we can project it. Why you have the movie? Piracy. That's what I was referring. Telegram, everything is only that movie or others also? Okay, fine. So, fine. So I will come back to the discussion. So today we have to complete whatever the portion that is scheduled for. And look into this. So we completed up to performance based service in relation to goods, and thereafter we have event related. This is where I have started with and the power went off. So event related, we have two aspects in section 12, that is admission to an event, organizing an event. Admission into an event, location where the event or place is there, so that will be taken as the place of supply. So for example, it can be a theme park, water park, anything, so we need to see the location of that event or location of that particular park, wherever it is. So that should be taken as the place of supply in case of entry tickets. Whereas in case of organizing an event, we will see location of event. But suppose if the event is outside India, we will be taking location of recipient as the place of supply. That is about 12. In case of 13, let it be admission or organizing the event, always location where the event is held. So usually there is a trend that this pre-release events or award functions etc. will be conducted outside India. Say for example, somewhere in Singapore or Malaysia the event is conducted, say some Filmfare event is conducted there, and supplier is also located in India, recipient, the person who is buying the ticket, is also in India, but the event is located outside India. What will be taken as the place of supply? The location where the event is held only will be taken, because for admission don't see where the event is held. Let it be in India or outside India, location of event only we will take. Only for organizing an event we will see. Suppose if the event is in India, location of event. If the event is not in India, then location of recipient. And in case of section 13, let it be admission or organizing an event, always location where the event is held. Then in case of transportation of goods, so first we need to see section 12. Here check whether it is India to outside India. If it is India to outside India, we need to always take ending point of the goods. Suppose if it is other than India to outside India, means what? Other than India to outside India means outside India to India or within India etc. Then only B2B, B2C classification will come into the picture. So but this is the place where students generally make a mistake. Suppose if it is B2B, they will think location of recipient. For example, there is one transporter. That transporter is transporting goods from Karnataka to Pakistan. Okay, now in this case what will be taken as the place of supply? If it is B2B, Pakistan only. So because from India to outside India, always ending point of the goods should be taken. Don't see whether it is B2B or B2C. This B2B versus B2C you need to see in which place? Only when it is other cases. So that is other than India to outside India. All other cases we need to see B2B, B2C. So in case of B2B it is location of recipient, B2C it is starting point of the goods. For example, goods are taken from Karnataka to Tamil Nadu. What will be taken as the place of supply? B2B, location of recipient. B2C, starting point. Karnataka will be taken as place of supply. Please be careful with respect to that. In case of India to outside India, it is always the ending point of the goods. Let it be B2B or B2C. Whereas in other cases, it will be starting point of the goods. Then, in case of section 13, we need to see whether it is mail or courier or other than mail or courier. If it is mail or courier, general provisions. Other than mail or courier, ending point of the goods. For example, FedEx is one courier agency located outside India, and that courier agency located outside India, parcel is being sent from India to outside India. What will be taken as the place of supply? Outside India, ending point. Correct or not? Yes. No, wrong. In case of mail or courier, it is general provisions that will be taken. Okay, other than mail or courier only, it will be ending point. So, I said FedEx is a courier, so courier will be what? General provisions. So whether it is India to outside India to India, or whatever it is, we will always take general provisions. What is general provisions? Location of recipient in the records of supplier. If that is not available, location of supplier. But that problem will not be there in courier agency, because definitely we will give the address. You understood or not? Whereas if it is other than mail or courier, then only we need to take ending point of the goods as the place of supply. This is in case of transportation of goods service. In case of transportation of passenger service, B2B we need to take location of recipient, B2C we need to take starting point of the passenger. Okay, and in case of section 13, we don't have B2B, B2C classification, so starting point of the passenger. If you see here, it is equal. So section 13 and 12, both cases it is same in case of transportation of passengers. But in case of transportation of goods, actually it is different. Starting point, ending point. Can you appreciate the difference? So in case of goods, section 12, it is starting point of the goods. Only in one case it is ending. What is that? India to outside India. Whereas in case of section 13, always it is ending point of the goods. Whereas in case of transportation of passenger service, 12 or 13, it is always starting point of the passenger. So here we need to be careful with respect to this, because in case of any services By way of transportation, we will take starting point of the passenger. But service is on board a conveyance, we will take starting point of the conveyance. Both are same only? No. Because in case of transportation, starting point of the passenger, here starting point of the conveyance. Suppose if a conveyance is starting from Bangkok, if a conveyance is starting from Bangkok and then it is going to Mumbai and then it is going to Chennai and the passenger boarded in Mumbai, now what will be taken as the place of supply? Mumbai will be taken as the place of supply for the ticket from Mumbai to Chennai. Is it clear or not? Whereas during this Mumbai to Chennai, if any service is provided during the journey, then for that what will be taken as the place of supply? Bangkok will be taken, because starting point of the conveyance will be taken. So what services will be provided during the journey? It can be video on demand services, or it can be beauty treatment services during the journey that will be provided. For that we need to take starting point of the conveyance. Then next, OIDR services. In case of online information database access and retrieval services, example I told you, Netflix, Amazon, etc. In that case, for 12 we don't have any specific provision, so general provisions. In case of section 13, location of recipient will be taken as the place of supply. Okay. Then banking and other financial services, general provisions, because we don't have specific provision. But if it is section 13, we will be taking location of supplier. Suppose if the service is provided to account holders, very important point. If the service is provided to account holders, then location of supplier. If the service is provided to other than account holders, then general provisions. Is it clear or not? So this point, based on this point, in July exam they tested one question. Okay, if service are provided to account holders of the bank, then it will be location of supplier. Otherwise, general provisions will be applicable. Okay. So that is in case of section 13. For example, there is a bank outside India. So that bank outside India, you have taken a loan in India from that bank. Now you have an account with that bank. Now what will be taken as the place of supply? Location of supplier, that is outside India only will be taken. Then in case of intermediary services, who is an intermediary? There is some normal transaction. One main supply is there, sale of goods or sale of supply of services. So now you are facilitating or arranging the transaction. So for example, you are acting as a commission agent or you are acting as a consignment agent. So then you will be called as an intermediary. So there is a main supply and there is an ancillary supply provided by you. You are facilitating or arranging transaction in securities. So regarding that, they gave one circular that outsourced activities will not be treated as intermediary services, because a lot of BPOs have said that. So in case of BPO services, location of supplier should be taken, but actually BPOs are what? So they are just doing the outsourced work. They are not called as intermediaries. So therefore that will be not coming under intermediary services, because there was a big dispute between GST department in Karnataka and lot of BPOs in Karnataka stating that BPOs will come under intermediary service. So they are providing services to whom? Their clients outside India, correct or not? In that case, what will be taken as the place of supply? Location of supplier will be taken as place of supply. What is intermediary service? Please see section 13, location of supplier will be taken as the place of supply. So then it will never qualify for export of service, even though they are receiving money in convertible foreign exchange, correct or not? So due to that reason, so a clarification is clearly given that intermediary means the one who facilitates or arranges transaction, but he is not someone to whom you outsource the work. So actually BPOs are the units to whom we outsource the work. So they will not come under intermediaries. They are providing normal services. General provisions is applicable. So location of recipient will be taken as place of supply. So therefore recipient is outside India, place of supply outside India, it will qualify for export of service. So mainly for that they gave the circular meaning of intermediary. Please have a look into that. An intermediary is someone who arranges or facilitates the supply of goods or services or securities between two or more persons, wherein two of them transact in supply of goods or services or securities, and the one who is arranging or facilitating the transaction. Okay, so therefore outsourced activity will not come under intermediary activities. Okay, so please write down there, note outsourced activities. Outsourced activities do not fall under intermediary services. Do not fall under intermediary services. Okay, outsourced activities do not fall under intermediary services. Then next, so come back. In case of intermediary services, what should be taken as the place of supplier? Location of supplier should be taken. Then hiring of a means of transport. Hiring of a means of transport means renting. So in case of hiring of means of transport for section 12, we don't have any provision, so general provision. In case of section 13, they are telling if it is aircraft or vessel, general provisions. If it is other than aircraft or vessel, and if it is given on rent up to a period of 1 month, then it will be location of supplier. Otherwise, again general provisions will be applicable. See this, aircraft or vessel, general provisions. Others up to 30 days. Okay, hiring of a means of transport up to a period of 30 days, location of supplier. More than 30 days means general provisions. Then telecommunication services including broadband and DTH services. For section 13 we don't have any provisions, so general provisions. For 12 only we have provisions. Now, what are the various ways in which the telecommunication service or broadband or DTH can be provided? Either fixed line or mobile. When it comes to mobile, again it can be prepaid or postpaid. If it is fixed line, don't see anything, just see location where the equipment is installed. For example, in case of landline, so location where the landline is installed. In case of broadband, location where the modem is installed. In case of DTH, location where the setup box is installed. So don't see any address, etc. So location where the equipment is installed will be taken as the place of supply. If it is prepaid, so then again it is divided into two. Okay, so postpaid, prepaid. So I'm talking about mobile. Fixed line, always location where the equipment is installed. If it is mobile, prepaid or postpaid. So prepaid again divided into two. Suppose if it is through a dealer. So if it is through a dealer, then the dealer's address. Okay, wherever the dealer is, so the dealer's address will be taken as the place of supply. If it is online recharge, then general provisions. But majority of the cases we do online recharge only, so general provisions will be applicable. If it is postpaid, postpaid billing address. Don't see where we are using it. So we will always take the billing address. Okay, so billing address that is given will be taken as the place of supply. This is in case of telecommunication service. But for 13 we don't have any provisions, so general provisions will be applicable. Now this is about the summary of place of supply of services, and now what we need to understand is that I want you to look into that and give me certain analysis which I am asking. So first, do we have B2B, B2C classification in case of section 13 anywhere? No. So in case of section 13, please, so far you were into the passive mode, now become into active mode. So see that and tell me anywhere in section 13 whether you can find B2B, B2C classification. No, you don't have. Then in case of section 12, we have B2B, B2C classification only with respect to few activities or few services. Search and tell me what are the activities or services where we have B2B, B2C classification. Number 1, general provisions. Very good. Number 2, that is training and performance appraisal services. Number 3, organizing an event. Organizing an event, not admission to an event, organizing an event. Then transportation of goods, transportation of passengers. These 4 places only you can see B2B, B2C classification. Correct or not? Just register in your mind. The B2B, B2C classification is applicable only in 4 places, because that will put a pressure on you in the exam. B2B or B2C, like that you will be thinking. Simple. B2B, B2C applicable only in 3 cases. That first general also you leave. General anyhow it is applicable only in 3 cases. What are those 3 cases? Training and performance appraisal, transportation of goods or passengers, organizing an event. Quickly you write somewhere. Okay, so that is B2B versus B2C classification applicable only in 3 cases. I gave some notes. In the end, some space I have given for this purpose only. You write down in page number 45. So some space is there, there you write down. So that is the analysis. So that this you can register in your mind. So B2B versus B2C classification is applicable in the following cases under section 12. B2B versus B2C classification applicable in following cases under section 12. Okay. So what is that? What is that? B2B versus B2C. B2B versus B2C. Only in three cases. Number one, that is, training and performance appraisal. Training and performance appraisal. Of course, general provisions is there, but that is, okay, fine. We can easily remember that. So, training and performance appraisal. And number two, that is organizing an event. Organizing, not admission to an event, organizing an event. And number three, transportation of goods or passengers. So only when you see these three services, okay, so then only you need to think about B2B or B2C. Other places you should not think about B2B, B2C. So transportation of goods or passengers, these three places only you need to think about B2B versus B2C. Okay, easy. Yes. Then next, so you search in section 13. Anywhere can you find location of supplier as the place of supply. In 12, nowhere you will find location of supplier as the place of supply except for general provisions. Correct or not? In 12. In 12, nowhere we have location of supplier as the place of supply. 12. You search, you will not find. Only in general provisions you will find. But in case of section 13, three specific cases, you will find location of supplier as the place of supply. Tell me, what is that? So only in case of section 13 that will be. So that is location of supplier is place of supply under section 13. What are those three cases? Number one, banking services, and in that only if provided to only to account holders. Correct or not? Only to account holders. If it is other, then it is general provisions now. Correct or not? And number two, it is intermediary services. In case of intermediary services, also location of supplier is place of supply. And number three, so that is in case of hiring of other than aircraft or vessel. Hiring of means of transport means hiring of motor vehicles, hiring of vehicles other than aircraft or vessel. Up to what period? Up to a period of 30 days. So then in these three cases alone, location of supplier will be taken as the place of supply. Okay, so this is what you need to remember. Understood or not? And therefore you will not get confused with respect to these cases where you need to apply B2B, B2C, where you need to take location of supplier as the place of supply. So now this analysis is required. So once you determine what is the place of supply, the next aspect that we need to know is the nature of supply. Okay, so what is the nature of supply? To know the nature of supply, we need to know about the transactions, whether import of service or export of service it becomes. So due to that reason, so location of supplier, location of recipient and place of supply determines whether it is an intrastate supply or interstate supply. First, we will try to learn what is the meaning of export of services. Export of services, already we know the conditions. So what is the meaning of export of services? Location of supplier, location of recipient, place of supply, and then consideration, and then one more condition is also there. Okay, so location of supplier should be India, place of supply should be outside India, location of recipient should be outside India, and consideration will be in what? Suppose if it is Nepal or Bhutan, so then how the consideration can be? It can be in foreign currency or it can be in rupees. Whereas if it is other countries, how the consideration should be? In case of other countries, the consideration should be in foreign currency. Then supplier and recipient are not two establishments of same person. Okay, So if all these conditions are satisfied, then it is export of services, and export of service will be treated as zero rated supply. Export of service treated as zero rated supply. Whenever it becomes zero rated supply, there are two options available. What are the two options available in case of zero rated supplies? So number one, pay IGST and get refund of that IGST paid. For paying that IGST, we can use the input tax credit. Option two, don't pay any IGST, export upon without payment of IGST, or supply to SEZ without payment of IGST under bond or LUT and get refund of the ITC paid. Okay, so there are two options available in case of zero rated supply. This is in case of export of services. Then what is the meaning of import of services? All these are there. All these are there in taxable event under GST, but I am just writing it again for you to understand. Okay, so what is the meaning of import of service? So tell me where the supplier could be, where the supplier could be, where the recipient could be, and what could be the place of supply. Just three conditions, just three conditions only. So location of supply, import of services, where the supplier will be outside India. Location of supplier will be outside India, location of recipient will be in India, and place of supply will be in India. Then it will be treated as import of services. Import of services always deemed interstate supply, chargeable to IGST under RCM, okay, reverse charge mechanism. So now the next aspect that we need to know is deemed interstate supply. What are considered as deemed interstate supplies under GST? So that also we need to know. First I have discussed what is the meaning of export of service, then I have discussed what is the meaning of import of service, then I am discussing what are considered as deemed interstate supplies. What are considered as deemed interstate supplies under GST? So we have few deemed interstate supplies here. Number one, import of goods and import of services are treated as deemed interstate supply. What is the meaning of import of goods? Bringing goods from outside India to India is known as import of goods, and then import of services. What is the meaning of import of services? Just now we have seen that supplier is located outside India, recipient is located in India, and place of supply will be in India. So therefore import of services, import of goods will be deemed interstate. Number two, that is export of goods and export of services will also be treated as deemed interstate. Please remember. Okay, so what are they? Export of goods, export of goods, export of services. What is export of goods? We have seen taking goods from India to a place outside India. Export of service also, that five conditions we have discussed. Number three, if location of supplier in India and place of supply outside India, and place of supply outside India. So sir, when location of supplier in India and place of supply outside India, it is export of service, not necessary, because the location of recipient should also be outside India and consideration should be in convertible foreign exchange. We don't know all those things, because if you see export of service, location of supplier in India, correct or not, and place of supply should be outside India, but all other conditions satisfied, then only it will become export of service. If any other condition not satisfied, it is not export of service, but it will be deemed interstate supply. That is this location of supplier in India and place of supply outside India. And then number four, supply to SEZ or supply by SEZ. Supply to SEZ or supply by SEZ. Okay, so this is also treated as deemed interstate supply. And number five, that is supply beyond territorial waters and up to 200 nautical miles from the baseline is also treated as deemed interstate supply. So what is that? So from the landmass, okay, so assuming this is India, so from this up to 12 nautical miles is known as territorial waters, and beyond this 12 nautical miles up to 200 nautical miles is known as exclusive economic zone. So this is territorial water, this is exclusive economic zone. If the supply takes place here, okay, if the supply takes place here, so then also it will be deemed interstate supply. Okay, so suppose if the supply is taking place after 12 nautical miles and up to 200 nautical miles from the baseline, then also it will be treated as deemed interstate supply. Then number 6, if POS is determined under section 13 and in India, suppose if the place of supply is determined under section 13 and if the place of supply is in India, then also it will be deemed interstate supply. Okay, so then number 7, PSLC. So priority sector lending certificate, trading in priority sector lending certificates, sale of priority sector lending certificate by one bank to another bank will also be treated as deemed interstate supply. And number 8, so that is security lending scheme. Security lending scheme. Under security lending scheme, we give the securities on rent to stock exchange. The stock exchange will be giving it again on rent to the person who made a short sales, so that some lending fee is generated. On that lending fee also it is always deemed as interstate, because there we will not be able to identify the location of supplier and the location of recipient due to that reason. And trading in PSLC will be done by banks. So priority sector lending certificate, the trading will be done by banks. Okay, so and these banks will be trading it through eKuber portal. So due to that reason, again we will not know the location of supplier and recipient, so it will be treated as deemed interstate supply. And number 9, supply to a tourist, supply to a tourist by retail outlet in international airport. In international airport there will be retail outlets. Okay, for example, Hamleys toy shop, or we have this travel bags and all, they will be selling American Tourister, like that. Lot of retail outlets will be there where in the international airport, so they are selling goods to a tourist, so that will always be deemed as interstate supply. Apart from this, if the supply is not known, okay, if the supply is not classifiable under intra or inter, so then it will be treated as deemed interstate supply. These are the 10 points you need to register in your mind like anything. So what are treated as deemed interstate supplies? In these cases only IGST liability will be coming into picture. So what are they? Number 1, import of goods, import of services. Export of goods or export of services. Supplier in India, place of supply outside India. And then supply to SEZ or supply by SEZ. Supply beyond 12 nautical miles and up to 200 nautical miles from the baseline. And suppose if the place of supply is determined under section 13, and if that is in India, then also it is deemed interstate. Trading in PSLCs and security lending scheme, and supply to a tourist by a retail outlet in the international airport. And then last, suppose if you don't know whether it is intrastate supply or interstate supply, then it is deemed interstate supply. So these are the deemed interstate supplies. So this information I gave in the first chapter itself. Okay, what are considered as deemed interstate supply, like that I gave it in page number 12. So the following are considered as deemed interstate supply, but to that I have just added this extra few points also. Okay, so now you just write down there, take page number 12. Supply to SEZ or by SEZ, import of goods or services, export of goods or services, that is location of supplier in India, place of supply outside India, and supply of goods to a tourist, supply of goods beyond territorial waters and up to exclusive economic zone. So actually this is one point, point number 6, location of supplier in India and place of supply outside India. Then point number 7 you write down, that is place of supply determined under section 13, and it is in India, Then what else? PSLC. Point number 9, security lending scheme, and then point number 10. So that is cannot be categorized. Supply cannot be categorized. So these are the 10 points which I have said, which you need to remember. Mark it as very, very important. So in these cases, so always it will be deemed interstate supply. Okay, so now we understood what is the meaning of export of service, export of goods, import of service, import of goods, and deemed interstate supply. Now what is that we are trying to convey here? So that is Depending upon the place of supply, a transaction will become either intrastate or interstate or deemed interstate, etc. So that's what we are trying to understand. So this particular point, okay, so simple only, so you can make note of this. That is, what we need to see is location of supplier. So there are three factors actually: location of supplier, location of recipient, and place of supply. These are the three factors that determines what is the nature of supply. Okay, suppose if location of supplier is in India, again location of recipient can be India or outside India. Location of recipient can be India or outside India, and place of supply can be again India or outside India. Okay, same way, if location of supplier is India, location of recipient is outside India, again place of supply can be India or outside India. Okay, so like this we have a tree diagram. Okay, now what we need to see is that if location of supplier is India, location of recipient is India, place of supply is India, what is the nature of supply? Depends, either intra or inter. And this place of supply is determined under section 12 or under section 13. Place of supply will be determined under section 12 because both are in India, so place of supply determined under section 12. And then suppose if location of supplier in India, location of recipient in India, place of supply outside India, that is also determined under section 12. I'll give you an example. So Filmfare Corporation India and buyer of the ticket in India, but the event is held outside India, then the place of supply to the admission to the event is location where the event is held, that is outside India. Now in this case, what will be taken as the nature of supply? Supplier in India, place of supply outside India, deemed interstate. One point is there, location of supplier in India, place of supply outside India, deemed interstate. That's what we have discussed. So deemed interstate, okay, deemed interstate. Then location of supplier in India, location of recipient outside India, and place of supply is in India. Now what it will be? So supplier in India, place of supply also India, recipient alone outside India, it will not become export of services. Okay, so then what it is again deemed interstate only. Where is it given? So first place of supply is determined under which section? 13. Place of supply determined under section 13. Once place of supply is determined under section 13, it will be definitely deemed interstate. Then again, location of supplier India, location of recipient outside India, place of supply also outside India. So what it will become? Export of services, correct or not? So export of services is what? Export of service is what? Deemed interstate. Export of services is again deemed interstate. Okay, so therefore like this we need to determine the nature of supply. Hope you understood this first one. Okay, so location of supplier in India, location of recipient in India, place of supply also India, either intra or inter, and the place of supply is determined under section 12. If location of supplier in India, location of recipient in India, place of supply is outside India under section 12, then it will be deemed interstate. Okay, reason being, this is one of the deemed interstate supply we studied, section 7 subsection 5 clause A actually it is. So supplier in India, place of supply outside India, deemed interstate. So location of supplier in India, location of recipient outside India, but the place of supply in India, once the place of supply is determined under section 13, so always it will be deemed interstate. Even the next one also deemed interstate, but it will qualify for export of services. Okay, now I am changing the location of supplier. The location of supplier may be outside India. The location of supplier may be outside India. Again that is divided into two. The location of recipient may be India and the location of recipient may be outside India. And again it is divided into two. The place of supply may be India or the place of supply may be outside India. Okay, and again this outside India is further divided into two. Location of supplier outside India, location of supplier outside India, location of recipient outside India, place of supply. First hold on, we cannot determine the place of supply in this case. So in this case POS cannot be determined. Why POS cannot be determined? Because POS can be determined when both are in India, one in India, outside India. When both are outside India, place of supply cannot be determined. Okay. So now in this case, we need to see what is the nature of supply first. So location of supplier outside India, recipient in India, place of supply in India. What is it known as? Import of services. Import of services is what? Deemed interstate. Import of services deemed interstate. And this place of supply is determined under section 12 or under section 13. Under section 13. A supplier outside India, recipient in India, place of supply outside India, determined under section 13. So what it will be? So no GST. Why there is no GST in this case? Sir, location of supplier also outside India, place of supply also outside India. How Indian government can charge GST on the transaction? So therefore there is no GST on that. Then supplier outside India, recipient also outside India, place of supply cannot be determined. When place of supply cannot be determined, what will be? It is interstate supply, deemed interstate supply. Point number 10. When place of supply cannot be determined, it will become deemed interstate. Okay. So when it is deemed interstate, so whether we need to pay GST? No. All activities, only one activity is taxable. What is that? So transportation of goods. Transportation of goods from where to where? So transportation of goods by which mode? By vessel. By vessel. From where to where? From outside India to India. From outside India to India is taxable. From outside India to India is only taxable. Okay. So this is only taxable. All other cases, other services, all other services will be exempted. All other services will be exempted. Okay. So this is how we need to determine the nature of supply. You understood or not? So depending upon the location of supplier, location of recipient and place of supply, this is how we need to determine the nature of supply. Okay. So generally, this is a revision session only, but I just wanted to solve only one question. So in order to apply this concept, whatever we have learned quickly. Okay. So I am just taking, so January 2021 exam, I told you 9 points were asked. So that question I just wanted to discuss with you, and now you are going to answer with respect to that. Okay. So you completed, hope you completed this now. So see this. So in Jan 2021, okay, so one 9 marks question was asked. That's actually a surprise for many students. So you can see that. Yes. Determine the place of supply along with reasons in the following cases. Mr. X, an architect, Kolkata. Please carefully listen to this question. You are going to answer this. Come on. Whatever we have learned, we need to apply into this. Mr. X, an architect, Kolkata, provides interior decorator services. Interior decorator services. Okay. To Mr. Y of New York, USA, in relation to his immobile property located in Delhi. The first thing that you need to see is it goods or services? So I am just giving you the checklist. First, you need to see whether it is goods or services. It is goods or services. Services. 12 or 13? 13. Because one in India, other outside India. What is the service it is? Service in relation to immobile property. So what will be taken as place of supply? Location of immobile property. So what is the location of immobile property here? New Delhi. So that will be taken as the place of supply. They are not asking the nature of supply. So therefore we don't have to bother about that. Just place of supply, if you write, that will be sufficient. So therefore the place of supply in this case is New Delhi. Now second question. Mr. A, chartered accountant, registered in Kolkata, supplies services to his clients in Bhubaneswar, registered in Bhubaneswar, Orissa. So first it is goods or services. And we have any specific provision related to this? No. Chartered accountant service, we don't have any specific provision. So general provisions we need to apply. 12 or 13? 12. 12. So therefore we will take B2B or B2C. If it is B2B, it is B2B. So location of recipient will be taken, that is Orissa will be taken as the place of supply. You understood or not? And then number 3, ABC Limited of Patna imported certain goods from XYZ Incorporation of USA. The goods were imported through vessel and the delivery of goods was taken in Kolkata. Thereafter the movement terminates and the goods are stored. So in case of import of goods, what will be taken as the place of supply? So here it is import of goods. The goods were imported through vessel vessel, and the delivery of goods were taken at Kolkata, whereafter the movement terminates and the goods are stored. So in case of import of goods, what will be taken as the place of supply? Location of importer, section 11. In case of import of goods, location of importer will be taken as place of supply. In case of export of goods, location outside India will be taken as place of supply. In this case, it is goods or services? Goods. So import of goods, we will be taking location of importer. What is the location of importer? Patna, that will be taken as the place of supply. Number 4, Mr. X registered in Guwahati has availed landline services from BSNL. The telephone is installed in the residential premises in Kolkata and the billing address is the office of Mr. X in Guwahati. So in case of landline, section first we need to see whether it is goods or services. Section 12 or section 13? Section 12. So we need to take landline. In case of landline, the location where it is installed. Where is it installed? Kolkata. That will be taken as the place of supply. Point 5. Mr. X residing in Chennai traveling with the Indian Airline aircraft and is provided with movie on demand service for 100 hours onboard entertainment during Delhi Chennai leg of Bangkok Delhi Chennai flight. So goods or services? Services. And section 12 or section 13? Section 12 airline, Indian Airline. Mr. X residing in Chennai. Indian Airline is also in India and the recipient is also in India. So section 12. So section 12 services on board a conveyance. What will be taken? Starting point of the conveyance. But actually even if you take section 13 also it is the same answer. Starting point of the conveyance will be taken. Okay. But whatever we write we should be correct in that. Okay. So section 12. So we will take starting point of the conveyance as the place of supply because this is service on board a conveyance. We need to take Bangkok. So it is not the starting point of the passenger, it is starting point of the conveyance. The starting point of the conveyance is Bangkok, that will be taken as a place of supply. Mr. X of Kolkata purchased online tickets for Aquatica water park in Mumbai. So services or goods? Services. 12 or 13? 12. So therefore we need to see this as admission to a place. So in case of admission to a place, when we need to take? So location of that place. What is the location of that park? Mumbai. So that will be taken as the place of supply. Then Mr. Z, an unregistered person of Kolkata, sends a courier from New Delhi to his friend in Chennai, Tamil Nadu, while he was on trip to New Delhi. Now, in this case, what is it? Goods or services? Services. Section 12 or section 13? Section 12. So we need to see transportation of goods. Is it India to outside India? No. Other cases, B2B or B2C? B2C. So B2C, we need to take starting point of the goods. What is the starting point of the goods? Courier from New Delhi. So New Delhi will be taken as the place of supply. Okay. Then next, Mr. X, a registered person in Ranchi, Jharkhand, buys shares from a broker in Patna and NSC, Mumbai. Determine the place of supply of brokerage services. So section services, section 12 or section 13? 12. So intermediary services, brokerage, intermediary services, general provisions, location of recipient in the records of the supplier will be taken. What is the location of recipient in the records of the supplier? So Jharkhand, Ranchi, so that will be taken. This Jharkhand will be taken as a place of supply. XYZ Limited, New Delhi entered into contract with the Indian Airline for supply of biscuit packets for further supply by airline to the passengers in Kolkata Guwahati route. The biscuits were loaded on board in Lucknow. Okay, so in this case, so it is supply of goods or supply of services? Goods. So goods, and in this case we need to see, so which situation it will come? 10(1)A, 10(1)B, 10(1)C, 10(1)D, 10(1)E. So is it supply of goods on board a conveyance? No, it is not supply of goods on board a conveyance. We are supplying it to the aircraft. When we are supplying it to the aircraft, then it will come under 10(1)A. So 10(1)A is what? So supply involving movement of goods, ending point of the goods. What is the ending point of the goods? So the goods were loaded on board in Lucknow. So Lucknow will be taken as the place of supply. Okay. Actually, we should not apply in this case 10(1)E. So 10(1)E we should not take. 10(1)E is what? Supply of goods on board a conveyance. Please see the question carefully. XYZ Limited, New Delhi entered into contract with Indian Airline for supply of biscuit packets for further supply by the airline to the passengers. They are not asking what is the place of supply in case of airline to passengers. They are asking what is the place of supply in case of XYZ Limited to the Indian Airlines. So XYZ Limited to the Indian Airlines, supply involving movement of goods, ending point will be taken. What is the ending point in this case? So where they deliver the biscuit packets? Lucknow, that will be taken. Okay. So if you want, you see that. So Lucknow will be taken as the place of supply. Okay. So all the answers are correct. I already checked that. Don't worry. So all the answers are correct only. So this is how you may be tested with respect to this. Otherwise, in a regular question involving computation of GST payable, so we need to determine whether it is intra-state supply or interstate supply, and put it in the respective column. If it is interstate supply, put it in IGST column. If it is intrastate supply, put it in CGST, ST column. For that reason also place of supply topic is important. Okay. Now look into IGST rules related to place of supply. First we need to see here as to, there are multiple rules. First we will try to understand the background of each and every rule. Rule 3 is applicable in case manner of determination of proportion of value attributable to different states or union territories. So that is, first of all, advertisement services to government. Advertisement services provided to government, central government, state government, local authority or any statutory body under the government. The place of supply will be taken as each state where the advertisement is provided. But suppose if there is a single contract, why that single contract? If the advertisement is provided in more than one state, then we need to apportion that contract value between the states. What should be taken as the factor for apportionment? Suppose if it is advertisement on trains, then we need to take length of the railway track. For example, lot of government ads are being put on the trains. So say for example Shatabdi Express you take. Shatabdi Express from Chennai to Bengaluru. So Chennai to Bengaluru, the Shatabdi Express will be covering 3 states. So up to some distance it will be Tamil Nadu, thereafter it will be small distance Andhra Pradesh, and then it will be Karnataka. Now whatever is the consideration that is paid by the government to the railways should need to be apportioned between these 3 states based on the length of the track. Length of the railway track should be taken as the base of apportionment. And because the problem here is that we cannot take the place of supply as one state. The place of supply should be taken as each state where the advertisement is provided. That's the reason why the entire contract value we need to apportion between the state. So in case of advertisement on the train, we need to apportion based on the length of the track. And in case of railway tickets, so on the back of the railway tickets, government ads and all you will be seeing, sacrifice your LPG subsidy, like that and all they have given. Okay, so like that. So then whenever the government ads are being provided, so tomorrow Kashmir Files also ad will be coming on the back side. I don't understand whether it is produced by some person or Government of India. Government of India is promoting that movie like crazy. Okay, even that's why I just wanted to watch that movie. What is there in that movie? Let's see. Okay, so too much hype. So because Prime Minister Modi and all is promoting that movie, so I really doubt what is there in that. So therefore in that case, on the back side of the ticket they will be putting the ad of the government. Now in this case what we need to do, the tickets will be circulated in multiple states now. So now say for example the tickets are circulated in Andhra Pradesh, Karnataka, Kerala, etc. So now in this case what we need to do is that we need to divide that based on number of stations in each state. We need to divide based on number of stations in each state. Okay, then on TV channels, so this is based on number of viewers. So this is based on number of viewers that is given by BRC, Broadcast Audience Research Council. So government ads and all will be given in TV channels. So first you need to divide that money whatever is given by the government. So because a TV channel will have multiple channels. For example, you take Z Entertainment, Z Network. So Z Network will have multiple channels. First divide the entire consideration between multiple channels. Based on what data? Based on Broadcast Audience Research Council. So which period should be taken? Take the last quarter, last week, the previous quarter, last week data you take and you apportion first. This is known as primary apportionment. Then one channel will have audience in 2 states. When one channel is having audience in 2 states, then again apportion the amount between those 2 states based on population census. So there are 2 apportionments. Primary apportionment first between the channels based on viewership. And thereafter, suppose if one channel is operating in more than one state, then divide that between 2 states based on population census. For example, if you see, lot of channels will have the shared audience in 2 states, correct or not? So definitely, lot of Kerala channels will be watched by people in Karnataka also, correct or not? A lot of people got settled here, yeah? Lot of people from Kerala got settled here. Won't they watch, Malayalam channels and all? So they will be watching now. So then it will be apportioned. Okay. Yes, lot of people from Kerala have really settled here. Okay. So because not now. So I am talking about the situation some 10 years before. Yeah. So 10 years before I started my career in Bengaluru only. After 10 years I am again coming back to take the class. At that time when I came here, I joined in one company called as IBM in Whitefield. Okay. So one stupid company it is. And I did not like that UK shift and all. So I used to sleep in the office. Okay, I will come home and also sleep. So completely the jet lag we say like that my life has become. Everywhere I used to sleep. So I bucked up with that. Then I went to one KPO, one ANSR source like that. One company is there in Domnuru. So there I went to that company. Hardly 1 month I worked in IBM. Thereafter I came on. Now basically I am that kind of person. If I don't like something, I will not do that. Okay. So then I came to Domnuru, and that Domnuru and ANSR source, there my team leader or manager, whatever it is, so that software language, so he is from Kerala, full of attitude. So that person I did not like. So I quit next month itself. Okay. So that person insulted me. So no, anything we can tolerate, but not self-respect. You understood or not? So therefore, because of that I quit the job, and thereafter I thought, let me create my own employment. So that's where I came into teaching. Okay. So therefore, this Kerala people I know from that beginning, that 10 years before itself, lot of people have settled here. Now, no needless to say. Okay. So now in this case, so then the channel will be watched by Kerala audience, not only in Kerala but also in Karnataka, then divided based on Kerala population versus Karnataka population. So that is, this population census needs to be divided. Then if it is on internet, deemed to be provided all over India. When it is deemed to be provided all over India, means we need to apportion between all the states. Yes, all the states, because internet you cannot restrict. Once you put the ad in the internet, you cannot restrict, because we don't know what goes viral. In IPL, cameraman, he will be shooting one good looking girl. Okay, one girl, he will be shooting, but that girl's video will become so much viral. You understood or not? So therefore, we don't know what becomes viral here. Due to that reason, so it is deemed to be across the country, and we need to apportion the contract price between all the states. Okay, in what basis? Internet subscribers data, internet subscribers basis. And then next, through SMS, whenever it is through SMS, number of telecom subscribers, from where we need to get the data? We need to get the data from TRAI, okay, Telecom Regulatory Authority of India. From there we need to get the data, telecom subscriber data, and apportion between the states. So only 5 points, 5 factors of apportionment I told you. In case of advertisement on train, what should be taken? Length of track in each state. In case of railway tickets, number of tickets, number of stations in each state. And in case of TV, first between the channels and then between the states based on population census. Between the channels, how? BARC data last quarter, last week. Then in case of internet, deemed to be across the country and divide between all the states based on internet subscribers data. And in case of SMS, so Telecom Regulatory Authority, telecom subscriber data last quarter, last week you take, and apportion between the states. Okay. Apart from this, any other mode of advertisement, expenditure ratio. For example, advertisement in toilet paper, that is Times of India newspaper. So whenever they are giving, so what will happen? Multiple editions will be there. So in that multiple editions, the first page they will be giving. Okay, so now, so each and every edition, how much is the money payable for the first page? In that ratio, you divide the revenue. Like that amount payable ratio, we need to divide. Okay, so that is in case of supply of advertisement service to central government. Apart from this, in any other case, it is the amount payable ratio. Okay, so we completed rule 3. When rule 3 is applicable, services provided by government, that is service provided by government or to government? To government. What services? Advertisement services. And then next one, So in case of service in relation to immobile property, listen, concentrate, service in relation to immobile property, what will be taken as the place of supply? If it is section 12, the location of immobile property is in India, the location of immobile property, otherwise the location of recipient. In case of section 13, always location of immobile property, correct or not? What if immobile property is such that it is shared between two states, in the border area it is there, so then how will you apportion? So then you apportion based on floor area, you understood or not? You apportion based on floor area. Suppose, it is a package tour. You are paying for 5 days. So there are 4 nights. So 4 nights, 2 nights in Karnataka, 2 nights in Kerala, 1 night in Tamil Nadu. So now how will you divide? Whatever amount that you pay, you apportion based on 2:1 between Karnataka, Kerala and Tamil Nadu. So therefore, whenever it is accommodation and ancillary services, number of nights stayed in the property. Suppose if it is accommodation in a houseboat, you boarded a houseboat, you slept, you woke up in a different state, you understood or not? Then in that case, what you need to do? You apportion based on the number of hours spent. Number of hours spent, suppose if he is boarding that houseboat, he will do the duty for which he boarded. He will not sit and count to which place, how many hours and all. Then the purpose for which he went into the houseboat will get defeated. So therefore, that is based on the standard hours declared by the owner of that houseboat will be taken. Time spent by the boat in each state or union territory. All other services provided in relation to immobile property based on the carpet area of the immobile property. For example, I am providing repair and maintenance services in relation to Taj group of hotels with respect to their hotels across the country. So now what I need to do, it's a single contract price. How will that contract price be apportioned? Based on the carpet area of hotel in each every state, I need to apportion that. Okay. Then, so rule 4 and 8. Rule 4 is in the context of section 12, rule 8 is in the context of section 13. But you remember, in case of immobile property, this is the points that is applicable. Then, event. In case of organizing an event, what will be taken as the place of supply? Section 12, location where the event is held. If the event is held outside the location of recipient. In case of section 13, always location where the event is held. What if the event is held in more than one state? How will you apportion the contract price? The contract price will be apportioned based on the generally accepted accounting principles. Generally accepted accounting principles means expenditure ratio. So expenditure ratio you will take. What is the expenditure for conducting the event in Kerala, Karnataka, Tamil Nadu, Andhra Pradesh, Telangana, like that. In that expenditure ratio you will apportion. So this is, for example, usually nowadays every movie is a pan-India movie, you understood or not? So they have just broken the boundaries. It's good only here because only when South India shows that unity, people from North India will not try to suppress us because so much they are insulting here. That is, if we go there now, for them they are thinking that we are all still belonging to Madras only. Madras got broken into multiple states, they will not understand. We have different cultures, we have different linguistics, etc. and all. They will not listen all those things. They don't understand. They think that we are all tribal people only. Okay. So therefore, these pan-India movies, so in order to promote what these producers will do, will conduct the events in different places. This is an example for that. So why a single contract, the pre-release event is conducted in different places. So then what will be taken as the place of supply? So we need to apportion that between all the states in what ratio? In the expenditure ratio. Then 6, computation of value where the services, that is leased circuit. For example, a bank has taken lease line from a network provider and that lease line connects multiple branches across the states. So that lease line connects the multiple branches across the states. So fixed line, in case of fixed line, we need to take location where the equipment is installed. But the equipment is installed in multiple branches in different states. So now you are paying a single amount. That single amount you divide between the states based on the circuit points. Okay, that is rule 6. So in proportion to the number of points, circuit points lying in each state, you will be apportioning. Then next, number 7, where the value of service is performed in more than one state. For example, section 13 you take performance based service in relation to individual. What will be taken as the place of supply? Physical presence of the individual required location where service are actually performed. Now So services supplied to individuals will take GAP ratio. For example, nowadays our celebrities, our heroes and all, now very much going crazy towards the foreign fitness trainers. So there will be foreign fitness trainers that they will be importing for the purpose of toning their body. And in this case, so one person from foreign comes to India, and for that movie, throughout the movie, the fitness trainer also will travel to multiple shooting spots and will be ensuring that they do the exercise, and immediately the shooting will be taken place. Because I don't know whether you go to gym or not, because I will not go. Okay, I used to go. When I used to go in gym and all, we used to be like this, like this. But when I come to house, like how air goes out of the balloon, like this he will become. You understood or not? So therefore, every movie actor also same situation. So before the shooting, they will do lot of exercises, and then they will be fit. You understood? For that, they need a fitness trainer. The fitness trainer will go through each and every state wherever the shooting is happening. So therefore, in that case, general accepted accounting principles means what? Expenditure ratio. Based on expenditure ratio, his contract price will be divided. You understood? And then we have performance based services in relation to goods. Performance based service in relation to goods, location where the services are actually performed. Okay. So now what if it is AMC? Under that AMC, service is provided in more than one state. Is it same goods or different goods? You check. If it is the same goods, equal ratio. If it is the different goods, that invoice value ratio we need to apportion. Okay. If it is the same goods, for example, AC in Tamil Nadu, AC in Karnataka. So how many ACs are there in Tamil Nadu or how many ACs in Karnataka? Don't see. So simply equally you split the contract price. Suppose if it is different goods, so then based on the invoice value you need to apportion. So in Tamil Nadu ACs and in Karnataka computers, like that. If you have different but single AMC, so that AMC amount you will apportion between Tamil Nadu and Karnataka based on the invoice value of ACs versus invoice value of the computers. Okay. With this we completed the rules. So my personal feeling, my intuition says that already this has been asked. Which has been asked? This regular place of supply has been asked. Still they didn't touch one question also onto the rules. So I am expecting some questions on rules for this time. This is my intuition based on the research whatever I have done. So they have not at all touched one point also into these rules. So I doubt that on these rules they can frame question for May 22 exam. And then look into some clarifications in this regard. In case of export of services, so concentrate, I'm just orally explaining. So in case of export of service, for example, you are located outside India, I am exporting some services to you. When I am exporting some services to you, the contract price is for $5,000. Now what I did, I could not provide full services to you. So I outsourced one person to provide some part of the services to you. And you paid $2,000 to him and you paid $3,000 to me. Actually the contract is with me, $5,000. But what is happening here is that I could not provide the entire services. So I outsourced it to some other person. So now you paid $2,000 to him and you paid $3,000 to me under netting. Because you gave me $5,000, again I give $2,000 to him. So unnecessary exchange cost will be there now. So due to that reason you directly paid $2,000 to him and you paid $3,000 to me. Now what will be treated as my export of service? My export of service is $3,000 or $5,000? $5,000 only. Even though I actually received $3,000, but $5,000 should be taken, because on whatever $2,000 that you paid, that I should have paid, that will be import of services. For the $2,000 it is import of service. How, sir? For the $2,000, who is the supplier of service for me? The person to whom I outsourced, and I am the recipient. So that will become import of service. On that I will pay GST under RCM. So my export of service is for $3,000 or $5,000? $5,000. That is this point. Then number 2, in case of cargo handling services, the place of supply should be determined on the basis of general provisions. What is cargo handling services means? So that is, whenever the goods are unloaded, the goods will be kept under the control of a custodian. till the time the goods are cleared by the importer by filing bill of entry, the imported goods will be kept under the control of a custodian, and the custodian will be providing the cargo handling service for which they will be collecting some money. With respect to that money collected by the custodian, what should be taken as the place of supply? So it was like warehousing services. Warehousing services means service in relation to immovable property. That like that it was interpreted. But then CBSE gave a clarification stating that in case of cargo handling services which is provided by the custodian or port, don't treat it as service in relation to immovable property, even though prima facie it appears that it is service in relation to immovable property, but we need to apply general provision. So what is that you need to remember? In case of cargo handling services, which provision to be applied? General provisions. That's it. And then in case of software development or software testing, so what should be taken as the place of supply? Definitely that software will be tested with respect to a hardware. So don't treat it as performance based service in relation to goods, treat it as general provisions only. So that is the next circular. In case of software development and software testing, so we need to take general provisions only, not performance based service in relation to goods. And then so we are importing some diamonds, cutting and polishing the diamonds, and after cutting and polishing the diamonds are exported. So what should be taken as the place of supply in this case? Performance based service exception number 1. Do you remember that? Goods imported for carrying out repairs or any other process, and after the process gets over, it will be exported back. So then whatever exception 1 says, what is that? So location of recipient will be taken as the place of supply. Okay. So with this we completed place of supplier successfully. Okay. So this much it has tortured us, place of supply. So morning we started, again power cut, again we started. So I feel like this is going to torture you in the exam also. Please be careful with respect to this here. Okay. Then the next area is value of supply. Have a look into that, value of supply. One easy go topic. It's more of practical only. So we have only one section, section 15. So what does section 15 says? Value of supply. Section 15 subsection 1 says value of supply equals to transaction value. What is transaction value? Price paid or payable will be taken as transaction value. That is, in other words, price involved in the transaction will be taken as the transaction value, provided two conditions are satisfied. What are those two conditions? Price must be the sole consideration for sale. Then buyer and seller should not be related. If they are related, then transaction value not applicable. If price is not the sole consideration, then also transaction value not applicable. Okay. So two conditions, both the conditions should be satisfied. Price must be the sole consideration. Supplier and recipient are not related. Then we will take value of supply as the transaction value, that is price involved in the transaction. So to the transaction value we make some adjustments. There are 5 inclusions that we will make to the transaction value, and that is given in section 15 subsection 2. Section 15 subsection 2 clause A says that any taxes, duties and cess by whatever name called other than GST should be included. That is the reason why while computing customs duty we will include, that is whenever we compute the IGST under customs, first we will calculate customs duty, we will include that customs duty, and after that we compute IGST. Then even movie tickets also, first we will add entertainment tax, and after adding entertainment tax then we will be computing the GST, because all taxes, duties and cess by whatever name called other than GST should be included while computing the GST payable. That is what 15.2a says. Then 15.2b, look into that 15.2b. Any amount that the supplier is liable to pay, any amount that the supplier is liable to pay, but which is paid by the recipient, so it should be included in the value. So for example, supplier has to make some payment, and that payment has been made by the recipient. So then that value should, that amount whatever recipient has paid is an indirect consideration to the supplier, so it should be included in the value under section 15.2b. Suppose if the recipient is incurring that expenditure on his own account, will that be included in the value? No. So for example, in case of audit, so as per the audit engagement, the expenditure related to the audit is to be incurred by the supplier, that is chartered accountant, but the client has incurred that expenditure. Will it be included in the value? Yes, it will be included in the value. What if the expenditure as per the audit engagement needs to be incurred by the client only, and client has incurred that expenditure? It will not be included in the value. Understood or not? Then next 15.2c. 15.2c is any expenditure that the supplier has incurred and recovered from the recipient should be included in the value, provided that expenditure is not expenditure as a pure agent. When that expenditure will become pure agent, first it should be the liability of the recipient and it is incurred by the supplier and recovered from the recipient as a pure agent. For example, income tax. Income tax is payable by the client, but if we pay, so will it be coming into the expenditure to be included in the value? No, it is a pure agent. Why? Income tax is first of all liability of the recipient incurred by the supplier as a pure agent of the recipient. So therefore it should be excluded from value. So while computing the GST, so we should not include the income tax paid on behalf of client or customs duty paid on behalf of client, etc. and all. So we should exclude that. Okay, understood or not? So therefore expenditure incurred as a pure agent is to be excluded, whereas other expenditures, if it is in the course of supply, such expenditure to be included in the value, provided it is charged to the recipient before delivery of goods or supply of services, that expenditure should be included in the value. That is what 15.2c says. That is this. Supplier incurs an expenditure in the course of supply, it should be included in the value. If it is on behalf of a pure agent, it will be excluded from the value. Understood or not? So 15.2a, taxes, duties and cess by whatever name called other than GST should be included in the value. 15.2b, that is any amount that the supplier is liable to pay but which is paid by the recipient should be included in the value. 15.2c, supplier incurs an expenditure and recovers from the recipient in the course of supply before delivery of goods or supply of services, then also it should be included in the value. Then 15.2d, 15.2d is the section 12.6 and 13.6. What is that? Interest, late fee or penalty for delay in receipt of consideration should be included in the value. Suppose if we are not receiving any consideration on time, so we will be charging some interest or late fee now, that should also be included in the value on which we need to pay GST. For that we will be giving one document. What is the document that we will give? Debit note. So debit note will be issued by supplier to recipient. Then 15.2e. 15.2e is subsidy. Subsidy from CGRSG, so it will not be treated as consideration, so ignore. Subsidy from CGSG, it will not be included in the value, but subsidy from other than CGRSG, for example subsidy from a NGO, subsidy from a foreign government, subsidy from a local authority, subsidy from a holding company or subsidy from any other entity, etc. So again divide into two. Is it directly linked to the price or is it not directly linked to the price? Directly linked to the price means what? Directly linked to the price means, so whenever we give the subsidy for every product sold or for every service rendered, then it will be known as directly into this price. For example, say a tire manufacturer is giving subsidy to the car manufacturer with respect to each car sold. The tire manufacturer is giving a subsidy of 500 rupees. So now in this case, is it directly linked to the price? Yes, because it is with respect to each car sold. Suppose some ad hoc amount is given, that will not be treated as directly linked to the price. So directly linked to the price means what? Subsidy is given with respect to every product sold or every service rendered. Okay, and suppose if it is not directly into the price, then it will be general subsidy. General subsidy will not be included in the value. If it is directly into the price, it will be included in the value, but general subsidy it will not be included in the value. That will be treated as a separate supply, like donations. It will be treated as donations. It will be treated as donations. It will be treated as donations. So therefore, what we need to understand here is that subsidy received by the supplier divided into two, from CGRSG or from others. CGRSG not to be included, from others it should be included. So we need to divide that into two, directly into the price or not directly into the price. Directly into the price to be included, not directly into the price to be excluded. That shall be treated as donations and that will be valued separately. Okay. So therefore we completed the inclusions in the value. Total 5 inclusions we have. Okay, so then what is the meaning of pure agent? Pure agent means, so some conditions should be satisfied, then only they will be called as a pure agent. Number 1, so first there should be a contractual agreement. Contractual agreement between whom? Contractual agreement between the recipient and the supplier, wherein recipient authorizes the supplier to act as a pure agent. Underline contractual agreement. First there should be an agreement. Okay, and second, so the supplier should recover only the actual amount. Supplier should not make any gain out of the transaction. The supplier should not be like you, wherein you will pay for the auto 50 rupees, but you will be recovering from your chartered accountant 100 rupees. Not that. So you should not, they should not be like that. So only the actual amount incurred should be recovered. You understood or not? And then supplier should not hold a title to the goods or services so procured. Okay. So which means that whatever money that we pay, the invoice will be there now. The invoice should not be in the name of supplier. The invoice should be in the name of the recipient. And supplier should not use the said goods or service so procured for his personal purpose. For his personal purpose it should not be used. So then it will be coming under. But this fourth point is difficult to identify. So even if it is used for personal purpose, we can't identify that. But what we need to understand is, in order to become a pure agent, so four conditions should be satisfied. There should be a contractual agreement between the supplier and recipient, where recipient authorizes the supplier to act as a pure agent. And number two, only the actual amount incurred should be recovered. And number three, they should not hold a title to the goods or services so procured. Means invoice should not be in the name of the supplier, and that goods or service so procured by the supplier should not be used for his personal purpose. If these conditions are satisfied, supplier is acting as a pure agent of the recipient. Okay, that is with respect to this. So whenever supplier acts as a pure agent of the recipient, so that expenditure will not be included in the value. You understood or not? For that reason only, this pure agent we need to understand. So first thing is that the liability incurred by the supplier, first of all, it is not the liability of the supplier, it is liability of the recipient. Who incurred it? Supplier. And the supplier is acting as a pure agent. These conditions are satisfied, then that expenditure will be excluded. Otherwise that expenditure will be included in the value. Now there is one important point related to this passenger service fee and user development fee. In RTP May 22, they have incorporated this passenger service fee and user development fee in the first question itself, whatever they have given. So first we will try to understand that there are airline operator, airport operator and the passenger. Okay, so total there are three parties. So have a look into this. Airline, first airport operator, and then airline operator and passenger. So there are three parties. Okay, so now airline operator is providing the services to the passenger. What is that services provided by the airport operator to the passenger? So access to airport. For giving this access to airport, actually who will be required to make the payment? Passenger is required to make the payment, but passenger practically cannot make the payment. So therefore for this access to airport, so airline operator will be paying the fee to the airport operator called as passenger service fee or user development fee, which will be paid by the airline operator to the airport operator. Okay, so now what airline operator will do? He will be providing some services to the passenger. What is that services that he will be providing? Transport services, transportation services. Who will be providing to whom? So airline operator provides this transportation services to the passenger, and from the passenger, so the airline operator will be receiving some money, that is ticket fare. So they will be receiving ticket fare. Say the ticket fare is 4,000 rupees, and then they will be recovering PSF or UDF, user development fee or passenger service fee, 200 rupees. And thereafter GST also they will recover at 5%. Okay, so this PSF or UDF, how much they pay to the airport operator? 200. They recover 200. Now whether this 200 to be included in the value? No, this 200 rupees will not be included in the value. Why this 200 rupees will not be included in the value? Because this 200 rupees will be coming under expenditure incurred as a pure agent. First of all, this 200 rupees who should pay? Passenger should pay. But who is paying? Airline operator is paying on behalf of passenger. Liability of the recipient incurred by the supplier as a pure agent of the recipient, it should be included in the value or not? No, so it should not be included because it will be coming under pure agent. So again I am repeating, the 200 rupees who should pay? Passenger should pay. Who is paying? Airline operator is paying, and recovering it from the passenger means it will not be coming under in the course of supply. It will be coming under as a pure agent of the recipient. So don't include 200. So therefore GST will be payable on what? Only on 4,000. So 4,000 into 5% is how much? 200. So this total 4,800 will be received by the airline operator from from the passenger 4,400. Okay, so this is with respect to user development fee and passenger service fee, but it is not stopping here. What is happening is that as airport operator is required to collect the 200 rupees which is collected by the airline operator and remitted, so airport operator will be paying some commission or collection charges to the airline operator. So some collection charges is paid. Some collection charges is paid. So that collection charges is say 20 rupees which is paid by the airport operator to airline operator. On this 20 rupees again airline operator is required to pay GST to government. So what is the GST that they need to pay to government? First with respect to this collection charges they need to pay. So with respect to collection charges they need to pay 20 rupees into 18 by 118. So how much is that? GST 20 into 18 by 118, because they will not be getting anything extra. What they get commission itself is 20. So that should be inclusive of GST and they need to pay how much? 20 into 18 by 118? 2 rupees. 3 rupees. And what will be the GST that they pay on the ticket? So on the ticket they will pay GST. How much they collected from the customer? Passenger 200 rupees. So that they will be paying it to government. Okay. So therefore there will be two liabilities to the airline operator. Liability number 1, GST payable on the ticket amount whatever is collected. Number 2, GST payable on the collection charges whatever is collected. But on that UDF and PSF they are not required to pay any GST. On that UDF and PSF who is liable to pay GST? Airport operator is liable to pay GST on the UDF and PSF. Okay, what will be the GST payable by airport operator? 200 into 18 by 118. So that will be equals to 30 rupees. So that 30 rupees will be payable by airport operator to the government. Hope you understood this. So now what is that we need to understand out of this? First, number 1 is that on PSF and UDF GST is payable by the airport operator. Airline operator just collects it from the passenger and gives. So on that the airline operator is not required to pay because they are acting as a pure agent. Now out of this they get a commission. On that commission only they need to pay GST, plus they need to pay GST on the ticket fare whatever they are collecting. But while paying GST on the ticket fare they should exclude the UDF and PSF whatever they are collecting. Okay, so that is with respect to this circular here. So passenger service fee and user development fee collected by airline operators from passengers are to be remitted to the airport operator and falls under the expenditure incurred as a pure agent. Okay, then so now we are moving on to exclusions from the value of supply. So 15 subsection 1 meaning of supply, 15 subsection 2 inclusions from supply, 15 subsection 3 exclusion from supply. So exclusions from the value of supply, we have three points. So discount given before or at the time of supply, duly recorded in the invoice, allowed as deduction, no need to pay GST on that discount portion. For example, 10,000 rupees discount 2,000 rupees and the balance 8,000 rupees, GST payable on 8,000 rupees only if the discount is given before or at the time of supply. If the discount is given after supply, then check whether the terms are agreed before or at the time of supply. Example, cash discount, then also it is allowed as a deduction, but for that invoice already prepared. So what is the document that is to be given by the supplier to the recipient? Credit note. Credit note is a document that is given by the supplier to the recipient. So then it will be allowed as a deduction, means liability come down. Whenever credit note is given by supplier to recipient, the liability of the supplier will come down. Now then suppose if the discount is given after supply but the terms are not agreed before at the time of supply, so that is end of season sale discount. So some stock I have given to you and the stock is not getting sold, so I will offer, okay, you pay me 50%, so 50% you take it like a discount, but the terms are not agreed before at the time of supply, so it is not allowed as reduction, means credit note cannot be issued in this case. So GST payable on the full value even though we are not receiving full value from the recipient. Okay, so these are the 3 points that we have in exclusions. Then whether GST payable on additional or penal interest on the overdue loan. So whenever there is an installment, that installment if you are not paying, what there will be one penal interest. Whether on that penal interest we need to pay GST. First of all, what kind of a loan it is, what kind of a interest it is, we need to understand. So therefore we are dividing that into two: hire purchase transaction and hire purchase financing. Hire purchase transaction, there are two parties, hire vendor and a hire purchaser. So now you are required to give me money in installments. In each installment there will be interest component. That interest is for delay in receipt of consideration. So that interest will be chargeable to GST. As that interest in the installment is chargeable to GST, penal interest is also chargeable to GST. Okay. Suppose if it is hire purchase financing, but generally hire purchase, hire purchase transaction we don't have, hire purchase financing only you will be seeing. In hire purchase financing there are three parties: hire vendor, hire purchaser, financier will be there. So now hire vendor will get his money from the financier. Now it is between the financier and you. You will be paying installments to the financier. So for example, Bajaj Finance, Capital First, etc., HDB Finance, lot of financiers are there. So now these financiers will be recovering the installment from you. In that installment there is an interest component. On that interest component it is exempted under the grounds of interest on loans, advances, deposits. So therefore on that interest there is no GST payable and that is exempted. Okay. So these interests are divided into two. Interest on loans, advances, deposits is exempted. As the interest on loans, advance, deposit is exempted, so on that penal interest is also exempted. Suppose if the interest for delay in receipt of consideration is chargeable to GST, then on that interest if there is any penal interest, that will also be taxable. So whether the penal interest is taxable or not depends upon the main interest. If the main interest is taxable, penal interest is also taxable. If the main interest is exempted, penal interest is also exempted. That is about this clarification. Then we are going to rules. So rules are applicable whenever the value cannot be determined as per section 15. Why value cannot be determined as per section 15? When price is not the sole consideration. Why price is not the sole consideration? So because there is some other consideration flowing to the supplier. Then when the consideration is partly in money and partly in other form, then rule 27 will be applicable. So rule 27 is applicable when the consideration is partly in money and partly in other form or fully in other form. Price is not the sole consideration. What is that we need to do? First we need to take the open market value. First we need to take open market value. Suppose if the open market value is not ascertainable, then money received plus money value of non-monetary consideration. If that is also not ascertainable, then like, kind and quality. If that is also not ascertainable, then cost plus 10% should be taken. First, I am selling one new TV in exchange of the old TV. So now you are giving me your old TV plus giving me 20,000 rupees. I am giving a brand new TV to you. So this will be coming under price is not the sole consideration, because partly I am receiving in money and partly in receiving in the form of non-monetary. What is the monetary form? Here it is 20,000. What is the non-monetary form? Here it is old TV. So now in that case I have to determine the value of the sale of new TV under rule 27. First to open market value. Open market value means today what is the price at which this particular new TV is sold between two unrelated parties. So two unrelated parties, what is the price at which it is being sold? So this is like your comparable uncontrolled price method under arm's length transaction pricing. You understood or not? Transfer pricing. Like that, between two unrelated parties, what is the price at which this TV has been sold on the same day should be taken. So that will be taken as a open market value. Say if that is not ascertainable, then okay. So second point, money received. What is the money received? 20,000 rupees plus money value of non-monetary consideration. What is the money value of non-monetary consideration? That old TV I need to value. Say if the old TV value is 10,000 rupees, so then 20,000 plus 10,000, 30,000 will be taken as the sale value of the new TV. Suppose if the old TV value not ascertainable, then in that case, like, kind and quality, this new TV I would have supplied before to one buyer, so I would have taken the value of this new TV which is sold prior. Okay, what is the difference between OMV and LKQ? OMV same date, but LKQ need not be same date, some nearest date, so that can be taken. Suppose if that is also not there, this is the first TV, brand new TV I am selling, then in that case cost plus 10%. What is cost plus 10%? My purchase price, acquisition cost plus 10% will be taken. Suppose if I am a manufacturer, cost of production plus 10%. If I am a service provider, cost of providing service plus 10%. So first of all, So rule 27, price is not the sole consideration, and when price is not the sole consideration, we will take open market value and money received plus money value of non-monetary consideration. If that is also not available, like kind and quality, if that is also not available, then cost plus 10% will be taken. Then rule 28. Rule 28 is transaction between related parties or between distinct persons. Okay, so because in case of related parties we cannot apply transaction value, correct or not? So transaction value is applicable only if two conditions are satisfied. Price must be the sole consideration, supplier and recipient are not related. Suppose if they are related, what we need to do? We need to take first open market value, then second like kind and quality. So that second point is dropped, money received plus money value of non-monetary consideration is dropped. So open market value, like kind and quality, cost plus 10% should be taken. Okay, and even in case of distinct persons also we need to apply rule 28 only. So who are treated as distinct persons? Multiple registrations of the same person is known as distinct persons. But sir, in case of distinct persons we can apply transaction value, na? Then why are we determining the value as per rules? Because the law says that section 15 subsection 5 says that whenever there are some notified transaction, for that notified transaction the value should be determined as per rules only. So even though for distinct person transaction value is applicable, we need to determine the value as per rule 28 only. Okay, due to that reason. So first we need to take open market value. So that open market value equals to transaction value if recipient is eligible for full ITC. When recipient is eligible for full ITC, if I am selling goods to you on which you can take full ITC, means what? Your outward supply should be fully taxable. When your outward supply is fully taxable, then the recipient, you are my recipient, here you are eligible for full ITC, means what? Your outward supply, if it is partly taxable, partly exempted, you are not eligible for full ITC. Na? So you are eligible for full ITC only when your outward supply is fully taxable. So then when you can take the ITC on the inward supply, on that ITC, okay, full ITC means what? There should not be any reversal. When there won't be any reversal? When there will be reversal? Only when you are partly using for business, partly using for non-business, partly taxable, partly exempted, then only reversal will arise. So there is no reversal. Then the recipient is eligible for full ITC. So whatever transaction value I declare in the invoice, that will be taken. Understood or not? So therefore, when recipient is eligible for full ITC, open market value equals to transaction value. When recipient is not eligible for full ITC, then I need to determine the open market value. Then second, like kind and quality. Third, cost plus 10% will be taken. Okay. Then alternatively, I can leave this. Alternatively, I can leave this. I have another option. What is another option? I can take 90% of the resale price. Whatever is the price at which, for example, you are my related person, I am selling goods to you. Now you subsequently sell to an unrelated buyer. Whatever is your subsequent sale price, resale price, into 90% will be taken as my value. What is the assumption? That you will be adding a profit margin of 10%. So your resale price into 10% will be taken as my value. You understood or not? So at the option, with respect to each supply, I can choose. With respect to each supply, I can choose. But very important point is that, so there should not be any processing. I sold goods to you. You are processing and subsequently selling. Now I cannot take 90% of your resale price, because when you are processing, not only the profit margin, you will even add some processing cost also. Therefore I cannot take 90% of resale price. Means how you should be selling? You should be selling it as such. You should be selling it as such. Okay. And this is applicable only in case of goods. This point is there, 90% of the resale price, that is applicable only in case of goods. Then rule 29. Rule 29 is about principal agent transactions. In case of principal agent transactions, open market value or 90% of the resale price. So directly comparison, open market value or 90% of the resale price at the option of the supplier. If that is not available, then only cost plus 10%. In all these cases, cost plus 10% is given na, that is rule 30. Rule 27, when price is not sole consideration. 28, related party transaction including transaction between distinct persons. Rule 29, principal agent transaction. Rule 30, cost plus 10%. What should be taken as the cost? In case of manufacturer, cost of production. In case of service provider, cost of providing service. In case of a trader, cost of acquisition should be taken. To that we need to add 10%. Now here in one place, when recipient is eligible for full ITC, whatever value he declared in the invoice, that will be taken as the open market value. Can I raise invoice for 1 rupee then? Yes, you can raise invoice for 1 rupee. That will also be taken as value. Okay. So, but 0 not possible, because we cannot save an invoice with 0 rupees. We have to save an invoice with 1 rupee. So that is that. Then in case of services, cost of providing the service will be difficult. Cost plus 10%, cost of providing service is difficult to arrive. Due to that reason, we can skip rule 30 and we can go for rule 31. What is rule 31? Suppose you are not able to determine the value as per cost plus 10% also, then residual value will come into the picture. Residual value means the value will be fixed in accordance with GST officer. Okay. That is what we call as provisional assessment. So whenever the value cannot be determined, we will make an application to the GST officer, and the GST officer will determine the value. Provisional assessment we discussed now. That provisional assessment will be applicable in this case. What is the difference between OMB and LKQ? So comparable time, OMB same date, LKQ nearest date. And comparable value, open market value should be transaction value, but like kind and quality can be transaction value or any other value. And comparable supplier, same supplier or any other supplier, but in case of LKQ it will be same supplier. Comparable goods, in case of open market value, same goods. In case of LKQ, minor modifications permissible, slight change is permissible. Okay, so that is with respect to open market value and like kind and quality. So this point, GST implications on debit note, credit note, already we discussed. This is just a revision here. So because section 34 I discussed already in invoice and time of supply. So we discussed that when debit note will be given, increase in the invoice value. When credit note will be given, decrease in the invoice value. Time limit, yes. Debit note, no time limit. Credit note, 30th September of the succeeding financial year, date of filing annuity, whichever is earlier. What will happen to the supplier and recipient? I have just given here. Already I discussed this. Okay. Then we have CGST rules related to this. Okay. So a small break you take, and thereafter we will come see this rule 32. So far what I have discussed is in valuation. I started with section 15. I completed section 15. Rule 27, 28, 29, 30, 31. Up to that we have discussed. So remaining part, a small break you take, and thereafter we will continue. Okay. 5 minutes. Because I could not see you here. Okay. So we have the next area, rule 31A and rule 32. You can see rule 31A. So up to rule 31 we have completed. So look into rule 31A, which is in page number 15. So 31A is applicable in case of lottery, betting and gambling transactions. So all actionable claims other than lottery, betting and gambling is excluded from supplying. Only lottery, betting and gambling is covered under supplying. All other actionable claims are excluded from supply as per 7 subsection 2 read with schedule 3. So only 3 are covered under supply, that is lottery, betting, gambling. In case of lottery, we need to take the face value printed on the lottery ticket or the price notified by the organizing state, whichever is higher should be taken. So the face value printed on the lottery ticket or price notified by the organizing state, whichever is higher should be taken, and on that we need to multiply 28 divided by 128, so that we will be getting the GST component. Okay, so why the price notified by the organizing state? Sometimes when the price of the lottery ticket, the face value of the lottery ticket is too high, the government will notify this should be the price of the ticket, so then that price will not be taken, the face value only will be taken. Suppose if the face value is less and the price notified by the organizing state is high, then the higher rate will be taken. And what is the assumption here? That the rate of GST on lottery will be 28% and it is inclusive of this price. So therefore we need to take face value printed on the ticket or the price notified by the organizing state, whichever is higher, into 28 by 128 as the GST. So 100 by 128 will be taken as the value. That is in case of lotteries. Then in case of actionable claims, we need to see 100% of the face value of bet or the amount paid to the totalizer, not the commission to the totalizer. For example, in a betting transaction or gambling transaction, say both the people will place the bet. For example, it's a race club, you take horse race club. Horse race club, there are total 10 horses. Only one horse is going to win. So now people will place bet on all the 10 horses. Now I am the totalizer. I will receive money from all the people. Those who place bet on each and every horse, I will receive money. And now what I will do, out of that money, after deducting my commission, I will be giving the money to those people who were betting on that horse which won the game. You understood or not? Which means that I have retained only commission. On that commission only now I need to pay GST. But no, I need to pay GST on the total amount, because whatever amount that I am giving to the other person is a winning from betting transaction. On that they need to pay GST, rather than they paying GST. On that also I need to pay GST, just like TDS, tax deducted at source. Okay, so therefore I need to pay GST on the entire bet value. So therefore what should be taken as the value? 100% of the face value of the bet. This is in case of rule 31A. Then in case of rule 32, rule 32 is applicable in case of 5 notified transactions. So there is a simplified valuation methodology. Either we can go for a transaction value or we can determine the value as per this rule. Okay, so what is a transaction value? In case of forex transactions you take. So there are 5 transactions for which rule 32 simplified valuation methodology is applicable. And what are those 5 transactions? Number 1, that is forex transactions. Number 2, that is air travel agent. Number 3, life insurance business. Number 4, second hand dealer in goods. Number 5, that is in case of vouchers or coupons, etc. Okay, so these are the 5 cases. In these 5 cases, what should be taken? First, forex transactions, if you see, so transaction value, if you take whatever is the sale value, that is purchase price minus sale price. So sale value of the forex transaction minus purchase price of this forex transaction, that spread will be taken as the transaction value. But the problem is it is very difficult to determine that spread. Due to that reason, they have given a simplified valuation methodology. What does it say? They have given 2 options. Any of these 2 options you can follow. Option 1, rule 32 sub rule 2A. First you need to see whether one of the currencies exchange involves Indian rupees and RBI reference rate is available for that currency. Yes, then we need to take bid rate or ask rate and the RBI reference rate into units of currency. For example, if there is a exchange rate rupee per dollar equals to 73.75. 73 is bid and 75 is asked. That is bank dollar buying rate and bank dollar selling rate 75. For example, I am giving $10,000. When I am giving $10,000, what is that exchange rate to be taken? So I am giving $10,000 means bank is buying $10,000. So 73 rupees to be taken as the relevant exchange rate. So take 73. And what is the RBI reference rate? The RBI reference rate is say 74. So therefore 74 rupees. 73 rupees and 74 rupees into units of currency. What is the units of currency? $10,000. So that equals to 10,000 rupees will be taken as the value. Okay. So purchase rate or sale rate, bid rate or ask rate, and the RBI reference rate, the difference we will take. Ignore positive or negative, difference we will take into units of currency will be taken as the value. Okay. Suppose if one of the currency exchange involves Indian rupee and RBI reference rate not available. What is the 74? 74 is RBI reference rate. What if this RBI reference rate is not available? When RBI reference rate is not available, we need to take the gross amount exchange Indian rupees into 1%. Okay. So suppose if RBI reference rate is available this way, if RBI reference rate is not available, gross amount exchange in Indian rupees, that is $10,000 into what is the exchange rate? 73 rupees per dollar into 1%. So that equals to 7,300 will be taken as the value. Suppose if both the currencies exchange involves foreign currency. Okay. For example, $10,000 exchange to 6,000 pounds. $10,000 exchange to 6,000 pounds. Now convert both the currencies into Indian rupees. Convert both the currencies into Indian rupees using RBI reference rate. Okay. So therefore rupees 70 per dollar and this will be rupees 120 per pound. Convert both into Indian rupees using RBI reference rate. Using RBI reference rate. And thereafter multiply with 1%. Multiply with 1%. So we will be getting some value. So 10,000 into 70 into 1%. 7,000. And here 6,000 into 120 into 1%. 7,200. Whichever is lower. So what is lower? 7,000 will be taken as the value. So purchase currency converted into Indian rupees using RBI reference rate into 1%. Sold currency converted into Indian rupees using RBI reference rate into 1%. Whichever is lower will be taken. Now actually practically there is no RBI reference rate. So we have FBIL, Financial Benchmarks India Limited. So they will be giving the rate. So RBI reference rate is not there. But in exam they will be giving RBI reference rate. We need to take that RBI reference rate only. Okay. Now, when this option 1 is not applicable, when both the currencies exchange are foreign currencies, and what if RBI reference rate is not available, then we cannot determine the value in this case. Then what we need to do? Go for the transaction value. Go for the transaction value. How much is the markup fee that you are charging? That markup fee you take as the value. And can we decide between transaction value and value as per rule 32 with respect to each invoice? Yes. With respect to each invoice you can decide the transaction value or you can go for rule 32 value, whichever is feasible for you. In that rule 32 again option 1, option 2 is there. Option 1 is what we discussed. Now we are going to discuss option 2. What does option 2 says? Option 2 is like a slab rate model. So first slab is up to 1 lakh. If your gross amount exchange in rupees is up to 1 lakh, then it will be 1% of the gross amount subject to minimum of 250 rupees, which means 1% of the gross amount or 250, whichever is higher. Suppose if you are in the second slab 1 lakh to 10 lakhs, then it will be 0.5% of the gross amount beyond 1 lakh, plus for 1 lakh it will be 1000 rupees plus 0.5% of the amount exceeding 1 lakh. And suppose if it is beyond 10 lakhs, it will be 5,500 plus 0.1% of the gross amount exceeding 10 lakhs, subject to a maximum of 60,000 rupees. Let's try to understand this with some numbers. 80,000 rupees, first slab or second slab or third slab? First slab. So 80,000 into 1%, it will be 800 or 250, whichever is higher, 800. Suppose if it is exactly 1 lakh, first slab, 1 lakh into 1%, 1000, 1000 or 250, whichever is higher, 1000. Suppose you are in the second slab, say for example 1 lakh 80,000. For 1 lakh it is 1000, for remaining 80,000, 80,000 into 0.5%, it is 400, so 1400. Suppose if it is like 9 lakhs. For 9 lakhs, first 1 lakh it is 1000, remaining 8 lakhs, 8 lakhs into 0.5%, it will be 4000. For 4000 plus 1000, 5000. and suppose if it is 10 lakhs, for 1 lakh it will be 1000, so remaining 9 lakhs, 9 lakhs into 0.5%, 4500, 4500 plus 1000, 5500. Suppose if it is 12 lakhs, so we cross the second slab and we are into third slab, so therefore 5500 plus extra 2 lakhs, 2 lakhs into 0.1%, that will be 2000, 2000 only, 0.1%. Okay, so therefore 5500 plus 2000, that will be equals to 7500. And suppose if it is like 150 lakhs, for 10 lakhs it will be 5500, for 140 lakhs into 0.1%, 140 lakhs into 0.1% is 14,000, 14,000 plus 5500, 19,500, but subject to maximum how much? 60,000. Okay, for example, if it is like 800 lakhs you take, for 10 lakhs it will be how much? 10 lakhs it will be 5500, remaining 790 lakhs into 0.1%, 79,000, but the maximum itself will be 60,000. So that's how we will determine the value. When this option 2 will fail, option 2 will fail when it is in foreign currency, because gross amount in Indian rupees, when both the currencies involved in the transaction are cross currency transaction, means cross currency code. So purchased dollars in exchange of pounds, or purchased pounds in exchange of euros, like that, when it is there, then you cannot determine the value as per option 2. So then what we need to do? Go for transaction value. The transaction value will be nothing but the markup fee, how much we are charging. Okay, now this option can I choose with respect to each invoice? No. Which option? Option 1 and option 2 cannot be chosen with respect to each invoice. Transaction value versus rule 32 we can choose with respect to each invoice, but option 1 and option 2 you cannot choose with respect to each invoice. So you need to decide it in the beginning of the financial year, which will be applicable throughout the financial year. Okay, that is in case of rule 32 sub rule 2. Then rule 32 sub rule 3 in case of air travel agent. In case of air travel agent, what we need to do, if it is transaction value, take the actual commission earned by the air travel agent, on that we need to pay GST. But if it is like simplified methodology, rule 32 scheme, then it will be simple. Take the domestic tickets, domestic bookings, whatever he has made. In the domestic bookings, what is the base fare? So on that base fare, 5% will be taken as the value. If it is international bookings, base fare into 10% will be taken as a value, on which we will be paying GST in case of an air travel agent. Air travel agent is different from air transport service provider. We are not talking about the airlines. We are talking about the agent who booked the ticket. He get a commission, that is a transaction value. Instead, suppose if we need to compute the value in a simple way, rule 32 sub rule 3 says that in case of domestic bookings, take the base fare into 5% will be taken as a value, and in case of international bookings, base fare into 10%, double. 5% double. And what is this base fare? In every ticket there will be 3 components: base fare, fuel surcharge, other charges and taxes. So we need to take the base fare, and on that only 5% or 10% should be computed in case of air travel agent. Then in case of life insurance business, in case of life insurance business, the policies are divided into broadly 4. Risk cover policies. Risk cover policies means we will be paying the premium for a particular term, and if anything happens during the term, the entire amount will be returned. If nothing will happen, whatever premium that we paid is gone. So that is known as term insurance or risk cover policies. So in case of risk cover policies, the entire premium collected by the insurance company is income to the insurance company. So they need to pay GST on the entire premium collected. Okay. Then the next thing that we have is known as reinvestment policy. Reinvestment policy will be out of the premium collected, a portion will be invested elsewhere. So whatever they retain is only the differential amount, on that only they need to pay GST. So in case of risk cover policy, the gross premium collected will be taken as the value. In case of reinvestment policy, the premium collected minus amount allocated for investment, that difference, provided that amount allocated for investment is communicated to the policy holder at the time of issuance of the policy. Okay. Then in case of all other policies, 25% of the premium for first year policies, and for remaining, that is subsequent year policy, it will be 12.5%. What is first year premium? What is subsequent year premium? This year we are issuing the new policies. For that, whatever premium we received will be, so first year premium. Already policies issued in the previous years, for that the premium will be received this year, that is known as subsequent year premiums. So in that subsequent year premiums, our effort will be less, so that's why 12.5%. Whereas first year year premium however will be more, so 25% is taken. If it is a single premium annuity policy, single premium annuity policy means there will be only one premium that will be received, that will be invested, and the return generated out of that premium will be adjusted towards the premium. So there will be only one premium received. So on that single premium into 10% will be taken as the insurance premium for payment of GST. Okay, so total 4 points. Risk cover policy, entire premium collected. Reinvestment policy, amount collected as premium minus amount allocated as investment. Single premium annuity policy, total amount received into 10%. Single premium received into 10%. All other cases, first year premium 25%, subsequent year premium 12.5%. Okay, suppose if premium allocated to the investment is not communicated to the policyholder, this will be treated like a general policy only. Okay, so 25% first year premium, 12.5% subsequent year premium will be taken. Then rule 32 sub rule 5. So we completed first forex transaction, then air travel agent, then life insurance business. Now second hand dealer in goods. A person who is buying second hand goods and selling second hand goods, their purchase should also be second hand, their sale should also be second hand. For example, a second hand dealer in car you take. So a second hand dealer in car, he will be purchasing a car for 1 lakh and he will be selling the car for 1,50,000. Now logically speaking, his value addition is only 50,000. He need to pay GST only on 50,000 now. But so we take transaction value, we pay GST on 1,50,000. But on the car already GST is paid by the manufacturer at the time of sale. So then why again we need to pay GST? For that reason only they brought in the margin scheme. What does the margin scheme says? A second hand dealer in goods will not pay GST on the entire sale value. Will pay GST only on the margin. What is margin? Purchase price minus sale price. What is the advantage? If the margin is negative, no need to pay GST. For example, I purchased at 1 lakh, I sold for 90,000, my margin is negative, so I don't have to pay any GST in this case. And here one important condition is that at the time of purchase, if I have paid any GST, the GST should not be taken as credit. Okay, so please look into this. So value equals to sale price minus purchase price, that is margin scheme, and no value if the margin is negative. ITC should not be availed on purchase. Understood or not? So therefore in this example, suppose if 18% is the rate of GST, so we need to pay 1,50,000 into 18%. So 1,50,000 into 18% is what? 27,000. 1,50,000 into 18% is 27,000. So 27,000 we need to pay as GST. Now if we go for margin scheme, how much GST we need to pay? 50,000 into 18%, that is only 9,000 we need to pay as GST. So therefore the cost to the buyer is coming down now under margin scheme, but only one disadvantage is that, so if they have purchased it from a registered person, so on that they will pay GST, so that GST cannot be taken as credit. Who? The buyer. That is the person who is dealing with the second hand goods. The person who is making a purchase and sale of second hand goods should not take ITC on this car purchased. Okay, then. And the same margin scheme is even applicable in case of, repossessed goods disposed of. Repossessed goods disposed of means what? I am a finance company. What I will be doing? I will be repossessing the asset. I would have financed an asset. Now I will repossess that asset and I will be disposing of that asset. I can also go for margin scheme. So my sale price will be the price at which I am selling the repossessed asset. But what will be taken as a purchase price? The purchase price will be original purchase price as reduced by 5% for every quarter or part thereof. Here the depreciation will be computed because, so I will not be taking the original purchase price because at the time of repossession, I repossessed a used asset. I did not repossess a new asset. So therefore the original purchase price cannot be taken. So original purchase price minus 5% for every quarter or part thereof from the date of purchase till the date of disposal of the repossessed asset. I need to take out the depreciation, then I will get the purchase price. So sale price minus purchase price, on the difference I will be paying GST. Again here also the repossession should be from a defaulting borrower who is unregistered. What if the repossession is from a registered person? So then in that case this is not applicable. I need to pay GST on the entire sale value. In the absence of this rule, I need to pay GST on the entire sale value. Don't forget this. Okay, then in case of vouchers or coupons, that is identifiable vouchers can be redeemed That is, identifiable voucher, non-identifiable voucher we have discussed. Identifiable voucher means what? So it can be redeemed only against a particular product or service. In case of identifiable voucher, what should be taken as the value of voucher? For example, so Pizza Hut or Domino's is giving you one voucher. That voucher will entitle you to get one medium pizza. And what will be taken as the time of supply? At the time of issuance of voucher, what should be taken as a value for payment of GST? Correct or not? Because at the time of issuance of voucher will be taken as the time of supply, and they have to pay GST at the time of issuance of voucher. What should be taken as the value? What is the product that is redeemable against this voucher? What is the service that is redeemable against this voucher? One medium pizza. Correct or not? So what is the value of one medium pizza? Say 329 rupees. The 329 rupees will be taken as the value of this voucher. So what will be taken as the value of the identifiable voucher? Its redeemable value. Redeemable value will be taken. You can see money value of supply is redeemable against such voucher or coupon. For example, you get one voucher and that voucher will entitle you to get one medium pizza, one chocolate cake, one garlic bread and one coke. You understood? Now in this case, you are not consuming say coke, so then you will be redeeming only 3. You say that I don't need coke. So then what will happen in this case? Even though you are not redeeming coke, what will be taken as the value of this voucher? Come on, value of pizza, value of garlic bread, value of chocolate cake and value of that coke also will be taken. Whether you redeem or not is irrelevant because they use the word redeemable. They use the word redeemable. So what is the money value of supply is redeemable against that voucher, that will be taken as the value. Then rule 32 sub rule 7 is there. Rule 32 sub rule 7. So that is services with respect to some notified services we will take the value as nil. But actually this rule is irrelevant now because that services are not yet notified for this purpose. So you just remember up to this only because that rule is not yet notified. Okay, means that services are not yet notified. So therefore that rule is inapplicable right now. So 5 cases we have completed. That is in case of forex transactions, air travel agent, life insurance business, second-hand dealer in goods, vouchers or coupons, etc. Okay. Then, now, while computing TCS under Income Tax Act, so what is this TCS under Income Tax Act? Say I am a car dealer. When I am selling you a car, I will be collecting 2% of the price of the car towards TCS, and I will be depositing against your permanent account number. So you can take that as TCS credit and adjust against the income tax payable. Correct or not? Yes. Now, whether that 2% whatever I am collecting should be included in the value of the car for calculating GST. Because section 15 subsection 2 clause A says that all taxes, duties and cess by whatever name called other than GST should be included in the value. So should this TCS be included in the value? No, because TCS is not having the character of a tax. TCS is an interim levy. Actually, that is on your expenditure. So you are purchasing a car. On your expenditure, I am charging some money. So that is not tax on income. That is tax on expenditure. So it is an interim levy. So just to ensure that some money is collected from you and it will be adjusted in the tax actually payable by you. So due to that reason, this TCS is not having the character of tax. It is an interim levy and that should be not taken into the consideration of value for computing GST. So for that only they gave this circular, TCS not to be included in the value. Then next, there are some business facilitators and business correspondents who will be working for the bank with respect to an area where bank is not having their branch. So when bank is not having a branch in a particular area, they will be appointing business facilitators and business correspondents as their agents. So these people will carry out the bank functions in those areas and they will be receiving the service charges from the customers and they will be remitting the service charges to the bank. On that service charges, who will pay GST? Bank only will pay GST. Then this business facilitator or correspondent will get some commission. On that commission only business correspondent or business facilitator will pay GST. Okay. Then relevant date for determination of exchange rate. I told you while discussing time of supply that the relevant date for determination of exchange rate is the date of time of supply. On the time of supply, whatever is the exchange rate is there, that should be taken. So now exchange rate in case of goods, we need to take the rate specified by CBIC. Central Board of Indirect Taxes and Customs will be specifying one rate. So that rate should be taken, and which date that rate should be taken? Time of supply. First you need to fix the time of supply for the transaction. On the time of supply, whatever is the CBIC rate notified, that CBIC rate notified should be multiplied, so you will get the consideration in Indian rupees. Then in case of services, you will take the GIP rate. What is GIP rate? Average of the buying rate and the selling rate. Prevailing on which date? Again time of supply. For that service, you will determine first time of supply. On that date, whatever is the average of the buying rate and selling rate, you will determine. That you will multiply with the foreign currency to get the Indian rupees. So what is the relevant exchange rate for determining, that is what is the relevant exchange rate for computing the GST when the denomination is in foreign currency? If it is goods, CBIC rate. If it is services, GIP rate. Prevailing on which date? On the time of supply. Suppose if there is any exchange gain or loss, ignore that. I recognize the transaction at 73 rupees per dollar, but actually it is 75 rupees per dollar. On the 2 rupees again, should I pay any GST? No. Ignore that difference. Exchange gain or loss needs to be ignored. So with this, valuation is over. So rule 31A is related to lottery, betting and gambling. Rule 32, that 5 special cases. Rule 33, pure agent, already we discussed. This is rule 34, relevant date for determination of exchange rate. Okay, so this is about valuation, and now we are moving on to the next area, that is composition scheme. Have a look into that. Segment number 8, composition scheme, page number 83. We have two types of composition schemes. First of all, what is composition scheme? Composition scheme is for payment of tax at reduced rates. Compared to a normal person, I will be paying tax at the reduced rate. That is known as composition scheme. And this composition scheme, there are two sections, section 10 subsection 1 and 10 subsection 2A. So 10 subsection 1 is applicable to whom? Manufacturer, trader and supplier of food service provider, whereas 10 subsection 2 is applicable to whom? Manufacturer, trader and any service provider. Okay, so what is the difference between 10.1 and 10.2A? So 10.2A is applicable to whom? Extra, any service provider. A chartered accountant, beauty parlor, commercial coaching center can go for composition scheme under 10.1 or 10.2A. 10.2A only, they cannot go for composition scheme under 10.1. And 10.1 composition scheme is applicable if aggregate turnover during the previous year does not exceed 150 lakhs. 150 lakhs, 1.5 crore, it is nothing but 150 lakhs only. Okay, 1.5 crore, 1 crore is 100 lakhs, 1.5 to 100 lakhs is 150 lakhs. Okay, so if the aggregate turnover during the previous year does not exceed 150 lakhs, then during the current year they can opt for composition scheme. And with respect to 8 states, it will be taken as 75 lakhs. What are those 8 states? So remember, northeastern states minus Assam plus Uttarakhand. Okay, so what are the 8 northeastern states? MMTN, Manipur, Mizoram, Tripura, Nagaland, and ASAM. Okay, A for Arunachal Pradesh. Okay, this A we will take Assam. Okay, ASAM, Assam. Okay, so MMTN, Assam. Like that you remember. So MMTN, Manipur, Mizoram, Tripura, Nagaland. This is Assam, Sikkim, Arunachal Pradesh, Meghalaya. Okay. So now Assam you remove and replace with U. So these are the 8 states for which 75 lakhs limit will be applicable. Manipur, Mizoram, Tripura, Nagaland, Uttarakhand and then Sikkim, Arunachal Pradesh and Meghalaya. For these states 75 lakhs will be the applicable limit. Okay, if aggregate turnover during the previous year does not exceed 1.5 crores or for 8 special category states it will be 75 lakhs, then current year you can opt for composition scheme under 10.1. And to whom this 10.1 will be applicable? You are a manufacturer, you are a trader or you are engaged in supply of food service provider. What will be the applicable rate on which you will pay GST? The applicable rate will be, manufacturer will be 0.5% CGST, CGST, 0.5% SGST on what turnover? Total turnover, not on taxable turnover. Whereas in case of supplier food service provider, 2.5% CGST, 2.5% SGST on what turnover? Total turnover. Okay. Whereas in case of a trader, very important, 0.5% CGST, 0.5% SGST on taxable turnover, not on total turnover. So manufacturer 0.5 CGST, 0.5 SGST on total turnover. Supplier food service provider 2.5% CGST, 2.5% SGST on the total turnover. And trader, it will be 0.5% CGST, 0.5% SGST on the taxable turnover. That should be taken as the value for the, that should be taken as the rates on which we need to pay composite tax liability. Okay. And what is the current year up to which you can be into composition scheme? First, when composition scheme is applicable under 10(1), if the aggregate turnover during the previous year does not exceed 1.5 crores or 75 lakhs, then current year you can opt for composition scheme. Current year up to 150 lakhs, that is 1.5 crores or 75 lakhs, you can be into composition scheme. Current year when you cross that 150 lakhs or 75 lakhs, you are disqualified under composition scheme and you need to pay tax under normal scheme. That is the current year limit. And then if you go for 10(2)(a), so first point you see 10(2)(a), first point, when 10(2)(a) is applicable, if the aggregate turnover during the previous year does not exceed 50 lakhs, and 10(2)(a) is applicable to whom? 10(2)(a) is applicable to manufacturer, trader and any service provider. Now tell me, when 10(2)(a) is beneficial? For a manufacturer, 10(2)(a) is not beneficial because 10(1) is also beneficial. How much is the turnover? 150 lakhs. And what is the tax? 0.5%, 0.5%. But you see the rate in case of 10(2)(a). The rate in case of 10(2)(a) is 3% CGST, 3% SGST. So a manufacturer, trader, restaurant service provider or supplier food service provider will never come into 10(2)(a because 10(1) is only beneficial. Then who will come into 10(2)(a? Any other service provider to whom 10(1) is not applicable will be coming into 10(2)(a. And what is the rate? 3% CGST, 3% SGST on the taxable turnover or total turnover? Total turnover. And what is the current year limit? The current year limit will be 50 lakhs. Then difference in the conditions. So first we need to understand to whom 10(1) is not applicable. That we will see. To whom 10(1) is not applicable. You look into page number 85. You look into page number 85. Yes, 9 RCM. Section 9 is RCM, correct? Section 9 is RCM. So yes, 9 RCM. Okay. Remember, section 9 is RCM. Yes, 9 RCM. Yes, for service providers other than supply of food or other than the limit allowed. Actually, so in case of 10(1), so manufacturer, trader and supplier of food service provider, can they render any other services? No. If they render any other services, they are disqualified under 10(1), correct or not? But the law says that they can render some other services up to 10% of the turnover during the previous year or 5 lakhs, whichever is higher. So please concentrate. So I am a manufacturer, I am a trader, I am a restaurant service provider. I want to provide some other services. Being a manufacturer, I want to provide after sale service. Being a trader, I want to provide delivery service. Being a restaurant also, I want to provide delivery service. Now I am disqualified. So if I am doing that, I cannot be into 10(1). So because 10(1), I should not provide any other services. Then it will hamper my business. Due to that reason, they gave a cushion to me. What is that? I can render service up to 10% of turnover during the previous year or 5 lakhs, whichever is higher. Suppose if this is the current year for which I commence the business, so 5 lakhs. So 10% of turnover during previous year is 0, 0 or 5 lakhs, whichever is higher. 5 lakhs worth of services I can provide during the current year. And suppose if my turnover during the previous year is 110 lakhs, 110 lakhs into 10% will be 11 lakhs, 11 lakhs or 5 lakhs, whichever is higher, 11 lakhs worth of services I can provide and still I can be into composition scheme. Okay. Suppose if I cross that 10% limit, I cannot be into composition scheme. That is the first disqualification. So the first disqualification, yes, for service provider other than restaurant service or other than the services for a notified percentage. So beyond that notified percentage, what is that notified percentage? 10% of turnover during previous year. Beyond that, if you are providing services, then also you are disqualified under composition scheme. Then yes, 9 RCM. N for what? Non-resident taxable person. Already we have discussed who is a non-resident taxable person. So Chris Hember, example, you remember, coming from outside India to India for the purpose of making supply of services or goods, and he is not having any physical place of business in India. He is known as a non-resident taxable person. They cannot go for composition scheme. Then I for interstate supply of goods or services. Suppose if I am making interstate supply of goods or services, can I opt for composition scheme? No. And then another end is non-taxable supplies. What are non-taxable supplies under GST? Alcoholic liquor for human consumption and petroleum products are non-taxable supplies. Suppose if there is a restaurant which is having license to sell liquor, a restaurant which is selling liquor, can they opt for composition scheme? No, because they are making non-taxable supplies, they cannot opt for composition scheme. And then supplier of goods or service through e-commerce operator. There is a restaurant which is selling food through Swiggy, so can they opt for composition scheme? No, because supplier of goods or services through e-commerce operator. There is a supplier who is selling through Amazon or Flipkart. Can they opt for composition scheme? No, because they are making supplies through e-commerce operator. So supplier of goods or services through e-commerce operator cannot opt for composition scheme. Then RCM. R for RCM 9 subsection 4. Who is coming under RCM 9 subsection 4? Promoter or builder. Promoter or builder who is making inward supply from an unregistered person is covered under 9 subsection 4. Come on, promoter or builder's aggregate turnover easily will cross 150 lakhs. 150 lakhs, okay, by selling one flat itself it will cross. So why the hell they will be coming into composition scheme? Okay, so that is one waste point. And then C for casual taxable person. Casual taxable person means like how non-resident taxable person come from outside India to India, a casual taxable person come from the other state to this state. Okay, for example, in order to increase the weight of kg of movie, they are importing Sanjay Dutt, so from Bollywood to your Sandalwood, correct or not? So Sanjay Dutt will be coming under casual taxable person in Karnataka. Why? Because a person coming into a state not having physical place of business. Perhaps I am also casual taxable person for that matter, no? So casual taxable person is not having a physical place of business in the state. Won't you give me some space in your house? You can, na? Yeah. So then I have physical place of business in Karnataka, yeah? So like that I can claim, you understood or not? So, but a person who is entering into a state who is not having physical place of business in that state will be called as a casual taxable person, and that casual taxable person is also not eligible to opt for composition scheme, that is C. Then M, manufacture of certain notified goods. So what are those notified goods? Ice cream, edibilized pan masala, tobacco and tobacco products, aerated waters. Aerated waters means sodas, beverages. Okay, so they cannot opt for composition scheme. Now ice cream, there is an ice cream shop. Okay, so can that ice cream shop, Ibaco, like that ice cream shop is there, so can they opt for composition scheme? Yes, they can opt for composition scheme. My dear, it is manufacturer of ice cream, yeah, not trader of ice cream. So manufacturer of notified goods cannot opt for composition scheme, but a trader can opt for composition scheme. Okay. Then, so there is one query, one friend has asked, whether while computing 10% limit, whether we take restaurant service in the 10% limit? No, because restaurant service, anyhow you are eligible for 10-1. So other service, other than restaurant service, you can provide up to 10%. Okay, so then, so these are the cases where composition scheme under 10-1 is not applicable. So remember, yes 9 RCM, yes for services other than supply of food are 10% limit, and then N for non-resident taxable person, I for interstate supply of goods or services, another N is that is non-taxable supplies, E for supply of goods or service through e-commerce operator, R for RCM under section 9 subsection 4 promoter or builder, and C for casual taxable person, M for manufacturer of notified goods, that is ice cream, edibilized, tobacco, tobacco products, pan masala and aerated waters, because these are classified as hazardous goods. Okay, as per Prevention of Food Adulteration Act, even ice cream and edibilized also hazardous goods. Yes, dear, don't eat too much of ice cream, so that is equivalent to consuming pan masala. understood or not? So like that I did not say. So Prevention of Food Adulteration Act has said, okay, all these are considered as hazardous goods. That's why manufacture of these goods are not eligible for composition scheme. Okay, cigarette also daily one, it is not a problem, but no, not daily one, monthly one, not a problem. But if you are eating ice cream daily, no, that is equivalent to smoking daily. That is hazardous to health. Okay, that's what they are telling. I don't consume ice cream. For me, no problem. You will only eat now. So be careful. And then next. So now, what is the difference in the conditions? If you see the difference in conditions in 10.1 versus 10.2a, 10.1. So manufacturer of notified goods cannot opt for composition scheme, but 10.2a, manufacturer of notified goods and supplier of notified service. What are those notified services? Not yet notified. Then both are same. Then both are same. So yes, 9 RCM, here 9 RCM. How sir? Yes, 9 RCM, here 9 RCM. Why 9 RCM? So because in 10.2a you can provide services now. You can provide services, any services you can provide. So that is the only difference. Then, so this is with respect to composition scheme 10.1 and 10.2a. What is the meaning of aggregate turnover? What should be taken as the aggregate turnover for determining the eligibility to opt for composition scheme? So now we need to understand the meaning of turnovers. Okay. So there are three different turnovers that we are coming across. I have given the meaning of all these turnovers at the end. I have given the meaning of all these turnovers at the end. I think composition scheme, what's the page number? Yes. So I have given the meaning of turnovers at the end. Please see page number 87. Page number 87, meaning of various turnovers, you can see there are three turnovers that we come across in composition scheme. Aggregate turnover for determining the eligibility to opt for composition scheme, and then turnover for determining the 10% limit, and turnover for payment of GST under composition scheme. Okay, and at the end of the book also I gave some turnovers, that is overall GST, different turnovers in different places, everything I gave at the end. Okay, so if you see the last pages appendix, I have given meaning of various turnovers which we come across in different places. So aggregate turnover for registration, aggregate turnover for determination of eligibility to opt for composition scheme, turnover for determining 10% limit, turnover for payment of GST under composition scheme, and turnover for reversal of ITC, turnover for computation of refund. These are the various turnovers we have. The turnover summary I gave in one place, so that we will see later. So right now we need to understand what is the meaning of turnover for the purpose of composition scheme. So there are three turnovers, that is number one, turnover for determining the eligibility to opt for composition scheme. What should be taken as the turnover for determining eligibility to opt for composition scheme? Generally aggregate turnover means what? Aggregate turnover will include taxable supplies, exempted supplies, non-taxable supplies and zero rated supplies. Okay, so first, what are the various supplies we need to understand? There are total 4 supplies here. There are total 4 supplies. So we have taxable supplies, we have taxable supplies, and we have exempted supplies, and we have non-taxable supplies, we have non-taxable supplies, and we have zero rated supplies. What are zero rated supplies? Zero rated supplies. What are treated as zero rated supplies? So export of goods or services, then supply to SEZ. So these two are treated as zero rated supplies, correct or not? Then what are treated as non-taxable supplies? Alcoholic liquor for human consumption, then petroleum products. petroleum products, these are treated as non-taxable supplies. It is already there in the book, no need to write, just listen. So zero rated supplies is export of goods or services, supply of goods or services to SEZ is known as zero rated supplies. What are treated as non-taxable supplies? Alcoholic liquor for human consumption and petroleum products. And what are treated as exempted supplies? So exempted supplies for payment of GST, notified as exempted. We saw this while discussing input tax credit. Notified as exempted, and number 2 nil rated, and number 3 non-taxable. These three are treated as exempted supplies. Okay, so now the remaining balancing figure is known as taxable supplies. So this I have discussed in the second chapter. So what will be treated as the meaning of various supplies. So now don't worry about that, that is already there in segment 2. Now what we need to understand is, while computing aggregate turnover, we need to take taxable supplies, exempted supplies, non-taxable supplies and zero rated supplies. Even interstate, intrastate, both should be taken. Export also should be taken into aggregate turnover, because zero rated includes export, that should also be taken into aggregate turnover. But what will be not considered into aggregate turnover is that inward supply covered under RCM, then taxes, CGST, SGST, UTGST. This is the general meaning of aggregate turnover. Okay, what is the general meaning of aggregate turnover? Can you please tell me once? That is taxable supplies, exempted supplies, non-taxable supplies, zero rated supplies, but we do not include inward supply under RCM. Why inward supplies will not come? Turnover means outward supply. Turnover means outward supply. So why inward supply will come? Even though you are liable to pay GST under RCM on that, but don't include it in your turnover. And even taxes also will not come. This is the general meaning of aggregate turnover. What is the meaning of aggregate turnover? For the purpose of determining the eligibility to opt for composition scheme. Same as this aggregate turnover, but 2 extra points are there. Check that and tell me what are those 2 extra points. You can see there, interest on loans, advances, deposits. Interest on loans, advances, deposits is what? Exempted supply. Actually it is to be taken in aggregate turnover, but they are telling interest on loans, advances, deposit to be excluded. Then one more special point also you can see, last, pre-registration turnover. What is a pre-registration turnover? Threshold limit for registration means pre-registration turnover is also included. Okay, pre-registration turnover is included in the aggregate turnover. Whether aggregate turnover will be checked previous year or current year. For determining the eligibility to opt for composition scheme, we need to compute the aggregate turnover of the previous year or the current year. Previous year we need to take. And whether the aggregate turnover to be computed state wise or on all India basis, we need to compute on an all India basis. Now in that notes you write down, suppose previous year is 2020-21. In the previous year 2020-21, pre-registration turnover is 40 lakhs. So up to 40 lakhs you are not required to register. After crossing 40 lakhs you got registered. And what is the post-registration turnover? The post-registration turnover is somewhere 120 lakhs. The post-registration turnover is 120 lakhs. Now can you opt for composition scheme? So 2020-21. So previous year, that is 2021-22. So for the current year 2021-22, can we opt for composition scheme? What is the aggregate turnover of previous year 2020-21? Can you please tell me? What is the aggregate turnover of previous year 2021? It is 160 lakhs. Why? So even pre-registration turnover will be included. Even pre-registration turnover will be included. But that time I am not required to register now. Let it be. Even though I am not required to get registered, that pre-registration turnover will also be included. So what is that turnover? 160 lakhs. So which exceeds 150 lakhs, which exceeds 150 lakhs. Therefore composition scheme under section 10 subsection 1 not available. Therefore composition scheme under section 10 subsection 1 not available. You understood this? So that is the importance of this pre-registration turnover to be included. Okay. Then next you may get a doubt, sir, you are telling that non-taxable supplies should not be made, but non-taxable supplies also we are including. See, all the restrictions, yes, 9 RCM, whatever we are discussing is only for the current year, not for the previous year. Previous year you make non-taxable supplies, previous year you make supply through e-commerce operator, previous year you make interstate supplies, all this is okay. Current year don't make. Current year if you are making, you are not eligible for composition scheme. So that restriction is not for the previous year, the restriction is only for the current year. You understood? That's the reason why previous year if you have non-taxable supplies also, everything we will take. Okay, then second one, turnover for determining 10% limit. What is the need of this 10% limit? We need to take 10% of the turnover during previous year or 5 lakhs, whichever is higher. So that should be determined previous year or current year? Previous year. 10% of turnover during previous year. And whether it should be determined on all India basis or on state-wise basis. It should be determined on a state-wise basis, not all India basis. Only aggregate turnover all India basis. Remember A for A. Aggregate turnover all India, aggregate turnover all India, aggregate turnover all India. Turnover is not all India, turnover will be state-wise. So what, sir, why are we discussing this? Because say for example, if you take, you are having business in 3 states, Maharashtra, Tamil Nadu and Karnataka, you are having business, and your turnover during the previous year. What is your turnover during previous year? The turnover during previous year is, say, in Maharashtra 60 lakhs. In Maharashtra 60 lakhs, Tamil Nadu 40 lakhs and in Karnataka 30 lakhs. Now, what is the total turnover that you are having? 60 plus 40 plus 30, that is 130 lakhs. What is the limit up to which services can be provided during current year? So during current year, so services provided, how much services you can provide during the current year? So current year you can provide service 130 lakhs into 10%, how much? 13 lakhs. 13 lakhs or 5 lakhs, whichever is higher, 13 lakhs. That is absolutely wrong answer. Why it is wrong answer? You should never be determining it based on that way. So we need to take Maharashtra, 60 lakhs into 10%, 6 lakhs or 5 lakhs, whichever is higher, 6 lakhs. And Tamil Nadu, 40 lakhs into 10%, 4 lakhs or 5 lakhs, whichever is higher, 5 lakhs. And then Karnataka, so it will be how much? 30 lakhs into 10%, 3 lakhs or 5 lakhs, whichever is higher, 5 lakhs. So current year we can render services 16 lakhs. So in MCQ, they will be testing this. 13 lakhs, 16 lakhs, we will be answering it as 13 lakhs. We should never do it on a total basis. So state-wise, which means that in Maharashtra, we cannot render services more than 6 lakhs. In Tamil Nadu, we cannot render service more than 5 lakhs. In Karnataka, we cannot render services more than 5 lakhs. So therefore, turnover will never be computed on all India basis. Turnover will be computed state-wise. Then if you observe, whatever is the meaning of aggregate turnover for determining the eligibility to opt for composition scheme, the same turnover is there, the same meaning is there even for turnover. The only difference is what you know. This will be on an all India basis, this will be computed on a state-wise basis. That is the only difference. Rest of the information will be same. Then the third one, turnover for payment of GST under composition scheme. So what is the difference? So whether we need to take previous year or current year for payment of GST under composition scheme, current year turnover we need to take. And here we should ensure that there are no taxable supplies during the current year. If you are having taxable supplies, composition scheme is not applicable. Correct or not? Current year. Sorry, non-taxable supplies. Current year, if you have non-taxable supplies, you are not eligible for composition scheme. And current year, if you have interstate supplies, you are not eligible for composition scheme. So due to that reason, current year, you should ensure that you are not having non-taxable supplies, or you are not having interstate supplies, or you are not having export of goods or services. Okay. And one more important point here is that we will not be taking the pre-registration turnover. Pre-registration turnover will be excluded. For example, let's try to understand this. Number 3, you write down there, previous year aggregate turnover. Previous year aggregate turnover is 120 lakhs. 120 lakhs. Current year, so composition scheme under section 10 subsection 1, available or not available? Available. Okay, available. So now, what if the previous year aggregate turnover is 0 lakhs? That is, we are starting the business current year. So whether current year composition scheme is available or not available? Available. Okay, so now what happened? Current year we commenced the business. Okay, so for 2021-22 commenced business. Commenced business, and for this 2021-22 the aggregate turnover is 180 lakhs. The aggregate turnover during the current year is 180 lakhs. So up to 20 lakhs is the threshold limit for registration. Up to 20 lakhs is the threshold limit for registration. After crossing 20 lakhs only they need to register. So this 20 lakhs is what? Pre-registration turnover. Whether we need to pay GST on this pre-registration turnover? No GST, because we would not have registered. So now what will be the turnover? So remaining on which we will pay GST under composition scheme. Come on, tell me. Is it next to 150 or next 130? Next to 150 or next to 130? Next to 150 or next to 130? Only 130 lakhs, not 150 lakhs. Why next to 130? The overall limit should not cross 150 lakhs. Already 20 lakhs I did not pay GST. So remaining 130 lakhs I will pay GST at what rate? So GST under composition scheme. At the composite rates. Okay. So at the composite rate, so composition rate, and thereafter, so remaining how much turnover we have? 30 lakhs. Remaining 30 lakhs, I will pay GST at what rate? Normal rate. GST under normal rate. So remember, up to the threshold limit for registration, pre-registration turnover, no need to pay GST. That's why it should be excluded. On remaining turnover up to 50 lakhs or 150 lakhs. If it is 10 to a 50 lakhs. If it is 10 150 lakhs. So on that remaining turnover I need to pay GST under composition scheme, and after crossing this overall 150 lakhs I will be paying GST under normal scheme. Okay. So this is about the meaning of various turnovers. Got the clarity related to this here? So these are all the kind of adjustments that will be tested in the exam. Okay. Then next, so that is what I have given there. So what is the meaning of turnover, meaning of aggregate turnover, etc. Now look into other procedural provisions. Come back to page number 84. Suppose if you are already registered, if you want to enter into the composition scheme, you can enter only in the beginning of the financial year. During the financial year you cannot enter into the composition scheme. For that you will be required to file one form. What is the form that you need to file? CMP02. CMP02 is the form that you need to file to enter into the composition scheme, but you can enter into the composition scheme only commencement of the financial year. Okay, so therefore before commencement of the financial year we need to make application for composition scheme in CMP2. Suppose if you are registering for the first time, so then in that case, so CMP2 not required to be filed. Along with the registration application itself you can enter into the composition scheme. So in your REG1 registration application itself you can enter into the composition scheme, and anytime you can enter into the composition scheme that way. Okay, because you are registering now only. Now if you are already registered only beginning of the financial year, now only you are registering, at any time you can enter into the composition scheme. Then you need to display composite taxable person on every notice, signboard displayed at the principal place of business and additional place of business. And what is the type of returns that we will be filing? Monthly returns or quarterly returns? Quarterly returns in CMP8. Quarterly return in CMP8 by 18th of the month following every quarter. So even GST is payable on a quarterly basis. A person opting for composition scheme is required to pay GST on a quarterly basis by 18th of the month following every quarter, and an annual return is required to be filed in GSTR4 by 30th April of the succeeding financial year. General annual return is GSTR9, but a person opting for composition scheme will be filing GSTR4 by 30th April of the succeeding financial year. Okay. Then one important point is also there. When they pay GST, so what they need to do is that first they need to take, that is GST payable on. So first they need to take whatever is the value as per bill of supply. Whatever is the value as per bill of supply during quarter. Bill of supply. Okay. So suppose if the GST is payable for the period, say quarter one, value of supply as per bill of supply, value as per bill of supply during current quarter. So during current quarter, okay, so say current quarter is June to September, July to September, that we will take. So we need to add the advances received during the current quarter pertaining to the next quarter, because GST payable on advances by a person opting for composition scheme. So we need to add advances received during current quarter, pertaining to next quarter, okay. So CQ, sorry, but during current quarter pertaining to next quarter, minus advances received during previous quarter pertaining to current quarter. Why pertaining to current quarter we should reduce? Because already it would have been taxed in the previous quarter. So current quarter it will be there in the bill of supply. Current quarter, that advance will be there in the bill of supply, so take out. And advances received in the current quarter pertaining to the next quarter you need to add. So this advance adjustment we need to make. On that only we need to compute the GST payable. Don't forget this, okay? So whatever is the value as per bill of supply during the current quarter. So in that bill of supply, there will be some advances received in the previous quarter related to this quarter. Now take out. Why you need to take out? Because it would have been already taxed in the last quarter, previous quarter. So now current quarter you will receive some advances for which you will not raise bill of supply. So that also you need to add. On that you need to pay GST under composition scheme. Okay. Then next one, validity of the composition levy. So look into page number 85. Validity of the composition levy. If all the conditions are satisfied, option remain valid. So every year no need to intimate that I want to go for composition scheme. So every year you check whether you are eligible for composition scheme or not. Then you can continue in the composition scheme. No need to give any intimation. What is the form for intimation? One time CMP2. And that is sufficient. Every year you don't have to intimate. Suppose if there is any violation of the conditions, if the conditions are not satisfied, for example, you should not make interstate supply, you made interstate supply. You should not make supply through e-commerce operator, you made supply through e-commerce operator. You should not make non-taxable supply, you made non-taxable supply. Like that, any breach of condition. Then in that case, you voluntarily come out of the composition scheme within 7 days. Within 7 days you come out of the composition scheme whenever there is a breach of condition. So they are giving a grace days of 7 days. What will happen if you are not coming out of the composition scheme? So then the department will identify, whenever they identify, they give a notice in CMP 5 and you need to give a reply to that notice in CMP 6 within 15 days, and within 30 days they will pass an order in CMP 7 either accepting the reply or denying the composition scheme. Okay, so if when you are coming out, what is the grace days that is allowed? 7 days. What is the form to come out of the composition scheme? CMP 4. Even if you are not breaching the conditions, you can come out of the composition scheme voluntarily by filing CMP 4. When a person will voluntarily come out of the composition scheme, even if they are not breaching the conditions, it is like composition scheme become unviable. First of all, why the hell a person will go into composition scheme? Because in composition scheme, first of all, you cannot take ITC on your inward supplies and you cannot collect the GST from the recipient you need to pay, which means the profit will come down. But still people will go for composition scheme because they are not charging GST to the recipient. When they are not charging GST to the recipient, the price will come down. When price is coming down, the volume will increase. When the volume increases, automatically the total profit will increase. A normal scheme person will make 1000 sales. I will be making 1500 sales. When I make 1500 sales, even though profit per unit is less, but in the volume it will be covered up. Okay. For example, normal scheme person is selling 1000 units and I am selling 1500 units and he get a profit of 1000 rupees per unit. I get a profit of say 800 rupees per unit. So now what is the total profit that is? So 1000 into 1000, 10 lakhs. 1000 into 1000, 10 lakhs. 1500 into 800, 12 lakhs. So even though my profit per unit is less, but my total profit has increased now. This is the advantage of composition scheme. Suppose if it is an industry which is price insensitive, for example coaching center you take. Coaching center is a price insensitive industry. Because I am charging 500 rupees, so 2000, 3000 students should have come and sit now. So why only this many students are only there? Why? Why? So because I am not a great faculty. Had I been a great faculty, so then even if I charge 50,000 also people will be coming and sitting. You understood or not what I am trying to convey? So which means that in coaching the price is not the factor. Of course people could not come because COVID restriction, I can understand all those things, but what I am trying to convey here is that so it is not the price that acts as a factor, correct or not? Yes or no?
Yes, sir.
So then if I am selling my Google Drive lectures at 1500 rupees, then there should not be any other indirect tax faculty in this earth. That will not happen. That will not happen. So why that will not happen? Price is not at all the factor. It is about the quality that is matter, correct or not? So therefore for this kind of industry composition scheme is one big waste. So then I need not continue into the composition scheme, because whether I decrease the price or not, the volume is not going to increase. So then it is not viable to continue in the composition scheme. So I will come out of the composition scheme. So whenever I want to come out of the composition scheme, so then I will be filing one form, that is CMP4. Okay. So there is one question, sir, no GST on advances in case of goods. That is only in case of a person other than those opting for composition scheme. For a person who is opting for composition scheme, GST payable on advances. Okay. So then to enter into composition scheme, what is the form? CMP2. To exit out of the composition scheme, it is CMP4. CMP2 to enter, CMP4 is to exit, and CMP5, suppose if you have breached the condition, you did not come out of the composition scheme, a notice will be given in CMP5. For example, you made a supply through e-commerce operator, department identified that you made a supply through e-commerce operator, they gave a notice in CMP5. Now you are giving a reply, I am extremely sorry, I don't know that I should not make supply through e-commerce operator, it is only one transaction, so kindly forgive me and allow me to continue into the composition scheme. This reply I have to give within 15 days. After giving reply within 15 days, then they will study within 30 days, and thereafter they will be either accepting your reply. So okay, so next time onwards don't make supply through e-commerce operator, and you should make only intra-state supplies, or they will say one transaction or 10 transactions, you breach the condition, so composition scheme is denied to you. Like that they will pass an order. Okay, what is the time limit within which they pass an order? 30 days. So notice will be CMP5, reply to the notice in CMP6, and order in CMP7. What is CMP8? Return, quarterly return. Quarterly return in CMP8, all the forms I have given in this place. And whenever you come out of the composition scheme and you go into normal scheme, 18(1)(c), so much of the GST paid on the closing stock, that is inputs as such held in stock, inputs in WIP, inputs in FG and capital goods, as reduced by 5% for every quarter or part thereof from the date of purchase till the rate of conversion, we can take as ITC by filing one form called as ITC01, which should be duly certified by a CR, CMA whenever the amount exceeds 2 lakh rupees, and within 30 days from the date when we are registering, that is when we are converting into the normal scheme, correct or not? So that ITC1 also I have given here. Statement in form GST ITC1 within 30 days of intimation, application order, details of stock of inputs, inputs contained in semi-finished goods or finished goods, even capital goods also. Same way when you are going into normal scheme, that is you are under normal scheme and now you are going into composition scheme. When you are going into composition scheme, you need to reverse the ITC availed on the closing stock in terms of 18 subsection 4, correct or not? For that you need to file one form, that is ITC 3. So that ITC 3 needs to be filed, GST ITC 3 needs to be filed. So I connected, whenever you file composition scheme intimation, you need to reverse the ITC, so ITC 3. Whenever you come out of the composition scheme CMP 4, and you will avail the ITC on closing stock. Okay, I connected it here. And then other forms. Then denial of composition scheme will be prospective or retrospective. It can be prospective or it can be retrospective. If it is retrospective, not before the date when we made the breach. For example, on one fine day we made supply through e-commerce operator. Say for example on 25th of July 2021, we made supply through e-commerce operator, and the department identified this fact at a later point of time, and they passed an order on 30/9/2022. They passed an order. That order can be prospective. Prospective means what? With effect from 1st October 2022. This person cannot opt for composition scheme. That is prospective order. Retrospective order with effect from an earlier date. This person cannot opt for composition scheme. What could be the earlier date? Any date, but not before 25/7/2021. Why? Because we breached the condition only on that date. Up to that date, we are satisfying all the conditions, so they cannot deny the composition scheme before this date. So they can go retrospectively, but not before the date when we made the breach. Suppose if they deny the composition scheme retrospectively, already we paid some tax, that will be reduced, and remaining tax we need to pay. Whatever is the normal tax payable minus tax already paid under composition scheme, the differential amount is payable. That is with respect to this. Prospective or retrospective, it can be prospective or retrospective. However, such effective date shall not be prior to the date of contravention of the provisions. Okay. Then, when is it advisable to opt for section 10 subsection 2A? Number 1. You are into any services other than supply of food services, then you can go into the composition scheme 10(2)A, or you cross the limit of 10%. You cross the limit of 10%, then also 10(1) not applicable. You are a manufacturer or trader or service provider engaged in supply of food, you cross the 10% limit of other services, then also you can come into 10(2)A. But in 10(2)A, you need to remember the aggregate turnover during previous year should not exceed 50 lakhs. And then next point is that, so if you are under 10(1), you can render service up to 10%. On that service up to 10%, what rate you need to pay? Manufacturer means 0.5 on total turnover. Restaurant means 2.5 on total turnover. Trader means 0.5 taxable turnover. But for that services, 10% limit of service, what rate? The rate applicable to the trader. The rate applicable to the trader. What is the rate applicable to the trader? 0.5% CGST, 0.5% SGST on the taxable turnover. Don't forget, whatever is the rate applicable to the trader. Sir, if they are manufacturer, that rate. If they are restaurant service provider, that rate. If they are trader, that rate. Like that, you will be learning somewhere. That is irrelevant. Okay, so that is wrong. So what is that you need to see? For the 10% limit of services, we need to take what? The rate applicable to a trader. That should be taken, because that is only given in Rule 7. Okay. With this, we completed composition scheme here. Okay. Then we will be looking into the meaning of supply. Actually, this area we didn't discuss at all. So have a look into the meaning of supply. 1 second. Can we do some problems discussion?
Yes, sir.
Yes. So too much of theory, na? Okay. So fine. Tomorrow also I can spread this theory discussion. So for some time today, for the rest of the time, we will do some problems and solutions discussion. Okay. So that it will be like whatever topics we have completed so far, on that whatever questions that I have given, that we will do. Is it okay?
Yes, sir.
Fine. So just give me 5 minutes. Okay, don't go anywhere. Just relax yourself. 5 minutes. I will just take. So even for online students, I will share the PDF. Wait. Are you in my Telegram channel? You have Telegram?
Yes.
Definitely you should have. So open Telegram channel, search for THARUN'S Brainery. Search for THARUN'S Brainery. You will see one PDF. So you please take your telegram. So look into that. Can you find that mighty 50 questions? Yes. You can join channel also. Here no like, share, subscribe option. Only join option. Okay. So I'm just opening that file. One sec. Okay, welcome back. So this PDF you can check in my channel, Telegram channel, it is already there. You can take a print of it and you can keep. These are the top 50 questions. So these 50 questions I will be discussing, and related to these 50 questions along with the concept also I will discuss, okay, and so that it will be like a revision for you. And here these 50 questions are taken from all the chapters, so it is not from only for one or two chapters across GST, customs and FTP. So that 50 questions is for the revision purpose, okay. So now you can see that in page number 4. So I'm just starting with question number 1. Sundar is a HRD, head of Invoice, for the year ending March 31st, 2019. CTC of Sundar as per employment agreement is as follows. Salary 2 lakh per month, 24 lakhs. Residential accommodation cost to company 6 lakhs. Conveyance facility reimbursement up to 25,000 per month, 3 lakhs, and the total is 33 lakhs. Here what will be taken as the liability in the hands of Sundar? Let's see that. So an employee providing services to the employer in the course of employment is excluded from supplying. So no need to pay GST on the salary because of section 7 subsection 2 read with schedule 3, that is employee to employer in the course of employment is excluded from supplying. Therefore it is not a supply. It is not a supply, okay. Which one? This 24 lakhs will not be coming under supply. Then residential accommodation cost to company. Then there is one CBSE clarification also given, which says that if employer gives any perquisites to the employee and that is given under the salary offer document, so which will forming part of salary, that is also excluded from supply. So because it forms part of salary, so therefore there is no GST on that. So on this 6 lakhs also it is not a supply. Then conveyance facility reimbursed up to 25,000 rupees per month. So this is also allowances which will be specified under CTC. So forming part of CTC. So therefore that is also not a supply. So whatever is given by employer to employee for the services by employee to employer, so which is forming part of CTC, will not be taken into any supply. That is not a supply, that is excluded from supply as per 7 subsection 2 read with schedule 3. Is it clear? Then on January 1, 2019, Infosys gives a new car to Sundar worth rupees 12 lakhs. Gift will not be specified in CTC. Salary offer document, gift will not be specified. Now when the gift is given by employer to employee, we need to see the value of the gift. If the value of gift exceeds 50,000 per annum per employee, it is treated as supply under 7(1)(c). If the value of the gift does not exceed 50,000 per annum per employee, then it is not a supply. So here the car value is 12 lakhs. So gift of car is not covered by CTC as well as employment agreement. Okay. Sundar owns it. So whether this 12 lakhs will be covered under supply? Yes. This will be treated as supply under section 7(1)(c). Why it will be treated as supply under 7(1)(c)? Employer and employer are treated as related due to that reason, and 7(1)(c) transaction between related parties. So this will be treated as supply under 7(1)(c) as the value exceeds 50,000 rupees. As the value exceeds 50,000 rupees, so the entire value will be treated as supply. Sundar owns a commercial flat. He has given on rent to Infosys, monthly rent being 3 lakhs. So this is by whom to whom? Employee to employer. So now for this commercial property given on rent, who is their employer-employee relationship? No. So now Sundar is a separate party. So now when Sundar is giving his commercial property on rent to Infosys, on which 3 lakhs, Sundar is liable to pay GST because it is taxable. Renting of immobile property divided into two: residential property and commercial property. Residential property given on rent for residential purpose is exempted. Residential property given on rent for commercial purpose will be taxable. commercial property always taxable. If it is given for residential purpose, then it is exempted if per day is less than or equals to 1000. For example, a hotel given on rent for a temporary stay. So now per day if it is less than or equals to 1000, then it will be exempted. So but this is not that. So this is like monthly rent. So monthly rent means a commercial property given on rent for commercial purpose. So this will be taxable. If Sundar is registered, he will pay GST. See, when I say taxable, it does not mean they need to pay GST. If they are registered, they will pay GST. If they are not registered, they will not pay GST. So just because it is taxable, so don't tell that they need to pay GST. Is it clear or not? And just because they are unregistered, don't change the character of this service to exempted. So the service will be taxable or exempted. If they are registered, they will pay. If they are not registered, they will not pay. Simple. You understood? Then discuss whether GST is applicable. Determine the amount of GST liability assuming GST rate is 28% for car and 18% for others. Rent received on account of renting of commercial property by Sundar to Infosys. So this will be taxable. What will be the rate of GST? 18%. So 3 lakhs into 18%. And this will become supply under 7(1)(a). This will become supply under section 7(1)(a). Any activity for consideration in the course or furtherance of business, and it will be taxable. 3 lakhs into 18%, so 54,000. But provided Sundar is registered, the GST is payable. Otherwise, GST not payable. Salary received, no GST because it is excluded from supply. Residential accommodation conveyance facility. So residential accommodation conveyance facility provided by Infosys to Sundar, no GST because that will be coming under CTC, forming part of salary. Gift of car by Infosys to Sundar, yes, that will become supply under 7(1)(c). Clear here?
Yes, sir.
And the car will be taxable at what rate? 28%. So that is this. Okay. Now, that's what summary I gave. Suppose if employee receives any cash or any facilities, if it is covered under CTC, so that will be out of supply, out of the scope because of schedule 3. Suppose if employer to employee, any money is collected, employer providing any services to employee, for example canteen facility. This is a confusion that many students are having. So canteen facility provided by employer to employee, for which employer will be collecting some money from the employee. It may be nominal amount, even then it will become supply under 7(1)(a), and that will be chargeable to GST. Okay, so because in July 2021 exams they gave this question and every student wrote that there is no GST. So because we cannot blame students also, because we need to blame the teachers only, because if the teacher has properly told that point, why a student will write it as a mistake? So because the teachers are also basically illiterate nowadays. Okay, so they will not study properly, just like that they will write everything whatever they like, they will be telling. So therefore, this point has been given. The company supplies food and beverages to the employees and all the items are priced at 10% of the actual cost of the company. During the month of October 2020, the company has charged 50,000 to the employees, assuming that it is intrastate transaction. So majority of the students, what I saw is that they wrote it as not a supply. Okay, but I will be telling in my regular batch, fast track batch, every batch that whenever there is a consideration, there is consideration or not. It is employer to employee, employer charging some consideration or not. That may not be full amount, but some consideration is charging now, then it will become supply under 7(1)(a). And employer and employee are treated as related. So in case of related party transaction, the value will be determined under Rule 28. As per Rule 28, what should be taken? Open market value. What is the open market value? If 10% is 50,000, what is the value of that food? 5 lakhs. So 5 lakhs will be taken as a value, and on that 5 lakhs GST is payable. And the rate of GST given in this question is that, so rate of GST on restaurant service, it will be, rate of IGST can be taken as 18 on all goods and service except GTA, transportation and restaurant service. So for which 5%. So therefore, so here can we take it as restaurant services? So see this. So look into this food and beverages Food and beverages, how much will be taken? 5 lakhs. So why we are not taking the restaurant service point here? See, are they into restaurant business? They are not into restaurant business. So it will come under all other services. Okay. So only when they are running a restaurant, it will be 5%. That is another point. But of course, their students will be smart. They will be able to understand. But this is the point where they made a mistake. They wrote it as nil, no GST. So why there is no GST? Because it is not a supply like that they wrote. And some students wrote 50,000 into GST. 50,000 into GST is also wrong, because related parties you cannot take transaction value. You need to determine the value as per rules. As per rule 28, what should be taken? Open market value should be taken. So open market value is 5 lakhs, on that 9%, 9%. Is it clear or not? So that is only what I have given. So whenever there is some money received for providing the services by employer to employee, that will become supply under 7(1)(a). Suppose if facilities are provided by employer to employee covered under terms of employment, no, because of CBIC clarification. If facilities are provided and it is not covered under employment terms, then we need to see like gift. So gift value exceed 50,000, then only it will be treated as supply. Okay. So this is the summary that you need to remember related to employer-employee transactions. So this is most sought after question, not yet tested. So just in one adjustment they gave this, but creating a separate question on employer-employee we haven't seen so far. So this type of question can be coined. Okay. Then question number 2. Question number 2. AB Private Limited Pune provides housekeeping services in Maharashtra. The company supplies its service exclusively through an e-commerce website owned and managed by High-Tech India Private Limited, Pune. The turnover of AB Private Limited in the current year is 18 lakhs. Advise AB Private Limited as to whether they are required to obtain GST registration. Will your advice be different if AB Private Limited sells ready-made garments exclusively through e-commerce website owned and managed by High-Tech India Private Limited? First of all, there are 3 notified services. If supplied through e-commerce operator, liability to pay GST is on e-commerce operator. What are those 3 notified services? HAT. H for housekeeping service, A for accommodation service, T for transportation of passengers by radio taxi, motor cab, maxi cab, motorcycle. Okay. Now in these 3 services, who will pay GST? E-commerce operator will pay GST. And in case of housekeeping services and accommodation services, supplier should be unregistered. In case of transportation of passenger service, supplier may or may not be registered. Okay. So now in this case, first, when they are required to register, only when their aggregate turnover exceed threshold limit. What is their aggregate turnover? 18 lakhs. In Maharashtra, what will be the applicable turnover limit, threshold limit? It will be 20 lakhs. If you are engaged in supply of services, the applicable threshold limit in Maharashtra will be 20 lakhs. So here it is 18 lakhs. So they have not crossed 20 lakhs. So they are unregistered. When supplier is unregistered and providing housekeeping services through e-commerce operator, on that housekeeping services who will pay GST? E-commerce operator will pay GST, correct or not? So therefore, on this housekeeping service, liability to pay GST is on e-commerce operator. Whether the supplier is required to register? No, because their aggregate turnover does not exceed threshold limit. Okay. Now, what about supplier of goods through e-commerce operator? Supplier of goods through e-commerce operator is compulsorily required to get registered, irrespective of the threshold limit. Okay. So for supplier of services, we have the relaxation. They need to register only when they cross the threshold limit. But supplier of goods through e-commerce operator compulsorily required to get registered under section 24, irrespective of the aggregate turnover. So therefore, if they are selling ready-made garments, then that AB Private Limited should compulsorily get registered under section 24. Then in that case, what e-commerce operator will do? E-commerce operator will be deducting TCS at the rate of 1%, because whenever supplies are made through e-commerce operator and the money is collected by e-commerce operator, they need to deduct TCS under section 52 at the rate of 1%, and they will be remitting the TCS 1% to government, which the supplier will be taking it as credit in his electronic cash ledger, and they can adjust with their liability. Okay. So that is this. So the TCS connection also I gave. Role of ECO will be to collect the tax at source, at the rate of 1%. Okay, then question number 3. So this is related to TCS portion, and remember TCS is not applicable whenever e-commerce operator is liable to pay GST on notified services, because anyhow the liability to pay GST is on e-commerce operator only. So TCS is not applicable. Mainly TCS is to identify the suppliers. Okay, so therefore whenever the supply on which liability to pay GST is on e-commerce operator only, so then TCS is not applicable. So now look into this question number 3. E-commerce limited, an e-commerce operator is engaged in the following supplies during December 2018. Supply of goods taxable at 12% by registered supplier, 5 lakhs, and returns 50,000. So now in this case, whether TCS is applicable first. So whether these goods are taxable goods? Yes. And these are supplied through e-commerce operator. So now e-commerce operator will be calculating TCS at what rate? 1%. And here, while computing TCS, the returns needs to be reduced. Why returns needs to be reduced? Only on turnover through e-commerce operator TCS is applicable. So value of taxable supplies, while taking the value of taxable supplies, whatever sales returns will be reduced. There is no time limit for reduction of that sales returns. Whenever the sales returns happens, the sales may be 4 months before. Now the sales returns happens, then also it will be reduced. Okay, because whatever people will do in Myntra and all, they will be ordering for the garments. So they will be getting it, they will wear it. Okay, our friend is laughing, which you would have done this only. So we will wear this, and we will not remove the tag and all. We will wear that for the occasion. So thereafter there is a 30-day return period. We will remove it, pack it, and we will return. You understood or not? So for every occasion, new dress we will be wearing. You understood? So then this returns through e-commerce operator, no need to compute TCS. So therefore what we need to do? 5 lakhs minus 50,000. Okay, you would have done victims. What kind of victims? Oh, you started that business. Okay, fine. Then what is that? Garments only. So sad here. You should have given non-refund policy here. Okay, fine. Supply of goods taxable at nil rate by the registered supplier. See, whenever the GST itself is not there, TCS will not be applicable. So therefore on this we don't have to bother about TCS. Then supply of housekeeping service by unregistered supplier. So 9 subsection 5. Liability to pay GST is on e-commerce operator only. So therefore on this 50,000, no need to compute TCS, because section 52, TCS under section 52 and so section 9 subsection 5 are mutually exclusive. What does it mean? So whenever section 9 subsection 5 is there, so then TCS will not be applicable under section 52. Is it clear or not? Because liability to pay GST is on e-commerce operator. So whether 9 subsection 5 is applicable in this case? Yes. Is housekeeping service a notified service? Yes. Supplier is unregistered, then who will pay GST? E-commerce operator. So TCS not applicable on that. And then supply of other services by registered supplier. So on the supply of other services by registered supplier, yes, TCS will be applicable. So take 5 lakhs minus 50,000 plus 1,50,000. How much? 6 lakhs. 6 lakhs. On 6 lakhs, 1% is how much? 6,000. So that will be the TCS. 6,000 is the TCS. Okay. Now, if the TCS is not paid on time, we need to pay interest and late fee for delay in filing return. So first question they asked, compute the amount of TCS. The amount of TCS is 6,000 rupees. And then what is the time limit by which we need to deposit the TCS under GST? So we need to deposit by 10th of the month following every month. Suppose if there is any delay in making the payment of TCS, for every day delay we need to pay interest at the rate of 18% per annum from the first date after due date till the date of payment. Okay. So here, what is the month for which we deducted this TCS? December 2018. For December 2018, what is the due date? 10th of January. So, but when the payment is made and return is filed 15th January, what is the TCS return? GSTR 8. GSTR 8 is the TCS return, and that GSTR 8 to be filed by 10th of the month following every month. But there is a delay by 5 days. So whenever there is a delay in filing return, there is a delay in payment of tax, because GSTR 8 is just like 3B. So at the time when you are filing 3B, you need to pay tax, correct or not? At the time of filing 3B, whether we pay tax or not? Yes, we pay tax at the time of filing 3B. So can we file a 3B return without payment of tax? Yes, we can file, no? No. Tax is there, not nil return, but can we file the 3B return without payment of taxes and all? If anyone says yes, then dummy articleship it is, understood or not. So therefore easily we can identify whether they did dummy articles or articleship. So you cannot file 3B. First of all, at the time of filing 3B itself, it will ask for payment. So like that, GSTR 8 also a return. At the time of filing that return, you have to make the payment of TCS. Is it clear or not? What is the delay in filing return? 5 days. For that we need to pay late fee. You know what is the late fee? 100 rupees per day, subject to a maximum of 5,000. But they reduce the late fee now for TDS return, not for TCS return. For TCS return it is the same. 100 rupees per day, subject to maximum 5,000 under each chart. So how many days delay? 5 days. 5 into 100? 500. 500 under CGST, 500 under SGST. So therefore 1,000 rupees is the late fee. Now interest for 5 days. Okay. What is the due date? 10th of Jan. When is it paid? 5th of Jan. So therefore we need, 15th of Jan. So therefore 5 days delay. So please calculate the interest. TCS 6,000. So 6,000 into 18% into 5 divided by 365. How much? 14.79. So rounded off to 15 rupees. So that will be taken. Don't pay 15 under CGST, 15 under SGST. That itself is the total interest. Okay. So 7.5 under CGST, 7.5 under SGST. That is the logic there. Okay. Then look into the next one. So this is related to TCS computation. Okay. Then question number 4. Satyamev Printers is a printing house registered under GST. It receives an order for printing 5,000 copies of book on yoga and meditation authored by a well-known yoga guru. The content of the book is to be provided by the yoga guru to Satyamev Printers. It is agreed that Satyamev Printers will use its own paper to print the said books. You are required to determine the rate of GST applicable on the supply of printed books by Satyamev Printers, assuming that the GST rate applicable on printing service is 18%, whereas the rate of GST applicable on supply of paper used in printing of books is 12%. Actually, there is one CBIC circular related to this printing. In the activity of printing, there are two components. So paper, that is material used, so which will be coming under goods, and the printing will be coming under services. So goods element is there, service element is there. The CBSE circular says that you classify based on composite supply, that is what constitutes principal supply. If material, that is paper, constitutes principal supply, you classify it as supply of goods. If printing constitutes principal supply, you classify it as supply of services. Now you take tissues, napkins or letterheads, envelopes, all these cases, what constitutes principal supply? Paper. Printing is just ancillary. The principal supply is paper. So therefore, it will be treated as supply of goods. Suppose if it is books, for example, you have one book. What constitutes the principal supply? Paper or the printing? Service. Which one? The material, goods element or the service element? What constitutes principal supply? Services. So suppose if now the book with some missing information is given, will you keep that book? You will throw that, correct or not? You will say, my father's hard-earned money 300 rupees I am paying. What kind of a book you are providing, correct or not? I am afraid of CA students. So because they will be raising like anything. What to do? Frustration. They have to raise before the chartered accountant. They will not raise there. So with teachers like us only they will raise. My father's hard-earned money. What kind of a book you are printing? Don't you have manners? Like that and all. They'll say, okay, fine. So what to do? So they need to vent out their anger in one place. So you will keep that book? No, you will not keep. So then what constitutes principal supply there? Printing constitutes principal supply. So therefore it will be classified as supply of service. Now this is an example of what? Books. This is an example of books. So what constitutes principal supply is printing. So therefore it will be treated as supply of service. So what is the applicable rate? 18%. Okay. So how to present the answer? First you need to write the information in the circular. Okay. So no need to give the circular reference, because practically you cannot remember this circular number and all. If you are writing the circular number, your result will be withheld, because they will understand that so you have copied and written. You understood or not? So therefore no one can write this circular number. So we will write as per CBIC circular. As per CBIC circular, it is clarified that. So I told you now that books, pamphlets, brochures, etc. So that circular related point you need to write, and thereafter, so actually section 2 clause 13 about composite supply, and then this circular, and thereafter in the present case, supply of printed books is a composite supply where the principal supply is supply of service. Therefore, the rate of GST applicable to printing service, that is 18%. Like that you need to conclude. So remember a 4-point approach when you are presenting the answers for situation based questions like this. First you need to give the reference. Then you need to write the provision. And then you need to give the discussion. So then that is in the present case, how you will derive the answer. So that is discussion. Finally conclusion. You ensure that these 4 points are present in the answer so that you get the full marks. Okay. Then next, question number 5. So Anil Barfa. Sir, please explain how to calculate number of quarters for reversal of ITC on capital goods. Is it normal quarter or we should take 3 months? No. So in GST everywhere calendar quarter only. Not 3 months considered as 1 quarter, calendar quarter. For example, say this. Suppose if it is 15th May to 14th November. Can you tell me how many quarters? 15th May to 14th November. Don't take months. So first May will come in which quarter? April, May, June. So count that as 1 quarter. Then again July, August, September, October, November, December. So it should be taken as 3 quarters. Calendar quarters only. Maybe in income tax you have 3 months as 1 quarter, I think. I don't know. In GST everywhere it will be taken as calendar quarter only, don't forget. Calendar quarter only should be taken. Okay. Fine. Then next year. So look into question number 5. Shivaji Private Limited, a registered supplier, supplies the following goods and services for construction of a building and complexes. Excavators required period at per hour rate, manpower for operation of excavators at per day rate, soil testing and seismic evaluation at per sample rate. The excavators are invariably hired out along with operators. Similarly, excavator operators are supplied only when the excavator is hired out. So now in this case, so whether this is composite supply or not, naturally bundled or not, what is a composite supply? Simple here. So 3 conditions should be satisfied. All the supplies involved should be taxable supplies, naturally bundled in the ordinary course of business, and one of the supplies should be a principal supply. So then if these 3 conditions are satisfied, it will become a composite supply, and if it is composite supply, we will take the rate applicable to the principal supply. First condition, all the supplies should be taxable. So please check excavators and manpower. Excavators taxable at what rate? 12%, and supply of manpower taxable at what rate? 18%. All are taxable. Yes. Number 2, naturally bundled in, that is naturally bundled in the ordinary course of business. Yes, because excavators are invariably hired out along with operators. Similarly, operators are supplied only when the excavator is hired out. So therefore, it is naturally bundled in the ordinary course of business. Third condition, principal supply identifiable. Which will be principal supply here? Hiring of excavators or manpower supply. Which will be principal supply? Hiring of excavators is the principal supply. What is the rate applicable to hiring of excavators? 12%. So therefore, for this 18 lakhs and this 20,000, together we need to apply 12%. Together we need to apply 12% because we need to take the rate of principal supply. And then suppose if it is soil testing and seismic evaluation, that's an independent activity. So for that, whatever rate that is applicable, 18% will be taken. So what will be the GST payable? 18 lakh 20,000 into 12%. That is
2,18,400.
2,18,400 plus 2,50,000 into 18%, 45,000. So this is the GST payable. Actually, this question is based on composite supply, mixed supply concept. Okay. Suppose if these three conditions, any of these three conditions not satisfied, then what it will be? It will be wait. Single price or not, you check. If there is a single price, it will become mixed supply. Otherwise, it will become individual supplies taxable at the respective rate. Okay. Then, next, question number 6. Question number 6 is also related to composite supply, mixed supply concept. Mrs. Kajal, a registered supplier of Jaipur, Rajasthan, has made the following supplies in the month of January. That is, supply of laptop along with laptop bag to a customer of Mumbai for rupees 55,000 exclusive of GST. So now laptop is taxable at 18, laptop bag is 28. In order to become composite supply, three conditions. All the supplies should be taxable. Yes or no? Yes. Naturally bundled in the ordinary course of business. Laptop and laptop bag naturally bundled in the ordinary course of business. Yes. Usually, what is this ordinary course of business? Generally, or probably, like that only you need to see. Exceptions will always be there. Don't bring in the exceptions. But sir, some cases the laptop bag will not be given, sir. Like that, these exceptions and all should not be taken. Generally, in the ordinary course of business, whichever side it is more probable, that side only you need to go. Okay. For example, soap powder and bucket. Naturally bundled or not naturally bundled? Not naturally bundled. Because for all quantity of soap powder, they will not give bucket. Nah? So therefore, it is not naturally bundled. You understood or not? So whereas, Kinder Joy, so chocolate and toy. Chocolate and toy, naturally bundled or not naturally bundled? Naturally bundled. If not toy, no one will buy that chocolate. Correct or not? So therefore, we need to see probably, that is most probably which side it is. Laptop and laptop bag in the ordinary course of business, it will be naturally bundled. So due to that reason, we will take it as composite supply only. And what is the principal supply? Laptop. What is the rate applicable to laptop? 18%. That should be taken for the entire transaction. Okay. Now, what is the question they are asking? So, determine the rate of GST applicable. So, what is the rate of GST applicable? 18%. Suppose if they are asking compute the GST payable, simple, 55,000 into 18%. Then next, second transaction, supply of 10,000 kits at 50 rupees each, amounting to 5 lakhs, exclusive of GST to Ram Fancy Store in Kota, Rajasthan. Each kit consists of one hair oil, one beauty soap and one hair comb. So in this case, what should be taken? So here, whether it is composite supply or mixed supply, because it is not naturally bundled. When it is not naturally bundled, why sir? It is bundled only now. It is bundled only, not naturally bundled. Which idiot will be giving when you are asking for hair oil, hair comb, beauty soap and all? No one will give. Correct or not? So therefore, it is not naturally bundled in the ordinary course of business. So it is mixed supply, and we need to take single price or separate price. First check single price or separate price. Single price. So therefore, highest rate. So between hair oil, beauty soap and hair comb, what is the highest rate? 28%. So that should be taken. Suppose if they are asking to compute GST payable, 5 lakhs into 28%. Number 3. 100 kits are given as free gift to Jaipur customers all are unrelated on the occasion of Mrs. Kajal birthday. So is it for consideration or without consideration? Without consideration, not for consideration, yeah, without consideration. So will it become supply under 7(1)(c)? So each kit consists of one hair oil and beauty soap. Cost of each kit is 35. Input tax credit has not been taken on the goods contained in the kit. First, in order to become supply under 7(1)(c), number 1, TRIP, T, disposal of business asset on which ITC is available, ITC not available, so it will not come under D. Then R, related party transaction, it is given as unrelated, so it will not come. Import of service, no. Principal agent transaction, no. First of all, it is not a supply, so there is no GST on this transaction, nil, because it is not a supply. Then next, number 4, event management services provided free of cost to her brother, wholly dependent on her, for his son's marriage function in Indore, Madhya Pradesh. Cost of providing the said service is 80. So free of cost means again without consideration. So will the brother come under related? So related definition, we have one point as family. What is the meaning of family? Family means, so we have a definition of family. What is that family definition? For a person, no, spouse is treated as family. Spouse is treated as family. Then children, so son, daughter is treated as family. Okay, whether or not dependent, dependent or not dependent, dependent or not dependent, they are treated as family. Okay, whereas brothers and sisters, then parents, okay, so father, mother, then father's father, mother's father, and father's mother. Okay, so father's father, I am not scolding anyone, father's father, then father's mother, then mother's father, then mother's mother, that is grandparents both sides. Grandparents both sides will be treated as family, but all these brothers, sisters, parents, grandparents should be wholly and mainly dependent on that person. Dependent means what? Dependent means financially dependent, not that they don't have legs, hands and we are taking care of them. So financially they are dependent, wholly and mainly dependent on them. Okay, so then they are treated as family. But in-laws are not covered under family. What kind of a moron has created this definition? We don't know. How in-laws is not family? If I tell to that my wife, keep quiet, divorce on that day itself. You understood? In-laws are family, yeah? You understood or not? So our family is also not family, but in-laws are only considered as our family. You understood? That's how we need to behave. So therefore, this will be, in-laws not considered as family as per this definition. Then what about step relationship? Nowadays, we are putting seeds in multiple places, plants are coming. So because of that reason, all step relationships also included in family definition. Okay, so that is that. So this is the meaning of family. First, brother will come under family. Brother will come under family because wholly dependent on her. Okay. So now it is a transaction between related parties. Now, transaction between related parties will become supply if it is in the course or furtherance of business. It is a business only to do the event management services. So, but brother's son's marriage function. See, his son's marriage function is his personal, yeah, not Kajal's personal. You understood or not? So, Mrs. Kajal is providing event management services. That is in the course or furtherance of business only. Now, in this case, so it will become supply chargeable to GST. What is the rate applicable? 5%. So that will be taken. Suppose if they are asking us to compute the value, what we will do? So rule 28, transaction between related parties. What is it we will do? First we will take open market value. We don't have open market value. Like kind and quality, that is also not there. So we have cost plus 10%. What is the cost of providing the service? 80,000. So 80,000 plus 10%, that is 88,000 will be taken as a value. On that we will multiply 5%. Is it clear?
Yes.
Then 1,400 chairs and 100 coolers hired out to Function Garden, Ajmer, Rajasthan for 3,30,000 exclusive of GST, including cost of transporting the chairs and coolers from Mrs. Kajal's godown at Jaipur to Function Garden, Ajmer. Since Mrs. Kajal is not a GTA, transportation service provided by her are exempted. So now, in order to become composite supply, the first condition is that all the given supplies must be taxable. Here, one taxable supply is there, one exempted supply is there. Yes, transportation of goods by road other than GTR courier agency is exempted. So, no need to pay GST on that. It is exempted. That's true only. So, therefore, one taxable service, one exempted service, it will never become composite supply. So, then will it become mixed supply? Is the price single or separate? Is the price single or separate? Single price, 3,30,000. Therefore, it will become mixed supply. So, what is it we need to do? Entire 3,30,000 we take the highest rate. What is the highest rate? 12% will be taken. You understood or not? So, that is service of renting of chairs, 12% that will be taken because transportation is exempted. Okay. So, now in study material what they did? They gave composite supply. They gave it as composite supply. Thereafter, below not, they gave it as mixed supply. That's what I have given also. Okay. First, they gave it as composite supply, and thereafter they have given. You can also take another view that it will be treated as mixed supply. But in exam, you write it as mixed supply only. For exam, you need to write it as mixed supply only. It is not composite supply, because in order to become composite supply, all the supplies involved are taxable. When you have one taxable supply and one exempted supply, it will become mixed supply. But of course, the answer will be correct here. See, let it be composite supply or mixed supply, the rate will be 12%, but the reasoning should be perfect. You understood or not? So this question is again a question related to composite supply, mixed supply. Then even some aspects related to supply is also connected there. See, whenever you see any practical question for solving, so first you need to check whether it becomes supply or not. First you need to check whether it becomes supply or not. Okay. After checking that it becomes supply, the second thing that you need to check is goods or services. You need to check whether it is supply of goods or supply of services, because sometimes it differs. For example, works contract you take. In works contract there is both goods element and service element, but it should always be treated as supply of service. So we need to check whether it is goods or services. And the next thing that we need to see is that is it exempted or taxable? Is it exempted or taxable? If it is exempted, no need to pay GST. If it is taxable, GST is payable. Okay. So then thereafter we need to check whether it is covered under FCM or RCM. Because if it is covered under RCM, we will not pay GST. Our recipient will pay GST. If it is covered under FCM, we will pay GST. So these are the four aspects that you need to check for every transaction. Is it clear or not? So first, is it supply or not? Second, is it goods or services? Third, is it taxable or exempted? And then it is FCM or RCM. Okay. So this is with respect to every transaction. So that is what we did here. So whenever the service are provided to unrelated consumers gift, first of all it is not a supply. So further discussion we did not make. Then so to dependent brother it is supply. So then we have seen what will be the rate that is applicable. Hope you understood what I am trying to convey. So every transaction you check whether it is supply or not a supply. Okay. Then next here, looking to next question. Question number 7. This is related to time of supply. Today we made a discussion related to this. So look into that. Pillow and Company provides its building on rental basis to Commercial Limited for a monthly rent of 1 lakh. As per the agreement, rent accrues at the last day of the relevant month. Hence, the service gets completed on the last day of the relevant month. For May 2018, Pillow and Company has billed 1 lakh on 10/6/2018. Check is received from Commercial Limited on 29/5/2018, accounted for in the Pillow and Company on 35 and deposited into the bank the same date. However, it got credited on 3/6 due to outstation clearance. Meanwhile, the GST rate is changed from 18% from 12% on 1/6/2018. So what is the change in rate? What is the change in rate? 1/6/2018. So before this date, what was the rate? 12%. After this date, what is the rate? 18%. Now what you need to check is that is supply before change in rate or after change in rate. So when the supply is before change in rate. So date of completion is when? Date of completion of service, that month. So what is the month? May 2018. So 31st May 2018. And what is the date of invoice? What is the date of invoice? Invoice date you see. Invoice date is 10/6/2018. Date of invoice 10/6/2018. What should be considered as date of payment? If the payment is credited within 4 working days, we need to take entry date or credit date, whichever is earlier. Please check what is the date on which the payment is credited. 3/6 within 4 working days. So therefore we need to take entry date or credit date, whichever is earlier. What is the entry date?
29.
Entry date here, check is received on 29, accounted on 30. So date of payment will be 30/5/2018. So now these are the data that we need from the question. So we took this data. Now first we need to see whether it is 14A or 14B. 14A or 14B, supply before change in rate or supply after change in rate? Supply before change in rate. Supply before change in rate, what is the provision? Invoice date or payment date, whichever is earlier. So what is the invoice date? 10/6. What is the payment date? 35. Whichever is earlier? 35. So on 35, what is the rate? 12%. So that should be taken. Okay. So we need to take in this case 12% here. 12% should be taken. Understood or not? Suppose if the payment is credited on 10/6/2018, what will be your answer? If the payment is credited on 10/6/2018, then payment is not credited within 4 working days from the change in rate, correct or not? So then the date of credit in the bank account only should be taken as the date of payment. What is the date on which payment is credited in the bank account? So 10/6/2018. So we need to see first section 14A or 14B, supply before change in rate or after change in rate? Supply before change in rate. What will be taken as the time of supply? Invoice date or payment date, whichever is earlier. Both are on the same date, that is on 10/6. So what will be the applicable rate? 18%. Understood? So this is a question on change in rate. This is a question on change in rate. Understood or not? Then related to this, like this, there is one question on change in rate given in November 20 exam. Okay, so let's see whether you will be able to arrive at the answer for that question. You can see that question here. Say this. Question number 3A. Messrs. Houseful Convention Hall is in the business of letting out its halls for functions. It provides you with the following information for determining. Actually, it is not there in that mighty 50 questions. A connecting question here it is. This is also on change in rate. That's why I am discussing this. Okay. So, provides you with the following information for determining the amount of refund out of the advance received based on the time of supply for one of its clients. First, advance paid at the time of booking of the convention hall. So from 1st to 3rd November, so date on which advance is received is 16/7/2019, amount is 1 lakh. Additional deposit paid. So again additional advance paid on 18/8 for 2 lakhs. So total how much we received as advance? 3 lakhs. And then function is held as scheduled from 1st November to 3rd November. Invoice is issued on 25/11. Consider that there is a change in rate of tax on 15th October from CGST SGST 2.5 to CGST SGST 9 and 9. What would be the amount of refund payable? This is the question. Okay, first we need to see what is the applicable rate. What is the applicable rate we need to know. So first, what is the change in rate? What is the change in rate? 15/10/2019 is the change in rate. 15th October 2019 is the change in rate. Supply is before change in rate or after change in rate? Supply is before change in rate or after change in rate? After change in rate. Then 14B. So now we need to check whether invoice and payment both are before change in rate or one before and one after. Okay, so now invoice date, you see, invoice date is 25/11. 25/11 is after change in rate. Payment received is before change in rate. 16/7/2018, 18/8/2019, before change in rate. So therefore, if one is before, one is after, we need to take whichever is later. Whichever is later. If both are before, whichever is earlier. If one is before, one is after, we need to take whichever is later. Today only we discussed here. So whichever is later means we need to take, 25/11. On 25/11, what is the rate? 9%, 9%, 18% will be there. So now, what is the value? 2,50,000. 2,50,000 plus 18%, how much? 2,50,000 is the taxable value. 2,50,000 is the taxable value. On that 18%, how much? 2,45,000. How much advance we have received? 3 lakhs. So out of 3 lakhs, 2,45,000 is gone. What is the amount that will be refunded? 5,000 will be refunded. Okay. So that is the answer. Over. 5,000 rupees will be refunded. So this is what we need to do. But lot of things, students would have processed there and they would not have understood what to do. So this is simple application of change in rate provision. Okay. Suppose if they tweak the question, for the same question, if they are asking how much is the additional tax payable or refundable if GST is already paid on advance. On advance, if the GST is already paid, how much is the tax payable or refundable from the government? Try that. Advance, how much? At that time, what was the rate? So we would have paid how much?
15,000.
Hey. Inclusive. How you will pay exclusive? Yeah, that much only you are receiving. So 3 lakhs into 5/105. 3 lakhs into 5/105, how much? 14,000? 14,285. 14,285. And what is the GST actually payable? 45,000. How 45,000? 2,50,000 into 18%. So 45,000 minus. So how much is the difference? 37,000. So that difference will be the excess tax that we need to pay. Already we would have paid on advance services, darling. So GST will be payable as and when advances are received. So therefore the balance GST is payable. They can give the same question by changing the requirement. Okay. So you be careful with respect to that. Question number 8. Andes Private Limited, a registered supplier, manufactures product A and B. While product A is taxable under forward charge, product B is taxable under reverse charge. The following details are provided in relation to two individual supplies of product A and B made by the company. So serial number 1. So 1, 2. If you see the question, 14 multiple datas are there. Now, by the time you read this question itself, the exam time will be over. So therefore, be careful when you get this type of questions. First, you need to register onto the provisions. Okay. So, goods A, product A. Product A is covered under FCM. So, in case of goods covered under FCM, what will be taken as the time of supply? Due date of invoice or actual date of invoice, whichever is earlier. Simple. So we don't have to see payment date, all these things. So due date of invoice, actual date of invoice, whichever is earlier. For product A, can you find the actual date of invoice? Fourth March. Wow, super. So 4th March is the actual date of invoice. Then what is the due date of invoice? Supply involves movement of goods or supply does not involve movement of goods, we need to check. See, goods due date of invoice is given under section 31, 147, continuous supply of goods. Is it continuous supply of goods? No. And is it sale on approval or on return basis? No. Normal cases, supply involving movement of goods or supply does not involve movement of goods. Check there. So payment, wherever product A is there, your eye should go there. Payment of 1 lakh made by supply of A, and product A manufactured and removed. Supply involving movement of goods. So when supply involves movement of goods at the time of removal. So what is the date of removal? 5th March. So that is the due date of invoice. Actual date of invoice or due date of invoice, whichever is earlier. Actual date of invoice, 4th March. So therefore 4th March will be taken as the time of supply. Over. 4th March is taken as the time of supply in case of product A. Easy? Then for product B, RCM what we need to do? For product B, RCM what we need to do? So in case of goods covered under RCM, so section 12 subsection 3, what is the provision? The date on which goods are received, the date on which payment is made to supplier, and then 31st day from the date of invoice, whichever is earlier. So first I need, what is the date on which goods are received? Product B. So I should search for product B. So 17 February, payment of 2 lakhs made by buyer. Okay. Then date of receipt of product B. Rate of receipt of product B. 23rd March. Receipt of product B 23rd March. So this is the date on which product is received. So first date, the date on which product is received. Number 2, the date on which payment is made to supplier. There are multiple payments, you please see. First, with respect to 17th February, we paid 2 lakhs, correct or not? Then, again, what is the payment made with respect to product B? So, 1st April, payment made by buyer of B, 1st April. There are 2 payments made. So, invoice is for how much? Product B invoice for how much? 4 lakhs. So, therefore, out of this 4 lakhs, 2 lakhs is paid on 17th February, remaining 2 lakhs is paid on 1st April. Okay. So now there are 2 time of supplies here. There are 2 time of supplies. For product B, there are 2 time of supplies. Why 2 time of supplies? Because the payment is made in parts. Okay. So for first 2 lakhs and for next 2 lakhs. First 2 lakhs, next 2 lakhs. First date will be same. The date on which goods are received. What is the date on which goods are received? 23rd March. 23rd March. Okay. Then the date on which payment is made. What is the date on which payment is made? First payment 17th February. Next payment will be 1st of April. 1st of April. And number 3, 31st day from the date of invoice. What is the invoice date for product B? 11th March. 11th March plus 31st day. Can you please count 31st day from 11th March? So March 31 minus 11. 31 minus 11, 20 days. Then in April, 11 days. So therefore, it will be 11th April. It will be 11th April. So therefore, both cases, it is 11th April. Okay. Now, which is earlier? So first 2 lakhs, which is earlier? 17th February. Second case, which is earlier? 23rd March. Okay. So for the first 2 lakhs, it is 17th February. Okay. For the first case, it is 17th February. For the second case, it is 23rd March. You understood? So that is what we have computed. Okay. Actually, this is ICA study material question. This is CA Institute study material question. So they have given this. They have added this question, new question. So that's what I have given. Okay. Then next one. You understood here up to this question number 8. Then question number 9. Question number 9 is related to goods taken outside India for exhibition. So this point also I was discussing. An international trade exhibition is going to be held in United States of America in January. Ayat Niryat Export House has participated in it. It intends to send 100 units of taxable goods manufactured by it to USA for display in the said exhibition. ANEH is of the view that activity of sending the goods outside India for exhibition is a zero-rated supply. However, its tax advisor does not concur with its view. Examine whether the view of ANEH is correct first. This question we need to answer. What is that? Goods taken outside India for exhibition is without consideration and the same do not fall under supply under section 7(1)(c) read with schedule 1. So because this is not disposal of business asset on which ITC is availed, it's not a related party transaction, it is not an import of service and it is not a principal agent transaction. However, taking goods from India to outside India is treated as export, but just because it is export, it will not become zero rated supply, it should become supply and then it should become export, then only it will be treated as zero rated supply as per CBIC circular. So in the present case, goods taken outside India is not treated as a zero rated supply, and no need to raise any invoice in this case, and these goods are taken from India to outside India under the cover of a document. What is a document? Delivery challan. Delivery challan. Okay. Then, assuming that AMEH could not sell any goods at the exhibition and brings back the entire 100 units to India in February. When are they taking the goods? January. January they are taking in February. As per section 31, subsection 7, if the goods are removed and not brought back within 6 months, then on expiry of 6 months, it is deemed to be supplied. But in the present case, as the goods taken outside India are brought back within 6 months, it is not treated as any supply. And initially at the time of sending the goods outside India also not a supply. So as the goods are returned within 6 months, there is no consequences. Is it clear? Suppose if the goods are returned in August, so on expiry of 6 months from the date of removal, that is in June, correct or not? So it is deemed as supply. After expiry of 6 months from the date of removal, it is deemed as supply, and consequently invoice will be raised, and it will be treated as zero rated supplies. So we have two options, either export upon payment of IGST or export without payment of IGST. Again, when the goods are returned in August, a credit note needs to be raised to cancel that invoice. Is it clear or not? Discuss the requirement of issuance of invoice in any, if any, in each of the above independent cases. That's what we have discussed so far. Okay, we completed this question. Now, would your answer be different if AMEH sells an aggregate of 65 units of taxable goods in USA on different dates in January, and remaining 35 units are brought back on 31st January. So whenever the goods are disposed of, that is whenever the goods are sold in the exhibition, with respect to those goods sold in exhibition, it will be treated as supply, and the tax invoice will be raised as and when the supply takes place. With respect to remaining 35 units, as it is brought back within 6 months, so there is no need to raise any invoice, and it will not become supply. You understood?
Yes.
Then the tax advisor of ANEH advises ANEH that export of 65 units qualify as zero rated supply. Yes, and they can apply for refund of unutilized ITC. Yes, so they can apply for refund of unutilized ITC. So either they can go for export on payment of IGST or export without payment of IGST under bond or LUT. But they should have ensured that at the time of taking goods outside India, they executed a bond or LUT. So this is the explanation we need to write. Okay, don't worry by seeing the answer, but whatever I have given, that information is only there, but orally when I discuss, it will be little only, but when you see, you will understand the answer. Okay, then this is actually given in one RTP. This is one RTP question, not a tested. Okay, next area, question number 10. Question number 10, Renudut Limited enters into contract with XYZ Limited on 2nd July for a period of 2 years for construction of a new building to be used for commercial purpose for a total consideration of 150 lakhs. As per the terms of the contract, Renudut Limited is required to make payment at different stages of completion of the building, namely 50%, 75% and 100%. Determine the time of supply using relevant details given as under. So actually it is what? Is it a continuous supply of service? Yes. So it takes more than 3 months to complete and involves periodic payment obligations. So it will be a continuous supply of service. So in case of continuous supply of service, there are 3 points now. What are the 3 points? Number 1. So whether the payment is, the due date of payment is mentioned in the contract. No, the due date of payment is not mentioned in the contract, but the payment is linked to completion of an event. So whenever that event is completed, at that time we need to raise the invoice. Okay. So now stage initial booking, 50% completion, 75% completion of the building and 100% completion of the building. Date of various stages, date of issuance of invoice, date of payment and amount paid. So now what we need to see in this case is that first, so here what is the question about? So they are asking the time of supply. So time of supply, is it goods or services? Services. So in case of services, what should be taken as the time of supply? If invoice is issued within the, is it FCM or RCM? Is it RCM? No. Construction service we don't have in RCM, it is FCM. So in case of FCM, 13 subsection 2, what should be taken as the time of supply? If invoice is issued within the due date, invoice date or payment date, whichever is earlier. If invoice not issued within the due date, completion date or payment date, whichever is earlier. Okay, fine. What is taken as the due date of invoice? Due date of invoice is the date of completion. Okay, so now see the first case. First case, so what is the date of initial booking? 2/7. So 2/7, invoice is given on 2/7, payment is also 2/7. For this 50 lakhs, what will be taken as the time of supply? Invoice date or payment date, whichever is earlier. So therefore, we will take 2/7 only. 2/7/2019 will be taken, no change in that. Now, see the second one, 50% completion. What is the due date of invoice? When is it completed? 15th March it is completed. So this is the due date of invoice. What is the actual date of invoice? 22/3/2020 actual date of invoice. Is the invoice given within due date? No. As the invoice is not given within due date, completion date or payment date, whichever is earlier. What is the completion date? 15/3/2020 will be taken. Okay. So again I am repeating, listen carefully. So first you need to see the time of supply as if the invoice, that is if the invoice is given within the due date, invoice date or payment date, whichever is earlier. If the invoice is not given within the due date, completion date, payment date, whichever is earlier. Is it clear up to that? Now what should be taken as the due date of invoice? The date on which it is completed is taken as the due date of invoice. Is it clear or not?
Yes, sir.
So the date on which the completion is happening is 15/3. By the time 15/3 they should have given the invoice, but the invoice is given on 23. So 22/3, is invoice given within due date? No. Invoice not given within due date means completion date or payment date, whichever is earlier. So therefore 15/3. Second case, when they should have given invoice? 26. But when are they giving invoice? 24/7. So again we need to take completion date or payment date, whichever is earlier. That is 26/2020. Then again 100% completion of the building. So whether they gave the invoice on time? Yes. So when they should have given invoice? 30/9. So when they have actually given invoice? 39. So therefore invoice date or payment date, whichever is earlier. What is the invoice date? 39. Payment date 29. So 29/2020. Okay. This question appears to be easy because they are not asking is the due date of invoice. They are asking the time of supply. If it is due date of invoice, it is easy. But time of supply we need to apply. Okay. For that reason this question is important. Okay. So 2/7/19, 15/3/20. Okay, first case 2/7/19, second case 15/3/20, then 26/20, and thereafter 29/20. You understood here? Yes, sir. Then, so a small break you take, and then we will continue with the questions. Okay. You have energy?
Yes, sir.
Yes, no?
Yes, sir.
Only 7:30, please. Okay, 5 minutes you take a break, then 1 more hour I will continue. Okay, we'll start. You are all writing for the first attempt? No. So already few attempts are there. First attempt. Does attempts matter in CA? Correct. It will not. It will not. Definitely it will not matter. See, I just wanted to tell you one case wherein I know one friend who took 8 attempts to clear CA, 4 years, and he completed CA, and after that 8 attempt, when he completed CA, you won't believe the package at which he is currently now, after 4 years of post qualification, is getting 28 lakhs per annum. Yeah. 28 lakhs per annum, which usually a normal CA who completed in the first attempt, even after 4 years, will not reach that stage. It's difficult. Okay, so he could have reached somewhere 18 lakhs like that. I'm not talking about the top 1%. I'm talking about the median. Okay, so attempts irrelevant. Okay, everyone would have taken multiple attempts, and it's all about what you learn from one attempt to the next attempt. So it should not happen like, I gave an attempt, next attempt also I make the same mistake, thereafter next attempt also I make the same mistake. There is no point in that. So then you should learn out of your mistakes. So the day when you are learning your mistakes, you will not repeat that mistakes. So that alone I can say. Okay, because one student asked me so to see the paper and to check whether whatever I have written is correct or not. And that student has asked me like, sir, one-to-one coaching, is it relevant? Okay, so for which coaching is not the criteria. There are two things. When you fail in the exam, understand why are you failing in the exam. Is it because you did not understand, or is it because you could not write? There are two aspects actually. So many students think that if they are not able to write the exam, they think that they are not understanding the subject. If you are not understanding the subject, go for coaching. Repeat again and again. Listen to marathon batch, listen to fast track batch, listen to regular batch. You listen, keep on listening. If you are not understanding the subject, you have a problem in writing, don't waste your time in listening to these classes. You have to develop your writing skills. So that writing skills, someone should do the evaluation. So form a team, form a very good team. So because easily we will point out the mistakes with others, we will not be able to point out the mistakes in oneself. The problem is that. So we can easily point out the mistake from others. So form a team and ask them to check the papers. Suppose if you feel like you cannot trust these test series providers. There are a lot of test series providers in India. If you don't have confidence on them, if you feel like all these are bogus and all, they just take money and they are not doing it properly. If you feel like, you form a team, you share that answer sheet with the other person along with the suggested answer. So then ask them to check how many marks you will give if you are valuing it. So that way you improve your writing skills. So the writing skills should be improved if the problem is there. If the problem is in understanding, then you need to attend to the classes. So first identify where you are making the mistake. So then only you will be able to come out of that. Okay. So next thing, suppose in your understanding itself there is a problem, then you need to definitely attend some marathon revision for every subject. So you need to revise that, some fast track batch, etc. will help you. You know the subject, but you have a problem in writing. Simple, take an RTP. Take RTPs, lot of RTPs are there, lot of suggested is there. Just see the question, don't see the answer. You write the answer in the exam environment and then cross check. You are your best judge. So then you will know where you are making mistakes, because I feel that's the only way wherein we can come out of this vicious circle. I call it as a vicious circle. So you can come out of this only that way. Okay, but maybe, okay, so you don't know where your mistake is. So that definitely you need to take it to the faculty, prospective faculty, get your answer sheet, share it with the faculty and ask them to evaluate. If there is any charges, people are taking money and doing evaluation also, it's okay. So ask them to evaluate and let us know where we are going wrong. So but please do this exercise before going for the next attempt. Okay, so as of course, suppose if this is your next attempt, so ensure that all these mistakes that you are analyzing and you are focusing on that. Okay, but I am not a great person to actually suggest you all these things, because I also took many attempts. So but I am taking class now. So therefore, when I am becoming successful, why can't you? Definitely you can also be successful. Okay, so and moreover, I feel like, you know, please derive the inspiration. Some inspiration should always be there, because for me, my poverty is my inspiration. Yes, reason, I lost my parents when I was a kid and I was studied in an orphanage. So where we need to fight for our living and we need to fight for clothes, we need to fight for everything. There is no money in hand. So then I have the desire to earn money, but in an ethical way, not in an unethical way. So therefore I thought CA is the course where we can make money, because one idiot told me that only. He is my warden. He is my warden. Okay, in that orphanage he is my warden. He told me that CA is the only course where you can make lot of money. He misguided me actually. So he should have told me to become a doctor. Okay, so he told me to become a CA. He told me that till the time you die you can sign and earn money. So I didn't get that. So I thought, okay, I will make lot of money. So therefore I came into this course and I started like my intermediate. I studied that is 11th and 12th. I studied in commerce only. So I did not study in science, and I started as a study tutor. Like some study hours will be there. I'll be sitting there and I'll be doing work like paper correction, clarifying doubts, etc. Some money I'll get. So with that only I have studied. So therefore, for me always one point was that is somehow we need to come out of this poverty. So that was my inspiration. And every time I feel like, so I need to buy a clothes, I don't have money. I need to eat food, I don't have money. So then I need to somehow make bloody money, and so that I need to buy my own food, I need to buy my own clothes, everything. So yes, I could make it. Okay, so it's only because of that kind of fire that I had, and even now also I have the fire. So that fire is continuing. So because one after the another, so the desire will keep on coming. Okay, so I want to have a house and I want to take care of my kids so happily that whatever sufferings that I had, my kids should not have. So this kind of inspiration you derive somewhere, that will push you, I feel that. Okay, or you put yourself into that zone wherein it's do or die situation. So then automatically you will come out of it. Don't be in the safe zone. If you are in the safe zone, depending on the parents, and 3 times a day food coming automatically, and then whatever money that you are asking, if they are giving, definitely you will not. So you put yourself into that zone, automatically you will be able to definitely come out. Okay. So I feel that drive me. Maybe it will work for you also. Okay. So come out of your house. Seriously, I'm telling you. Come out of your house, stay somewhere in a hostel, see the life, what it is, you will know. Now for everything you will be fighting for, and then you will know how difficult it is to survive without your parents. Come out of that, tell to your parents that monthly this much money only you need to give. Even if I am asking also you should not give. Then you will know that pain and you will know why you need to clear CA. Okay? Done?
Yes.
Okay, fine. So sorry for wasting your time. And see this, PQ, a statutory body, question number 11. PQ, a statutory body, deals with all the advertisement and publicity of the government. It had issued a release order to Moon Plus channel registered in state A for telecasting an advertisement relating to one of the schemes of the government. What is this? Advertisement services provided to statutory body. Now, what is the total consideration? 10 lakhs. 10 lakhs is the total consideration. You are required to determine the place of supply of service in the instant case. Also the value of supply attributable to the states of A, B, C, D and E. Further compute the GST liability of Moon Plus, as also advise it whether it should issue one invoice for the entire contract value or separate state-wise invoices. So can you close the door, sir, so that AC will have some effect? Thank you. So now, what is the total contract price? 10 lakhs. How will you apportion it between the states? So we have place of supply rule 3. Rule 3, whenever services, advertisement services provided to government, so as per rule 3, if it is television, we need to first divide this between the states. On what ratio? Based on viewership data last week of the previous quarter. So therefore we got the 3 channels. There are 3 channels, A, B plus C and D plus E. Channel number 1 will be telecasted only in state A. Channel number 2 telecasted in 2 states, B plus E. Channel number 3 telecasted in 2 states, D plus E. So first you divide this 10 lakhs between these 3 states in what ratio? 1:2:1 ratio, correct or not? So then how much will be for the channel number 1? So 10 lakhs into 1 by 4, 2,50,000. Channel number 2, 5 lakhs. Channel number 3, 2,50,000. This is the primary distribution, primary apportionment. After this, we need to further apportion into population basis between 2 states. So for example, first case we will be taking 2,50,000, and the second case, so B plus C, it will be how much? 5 lakhs. So that 5 lakhs based on population census you divide. So 20 ones are 20 nines are. So 9:1. So 9:1. 5 lakhs into 9 by 10. 4,50,000 and 50,000. And thereafter for D plus E third channel, so that is 2,50,000. That 2,50,000 you divide between the population census. So 4:1. So that is 2 lakhs and 50,000. Therefore the 10 lakhs we are able to apportion between the states. For first 2,50,000, state A is the place of supply. For next 4,50,000, state B. For next 50, state C. For 2 lakhs, state D. And for 50,000 it is state E. So this will be taken as the place of supply. So when we are able to determine this place of supply, the second question is what? Advise whether it should issue one invoice for the entire contract value or separate state-wise invoices. Definitely separate state-wise invoices. Why? Because the place of supply differs. How? In one invoice itself, multiple place of supplies we cannot give, na? As the place of supply differs, we need to give 5 invoices. So where PQ channel is located, where this Moon Plus channel is located, state A. So therefore the first one will become intra. The second and third and fourth and fifth will become inter. And therefore how many invoices are required? 5 invoices. This is actually application of rule 3. So this is a RTP question given in I think 2021, May 2021 they gave this. So therefore not yet tested. This question is not yet tested. but a very good question. Okay, so like this, place of supply related to rules, they can coin one question. So what is given here is only related to rule 3, but we have multiple rules now, so on that any one question can be coined. Then look into question number 12. Question number 12. Musicara Private Limited, owned by Nitish Dani, a famous classical singer, wishes to organize Nitish Dani musical concert in Gurugram, Haryana. Musicara Private Limited, registered in Ludhiana, Punjab, enters into contract with an event management company, Supriya Private Limited, registered in Delhi, for organizing the said music concert at an agreed consideration of 10 lakhs. Supriya Private Limited books the lawns of Hotel Dum Dum, Gurugram, for holding the music concert for a lump sum consideration of 4 lakhs. Musicara Private Limited fixes the entry fee for the concert 5,000. 400 tickets for Nitish Dani music concert are sold. You are required to determine CGST, SGST or IGST liability as the case may be. First, we will see different services, what is the place of supply, and then we will determine nature of supply, then we will be able to understand this. What is the first service? The first service is organizing an event. Okay, so see that. Where is that? Musicara Private Limited in Ludhiana, Punjab, enters into contract with event management company Supriya Private Limited, registered in Delhi, for organizing the said music concert at an agreed consideration of 10 lakhs. For this service, what will be the location of supplier? Supriya Private Limited, Delhi is the supplier. Recipient, Musicara Private Limited, Punjab. So therefore, supplier in India, recipient in India. Section 12. And what service it is? Organizing an event. Organizing an event, B2B or B2C? B2B. So B2B, because the recipient is registered in Ludhiana, Punjab. Therefore, B2B, location of recipient will be taken as the place of supply. So location of supply Delhi, place of supply Punjab, therefore it will become interstate supply, chargeable to IGST. That is the first one. Okay, the first one IGST and 20 lakhs. Sorry, the first one is what? So the first one will be IGST, and what is the value? 10 lakhs. So on that 10 lakhs, GST will be payable. Where is this? 10 lakhs IGST, so 18% will be payable. Understood or not? Then second service, you see. The second service is Supriya Private Limited books the lawns of the Hotel Dum Dum, Gurugram, registered in Haryana, for holding the music concert for a lump sum consideration of 4 lakhs. This is the second service. For the second service, who is the supplier of service? Dum Dum, Hotel Dum Dum. And where is it? It is in Haryana. And where Supriya, who is the recipient? Supriya Private Limited. Where Supriya Private Limited is in Delhi. Both are in India. So section 12 or section 13? Section 12. What is this service? Service in relation to immovable property. So if immovable property is in India, location of immovable property. If immovable property outside India, location of recipient. Whether the immovable property is in India? Yes. So location of immovable property is where? Gurugram, Haryana. So therefore, location of supplier Haryana, place of supplier Haryana, therefore it will be coming under intrastate supply, chargeable to CGST, SGST. What is the value? 4 lakhs. So that 4 lakhs will be chargeable to CGST 9%, SGST 9%. You understood or not?
Yes, sir.
Then next, sir, whatever GST that is paid in Haryana, can that be taken as credit by Supriya Private Limited in Delhi? No. Remember, the tax paid in the other state, CGST, SGST paid in the other state, cannot be taken as credit. Both CGST, SGST. Okay. So even though here they will raise invoice to Supriya Private Limited, but as Supriya Private Limited is registered in Delhi, they cannot take the ITC with respect to CGST, SGST paid in Haryana. Is it clear or not? Then next, Musicara Private Limited fixes an entry fee to the music concert 5,000 rupees. 400 tickets of Nitish Dani music concert are sold. Now for this, who is the supplier of service? Musicara Private Limited. Recipient is various buyers who purchases the ticket. So section 12. Section 12, what is the service here? Admission to an event. For admission to an event, what will be taken as the place of supply? Location where the event is held. Where the event is held? Haryana. Haryana. So that is the location of event. So what will be taken as a place of supply? Haryana. Supplier, where is this Musicara Private Limited located? Musicara Private Limited is registered in Punjab. So location of supplier Punjab, place of supply Haryana. Therefore, it will be coming under interstate supply chargeable to IGST. So the tickets are chargeable to IGST. 400 tickets at 5,000 rupees per ticket, 20 lakhs. IGST at the rate of 18%. Understood? Then next, you are required to determine CGST, SGST be determined. Will your answer be different if the price of the ticket is fixed at 450? Yes, because there are concerts. So there are few entry tickets. So when the ticket price does not exceed 500, it is exempted. What are those entry tickets? Easily you can remember. So four events. Music, dance, okay, music, dance, concert, then theatrical performance, musical performance, dance performance, theatrical performance. Theatrical performance means what? Drama, ballet, etc. And then next one will be concert. These four performance related events, okay. And then, so performance related four. Then events, okay. So number one, beauty event, pageant. Okay, beauty event, sporting event, award function, understood or not? So like that, certain events. So for that, the ticket price does not exceed 500, it is exempted. Okay, so here the ticket price is 450, therefore it is exempted. So what are those ticket price does not exceed 500 exempted? Total 9 is there. Okay, 4 related to performance, 4 related to performance. 4 related to performance. What are they? Musical performance, then concert, then dance and theater, okay, theatrical performance. And next 4 related to, it is there, exemptions under GST, it is there. I'm just revising that, okay. So 4 related to the events. What are those events? Circus, then pageant, beauty show, then award function, then sporting event. The 4 related to performance, 4 events, and then 1 planetarium, okay, admission to planetarium. So these 9 tickets, if the ticket price does not exceed 500, it is exempted. Actually what it is? Concert, na? Concert. So therefore ticket price does not exceed 500, therefore it is exempted. So that is this answer. Okay. Then question number 13. Mr. Murthy, an unregistered person and a resident of Pune, Maharashtra, hires the service of Sun Limited, an event management company registered in Delhi, for organizing of new product launch in Bengaluru, Karnataka. Determine the place of supply of services by Sun Limited. What will be taken? Organizing an event. Section 12 or section 13? Section 12. So organizing an event, B2B or B2C? Unregistered person hires the service of Sun Limited, B2C. Location where the event is held. Where the event is held? Bengaluru, Karnataka. Therefore, in this case, place of supply will be Karnataka. What would be your answer if the product launch takes place in Bangkok? Then if the event is held outside India, we will take location of recipient. What is the location of recipient? Pune, Maharashtra. That will be taken. Mr. Murthy is the recipient, Sun Limited is the supplier. Okay. Location of recipient will be taken, that is Maharashtra. What would be your answer if Murthy is registered person and product launch take place in Bengaluru, Bangkok? Whatever the case may be, the place of supply will be Maharashtra only. Because in case of B2B, we will take location of recipient. Okay, understood here?
Yes, sir.
So this is related to that organizing an event. Take on this question. Like this, it will be given for 4 marks. Okay. Then, so this question number 14 is related to valuation. So this question you are going to solve. Okay. Clear?
Yes, sir.
Now, you take your book, a rough page you take. First we will see the question and then we will proceed to the solution. Okay, first concentrate. ABC Limited, Noida, Uttar Pradesh is a supplier of machinery used for making bottle caps. The supply of machinery is effected as under: the wholesale price of the machinery at which it is supplied in the ordinary course of business to various customers, excluding all taxes and other expenses, is 42 lakhs. However, the actual price at which machinery is supplied to an individual customer varies within a range of plus or minus 10% depending upon the terms of the contract of supply with the particular customer. 42 lakhs is not the price. 42 lakhs is the usual price. The actual price depends. So don't take 42 lakhs and start with the question. Okay, wait. Then, so ABC Limited charges the customer the following incidental expenses. So these are the incidental expenses for charged by the ABC Limited. Now this is their business policy. These are all the expenses they charge. We will revisit it later. Now for every machinery supplied, ABC Limited receives a grant of 2 lakh from its holding company. So subsidy from holding company directly into the price. Why directly into the price? For every machinery supplied, they will be receiving a grant. Okay. Now the question starts. ABC Limited has supplied to D Private Limited on August 1st, 2018 a machinery for 40 lakhs. So what is the price at which machinery is sold? 40 lakhs. On which date? August 1st, 2018. So we need to do the computation for which month? August month. Okay. So now write there invoice for August 1st, 2018. Invoice for August 1st, 2018. Invoice for August 1st, 2018. What is the value? Price of the machinery. Next line. Price of the machinery. What is the price of the machinery? 40 lakhs. Okay, that is the starting point. Now, let's come back to the expenses. This 40 lakhs will be excluding all expenses now. This is the price of the machinery excluding taxes and other expenses. The following are the additional expenses. See that the following incidental expenses. Associated handling and loading charges 10,000, installation and commissioning charges 1 lakh. Okay, so where this will be coming? So 15 2A, taxes, duties and cess by whatever name called other than GST. 15 2B, any amount that the supplier is liable to pay but which is paid by the recipient. And 15 2C, incidental expenses and other expenses charged before delivery of goods. Correct, Mama?
Yes, sir.
So is it charged before delivery of goods? Yes. So it is to be included. Is it already included in the given price? No. So we need to add. So add handling and installation expenses. Handling and installation expenses. You can see that these expenses are always required. These are incidental. The machinery can be dismantled and erected at another site if required. The above charges are compulsorily levied in every case of supply of machinery. So which means that these are incidental. Clear? Yeah. So therefore we need to add 10,000 and 1 lakh. So therefore 1 lakh 10,000 you take. Then the next one, transport of machinery to the customer's premises is arranged by ABC Limited. Who is that? Supplier. Through a third party service provider, the customer enters into separate contract with GTA and pays the freight directly to it. Is it the liability of the supplier to do the transportation? No. So it is not the liability of the supplier to do the transportation, but the supplier arranges a third party. Now the customer directly enters into contract with the third party and customer pays the freight. So will this be included in the value? No. Expenditure incurred by the recipient on his own account, that will not be coming into the value. Is it clear or not?
Yes.
So therefore, whatever freight that is paid will not be coming. So ignore that. The company provides 1 year free warranty for the machinery. However, the company also provides an extended 2-year warranty on payment of additional charge of 3 lakhs. Whether this 3 lakhs to be included in the value? So first we need to know whether they are going for the additional warranty or not. So yes, they are going for additional warranty and opted for 2-year warranty. So therefore the recipient D Private Limited opted for 2-year warranty. So then it should be included in the value. Is it charged before delivery of goods or after delivery of goods? Definitely before delivery of goods. So add warranty. Add warranty 3 lakhs. Add warranty 3 lakhs. Where it will come? 15(2)(c), incidental expenses or other expenses. Under that category it will come. Then a cash discount of 2% on the price of the machinery is offered at the time of supplying if customer agrees to make the payment within 15 days of receipt of the machinery at his premises. In the event of failure to make the payment within stipulated time, the company recovers the discount given and charges interest. So which means that, so this discount is given before supply or after supply? Read the point carefully. This discount is given before supply or after supply? This discount is given before supply. A cash discount of 2% of the price of the machinery is offered at the time of supply. So before supply, but they put a condition that you should make the payment within 15 days. So if you are not making the payment within 15 days, so much of the discount that is given to you will be recovered, and even an interest will also be charged. So which means, is it pre-supply discount or post-supply discount? Pre-supply discount. Pre-supply discount. So is pre-supply discount allowed as a reduction? Yes. So right there, minus discount. Minus discount. How much is the discount here? 2% on price of the machinery. What is the price of the machinery? 40 lakhs. So 40 lakhs into 2%, 80,000. Put it in brackets, 80,000 minus 80,000. Then the next one is that, so if the payment is not made within 15 days, it will be recovered, but that is at a later point of time, correct or not? So now, for every machinery supplied by ABC Limited, they receive a grant of 2 lakhs from its holding company. So this subsidy is from CG or SG or others? Is from others. Is it directly linked to the price or not directly linked to the price? Directly linked to the price. To be included or to be excluded? To be included. In the given price, it is excluded. So we need to add. How, sir, you can say? See, subsidy is having two adjustments. Subsidy is having two types of points. Okay, see this. There are two views that you can take. So before that, you need to know certain aspects. So first, an amount is to be included or to be excluded, you need to see as per provision. Okay, as per provision, what is the treatment, and then in the given price, what they have done. In the given price, what they have done, then only you will know the treatment. Okay, so this is simple, no need to make note, just listen. So first, an amount is to be included. An amount is to be included. In the given price, it is already included. What will you do? As per the provision, it is to be included here, and it is already included. What will you do? Ignore. Ignore. You don't have to take anything. For example, incidental charges, packing charges to be included. In the given price, it is already included. So you simply ignore. Then an amount is to be excluded. An amount is to be excluded, and it is already excluded. Already excluded. So ignore. Okay, ignore. For example, taxes is to be excluded. Other than, that is GST to be excluded, other than GST only to be included, GST to be excluded. The given price already excluding taxes. So simply ignore. Then an amount is to be included. An amount is to be included. In the given price, it is not included. So what will you do? Add. Okay. For example, this designing charges or installation charges charged by the supplier to recipient to be included. In the given price, it is not included. So we need to add. That's what we did now. That incidental handling charges, installation charges. Then an expenditure is to be excluded. In the given price, it is not excluded, means included. Okay, not excluded. What you will do? Deduct. For example, the price is before discount. Discount is to be excluded. In the given price, discount is not excluded. So we need to deduct. Is it clear or not? So this is the treatment that we need to follow. Now, related to the subsidy, there are two views that are possible. View 1, the given price is after considering subsidy or the given price is without considering subsidy. Okay. Price after considering subsidy. Price after considering subsidy. Price after considering subsidy. Price without considering subsidy. Price without considering subsidy. Okay, so what is the meaning of price after considering subsidy? In the given price, subsidy is already deducted. In the given price, the subsidy is already deducted. So price without considering subsidy means in the given price, subsidy is not deducted. Is subsidy income or expenditure, darlings? Subsidy is income or expenditure? Income. When you consider the income, means that much amount you will reduce from the price, you will collect the remaining amount only from the customer, correct or not? So price is after considering subsidy means what? So in the given price, if you want, you write down this. In given price, subsidy is reduced. In the given price, the subsidy is reduced. Okay. So price without considering subsidy means what? In the given price, subsidy is not reduced. In the given price, subsidy is not reduced. Subsidy is not reduced. Okay, in the given price, subsidy is not reduced. So what is that we need to do is that, so first you take the price. Say suppose if the given price is 40,000. If the given price is 40,000. So there are two alternative views. So that is price after considering subsidy. Means this 40,000 is arrived after taking out the subsidy. Okay. Now subsidy from CG. Subsidy from central government 2,000 rupees. Now what is the treatment? First, subsidy from central government to be included or to be excluded? To be excluded. Subsidy from central government to be excluded. So view 1, in the given price it is already excluded. So ignore. Understood? Then suppose if you take the price without considering the subsidy, means in the given price it is excluded? No. So therefore we need to deduct. Okay. So like that. Then next, subsidy from an NGO. Subsidy from an NGO. Subsidy from an NGO 3,000. To be included or to be excluded? First, as per provision, you tell me, to be included or to be excluded? To be included. In the given price, it is excluded. Why? We took a view 1. What does this view 1 says? In the given price, the subsidy is reduced. In the given price, the subsidy is reduced. So which means that this 2,000 and 3,000 would have been reduced. Let X be some price. From that X price, we will reduce 2,000 and 3,000 and we would have arrived at 40,000. You understood or not? So this 2,000 is to be excluded and it is already excluded. Ignore. This 3,000 to be included. In the given price, it is excluded. So we need to add 3,000. So that's where we will get the value. So what will be taken as the value? 43,000. Like that, can you interpret this and tell me? So in the given price, subsidy is not reduced. Not reduced means what? So 40,000 itself is the price. Still subsidy is not reduced. Okay. So now tell me what we need to do. First, subsidy from CG to be included or to be excluded? To be excluded. In the given price, it is not reduced. So we need to deduct. We need to deduct 2,000. Then subsidy from NGO to be included or to be excluded? To be included. In the given price, it is not excluded, means already included. So ignore. So therefore the price will be 38,000. So why, sir, we got two answers? Because we took two different views. We took two different views. So definitely we will get two different answers. We will not get the same answer. Okay. Now, which view you need to follow? Which view you need to follow in exam? Depending upon what is given in the exam, whether the price is after considering subsidy or price is without considering the subsidy. But in the absence of information, you need to take view 1. That is what ICI did. So ICI view, in the absence of information. In the absence of information, we assume what? Price after considering subsidy. So now in this question, that 40 lakhs is assumed to be after considering subsidy, because there is no information related to subsidy, so that 40 lakhs will be after considering subsidy. Means what? Already subsidy would have been reduced. So this is subsidy from whom? Other than CGST, directly linked to the price. So therefore it is to be included, and in the given price it is excluded. So we need to add. So write there, add subsidy, how much? 2 lakhs. Add subsidy 2 lakhs. Now you do the total. How much you will be getting? Now you do the total. How much you are getting? 45,30,000. What is the rate of GST on this machinery? Now you need to determine whether it is CGST, SGST or IGST. First, where is that they are located? Uttar Pradesh. And as per the terms of the contract, should they do the installation? Yes. So the machinery can be dismantled and erected at another site, and installation and commission they need to do. So then what will be taken as the place of supply in case of assembly or installation? The location where the goods are installed. So where is it installed? You please see. So D Limited has its corporate office in New Delhi. However, the machinery has been installed at the unit located in Haryana. So what is the location of supplier? Location of supplier ABC Limited, Uttar Pradesh, and the location where it is installed is Haryana. So intrastate supply or interstate supply? Interstate supply. As per section 10 subsection 1 clause D, in case of goods assembled or installed at site, location where the goods are assembled or installed should be taken as a place of supply. This is the application. Okay. So place of supply not such as, but it will be applied here. And therefore what will be taken as the place of supply? Haryana. Location of supply Uttar Pradesh. Place of supply Haryana. Therefore it will be interstate supply, chargeable to IGST. So compute IGST at the rate of 12%. How much is the GST payable? GST payable equals to, come on, what will be the GST payable? 5,43,600. You got this? You understood? Now. So this is first part of the question. Now second part of the question. What is the date on which payment is made? 31st October. When the goods are sold? August 1st. What is the time limit within which the payment should be made? 15 days. August 1st means by August 15 the payment should be made. But when the payment is made? October. So means there is a delay. For that they will be recovering the discount offered, correct or not? And even they will be recovering with interest. So please calculate what is the interest period. So charges interest at the rate of 1% for every month or part of the month on the total amount due from the customer. So from the date of making supply till the date of payment. What is the date of making supply? August 1st. What is the date of payment? 31st October. Correct or not? Yeah. So therefore here we need to count for what? August, September, October. So 1% for each month means 3%. Okay. Write down next. Debit note. When the debit note will be issued? The date when the amount is received. What is received? Interest or late fee? Why sir we need to give on the date when it is received? In case of interest or late fee, what will be taken as the time of supply? As and when it is actually received. So when is it received? 31st October. So write there debit note on 31st October. Debit note on 31st October. In the debit note, what will be there? In the debit note, what will be there? Two amounts will be there. Discount recovered, right there. Discount recovered. How much is the discount offered? 80,000. Therefore, what will be the discount recovered? 80,000. Discount recovered equals to 80,000. And then interest charged. How much is the interest charged? Wait. 3% of what? So on what? 1%. So on what? Charges interest. Okay. On the amount due from the customer. Can you please look into the answer and tell me what is the amount due from the customer? See the invoice and tell me what is the amount due from the customer. 45 lakh. Wrong answer. 45,30,000 is the value, but out of that 2 lakhs is due from the holding company. So take out, take your calculator. 45,30,000 minus 2 lakhs. Why minus 2 lakhs? The 2 lakhs is not payable by the customer. The 2 lakhs is payable by the holding company. So take out 2 lakhs. You understand?
Yes, sir.
Then add back 80,000. That 80,000 also recoverable now.
Yes.
Add 80,000. 45,30,000 minus 2 lakhs, because the 2 lakhs is due from whom? From the holding company, not from the customer. Then add back 80,000. Why 80,000 we need to add back? Because the customer has to pay that 80,000 also. So compute that. 44 lakh, right there. 44 lakh 10,000 into how much interest? 3%. 44 lakh 10,000 into 3%. 1,32,300. Okay. So see that 80,000 and 1,32,300. You understood or not? Yes. Now, apart from this, are you collecting GST? No. This itself is inclusive of GST. Why this itself is inclusive of GST? That is the assumption we need to take. Interest, late fee, penalty, whenever we are receiving, that itself is assumed as inclusive of GST unless it is given otherwise. Generally, all amounts are exclusive of GST. If it is given as inclusive only, you take as inclusive. But this interest, late fee or penalty assumed to be inclusive of GST. Okay. What rate? What rate? What rate? What rate? 18%. Why 18%? Other services involved in the above supply, 18%. Like that 18% if you take, your entire marks are gone. You understood or not? Because interest is not a separate supply. Interest is included in the value. What is the original value? What is the value of original supply? Original supply, what is the rate? Original supply is what? Machinery, bottle cap packing machinery. This interest is included in that. Means machinery is taxable at 12%. So this interest is also taxable at 12%. Is it clear or not? So they therefore take 12%. So interest is not a separate supply. Yeah, interest is included in the value of original supply. So original supply taxable at what rate? 12%. So interest also taxable at what rate? 12%. Is it clear?
Yes, sir.
So right there 12%. 12 by 112. 12 by 112. So GST payable equals to total these two into 12 by 112. 22,746. That is the answer. Okay. So there are two important points. Number one, interest, late fee, penalty. Everything should be assumed as inclusive of GST. Number two, what should be taken as the rate of GST? The rate applicable in the invoice. What is the rate applicable in the invoice? 12%. That should be taken. Now you will get one basic doubt. In the invoice, what if multiple rates are there? Then apportion the interest between multiple values. In invoice, multiple values are there, na? Apportion this interest between multiple values and respectively you take the interest. For example, product A, product B, product C. Product A 12%, product B 18%, product C 5%. Now this interest you apportion between product A, B, C in that value ratio. Whatever is the interest pertaining to product A at that rate, product B at that rate, product C at that rate. Is it clear or not? So this is how you may get a question on valuation. Okay. So maybe a 10-mark question. This is the standard of a 10-mark question on value of supply. Okay. So this is about this, and from question number 15 we will discuss in the next class. Okay. Over. Sir? You want homework? You do know all these questions also is homework. When in the absence of information, subsidy is assumed to be inclusive of this. Now the subsidy is already deducted. So when the subsidy is already deducted,